Okay, good morning all. So in continuation with our last class, we completed majorly the entire portion of customs except for one chapter, that is exemptions under customs. So you can have a look into exemptions under customs. So page number 39. Page number 39. Can see there. So far what we have seen is that there is a taxable event, that is when there will be levy of customs duty, how to compute the customs duty, what is the rate at which we need to take, and how to determine the value. All those things we have seen. Now we are moving on to exemptions, where generally exemptions is given under each and every law by the government. Government will be empowered to grant the exemption from time to time, and these exemptions are divided into two: general exemption and special exemption. General exemption is by way of notification in the official gazette. Official gazette is like government newspaper. So in that they will be reporting whatever exemptions that they wanted to bring in. Whereas special exemption is by way of special order. Means whenever they don't want to give it by way of notification in some emergency circumstances or in some extreme situation, say for example pandemic. So during that pandemic they cannot put it in the official gazette. So for that reason they will be giving by way of order. Okay, so you can see this general exemption versus special exemption. General exemption is by way of notification in public interest, but special exemption is by way of special order in public interest. So both are public interest, but what is the difference that you can see? So general exemption is by way of notification, this is by way of special order. Whether publication official gazette is required or not required, general exemption required but special exemption not required. What is the purpose of general exemption? Generally from time to time this will be given, whereas special exemption, circumstances which are exceptional in nature. Whenever the circumstances which are exceptional in nature, then there will be special exemption. What is the effective date? General exemption will be the date of issue of or publication unless specified otherwise. It's not the date on which it is published, it is the date of issue for publication. For example, today I am issuing it for publication, but it is actually published day after tomorrow, but today date only will be taken. Okay, so date of issue for publication, not the date when it is published. Okay, so in MCQ they will play with this, be careful then. Whereas special exemption is by way of like whenever the communication is made, whenever it is communicated, that date will be taken as the effective date of special exemption. So this can be asked as a theory question as well as this can be asked as MCQ also. Next, we have certain concessions. So all these concessions are given in section 20, section 13 like that. So first section 20 talks about concession with respect to reimportation of goods. That is whenever we are re-importing the goods, already we would have imported once and again we would have sent abroad for repairs or any other reason. Again we will be re-importing. Example, you say Bentley car you have imported. When you imported this Bentley car, so you wanted to send it for some repairs. Definitely you will not give it to a local mechanic, na? Definitely will not. So Ferrari cars or Bentley cars etc. and all, you will not give it to a local mechanic for repairs. Usually these kind of cars under repairs will rarely come because they maintain that quality, but sometimes it so happens that some accident or one auto driver put a scratch and gone, or one bike person has just come and hit. You understood? It happens, na? In Chennai definitely it will happen. They will not bother whether it is a Ferrari car or it is a Alto car. For them every car is car only and they will just let that go. And now you cannot give it to a local mechanic, you need to send abroad for repairs. So you are sending the car abroad for repairs. When you own that car, you don't mind spending that much money. Okay, you are in a different class. Okay, and you are sending that car for repairs and they do the repairs and again it is imported. Now whether we need to pay customs duty again, because already at the time of import I have paid the customs duty, should I pay the customs duty again? Not required. So that is a concession that they are giving. Is it clear or not? So read this. If goods are imported into India after exportation therefrom, such goods shall be liable to duty and subject to all conditions and restrictions if any, to which goods of like kind and quality or like kind and value are liable or subject on importation thereof. It implies that goods manufactured or produced in India which are exported and thereafter re-imported or treated on par with other goods which are otherwise imported. So that's what they are telling. Every time you are importing, you need to pay the customs duty. Every time you are importing, you need to pay the customs duty, because section 12 talks about levy of customs duty. What does it say? When goods are brought into India from outside India, that is an import and you need to pay customs duty. However, we have certain concessions. Okay, so those concessions is what is given in notification. So 60 of 2018, previously one notification was there that got amended, 60 of 2018, and notification 45 of 2017. Now you don't have to read all these things, just you need to remember this chart, that is sufficient. There are two charts which you need to remember. So what is the first point that you need to remember? That is, every time we are importing the goods, we need to pay customs duty, but these goods already imported, again we are re-importing. So is there any concession that is available? Yes, available. So look into the first chart. First what we are doing, we are exporting goods which are manufactured in India, which are exported, and thereafter we are importing it. Why are we importing it? Maybe for the purpose of reprocessing, refining, remaking, repairs or reconditioning. Any purpose we might be importing it. Suppose if you are importing for reprocessing, refining or remaking, what is the time limit within which it should be imported? 1 year. Example, I am exporting a car manufactured in India. It has a manufacturing defect. When it is having a manufacturing defect, I will be bringing it to do the refining now. So what is the time limit within which it should be brought? 1 year. So from the time it is exported, it should be brought back within 1 year. For what purpose? Reprocessing, refining or remaking. Suppose if it is for repairs or reconditioning, what is the time limit within which it should be brought? Within 7 years. If it is notified goods, other than notified goods, it will be 3 years, and if you are bringing from Nepal and Bhutan, the time limit will be 10 years. Okay, and so whenever you are importing, are you required to pay customs duty or you are not required to pay customs duty? Not required to pay customs duty. So that is the advantage. You understood the benefit here? Sir, whatever goods which are manufactured in India, which is going and outside India and it is coming back. For what purpose it is coming back? Either for remaking, refining or reprocessing, or for repairs or reconditioning. If it is for remaking, refining, reprocessing, what is the time limit within which it should come back? 1 year. If it is for repair or reconditioning, what is the time limit? 7 years. For notified goods, other goods it will be 3 years, and for both notified or other goods, if it is from Nepal and Bhutan, it will be 10 years. These are all important for MCQ. Okay. Then, so when it is imported, are we required to pay any customs duty or not required to pay customs duty? Not required to pay customs duty. Thereafter, what is the time limit within which it should be re-exported after import? 6 months, plus it can be extended for a further period of 6 months. Is it clear? So means you import it. For what purpose you are importing? Repair, remaking, complete it and export it back. Time limit 6 months, and it can be extended for a further period of 6 months. Okay, and that is one chart. Another chart you see. What is happening here? First here in the previous chart we are exporting. Export, then import, re-export. You understood? First export, then import and then re-export. Whereas here first we are importing, then exporting and thereafter re-importing. Is it clear? First we are importing, then we are exporting it and thereafter we are re-importing. Why are we exporting? Exported normally we are exporting. First we are importing from one country and exporting to another country. At that time we may claim some incentive. So whenever imported goods are exported, I told you whatever customs duty we paid on import, we will get a refund. So we claimed some incentive. Now those goods are again coming back to India. So whatever refund you claimed at the time of export, that refund incentive you pay back. You understood? So first you imported a car or you imported like a mobile from one country and you are exporting it to another country. When you are importing a mobile from one country and exporting it to another country, at the time of import you would have paid customs duty. When you export you will get some refund incentive. Again, when you are re-importing, whatever incentive you got at the time of export, that much only you pay. You don't have to pay full customs duty because already you paid the full customs duty. Got it? Second, suppose you are importing, you are paying customs duty and it is exported. For what purpose it is exported? For the purpose of repairs. And again, upon re-import, you need to pay customs duty on fair value of repairs and freight and insurance both ways. That is, you are sending abroad for repairs. That car example, you remember Bentley car example, you are sending for repairs. Now there will be some fair cost of repairs plus to and fro freight and insurance will be there from here to there and there to here. That should be taken as value on which you need to pay customs duty, but you should not take full value. So if export for repairs, upon re-import, customs duty payable equals to fair cost of repairs including material and labor, freight and insurance both ways. So just these two charts you remember, that is sufficient. Then next we have section 13, section 23 subsection 2, 23 subsection 1 and 22. These are the various other exemptions. Let's try to understand what is it about. First, look into section 13. Column wise we will learn. Okay, section 13. Section 13 title is no duty on pilfered goods. What is the meaning of pilfered? Petty theft. Petty thefts. So as soon as the goods are unloaded and kept, so some people may steal those goods na, that is called as pilferage. You can see next, when applicable, goods are pilfered. Pilfered means what? Petty theft. At which stage the goods are pilfered? After unloading and before proper officer has made an order either for HC means home consumption or deposit in warehouse. Okay, already I gave home consumption or warehouse. So at which stage pa it is happening? So usually whenever the goods are imported, those goods will be unloaded and kept in the customs officer's place. And at this stage, that is custodian, I told you, one person will be having control over the goods. Who is that person? Called as custodian. So under his control the goods will be there, and thereafter when the goods are under the control of custodian, some people may steal those goods. When it is stolen, that is called as pilfered. At which stage? After unloading and before order for clearance. What order for clearance? Either for home consumption or for warehousing. At this stage, if there is any pilferage, then in that case no need to pay customs duty. Example, I am importing a box. That box contains 100 iPhones and someone has opened the box and stolen 2 iPhones. Now I need to pay customs duty on 98 iPhones or only like or on 100 iPhones? Only on 98 iPhones. Those 2 iPhones which are stolen is a petty theft. On that I don't have to pay customs duty. Then who will pay customs duty? But it is imported na. It is imported. So who will pay customs duty? Custodian will pay customs duty. Is it clear? Who is custodian? I told you, port officer or airport officer. Now what they will do, custodian? They will do see in the CCTV camera as to who has stolen, and immediately they will be getting back to that particular importer and will ask the importer like someone has stolen and we identified that, and you take those 2 iPhones. So now in this case, those 2 iPhones, are we required to pay customs duty? Yes. First it was missing so we did not pay. Now they got it and they are giving it. Are we required to pay the customs duty? Yes. Say this. So where the pilferage has happened after unloading and before proper officer has made order either for home consumption or deposit in warehouse. What is the benefit? Customs duty payable or not payable? Not payable by importer but payable by custodian. And what will happen if the goods are restored? If the goods are restored, customs duty is payable by the importer. Restored means what? Restored means it will be identified and it will be returned to the importer. And whether it is applicable in case of warehoused goods? No. So means we deposited the goods in warehouse someone has stolen. Whether we get the benefit here? No, we will not get the benefit. Means we need to pay the customs duty. Is it clear? This is what section? Section 13, called as no duty payable on pilferage. Next, look into 23 subsection 2, relinquishment of title to the goods. What is the meaning of relinquishment? Giving away the title is known as relinquishing. Leaving the title is known as relinquishment of title. Okay, generally in capital gains, income tax, we will come across this. whenever there is a accident that happens, the insurance company will pay us the compensation. When insurance company pays the compensation, there will be some damaged portion. That damaged portion we will be giving to the insurance company. So we relinquish the title. The damaged portion, for example, say there is goods on which you take a insurance and there is a fire accident. Now the damaged goods belongs to whom? Insurance company will take over the damaged goods and will pay us full amount. Now is it transfer or not a transfer? Like that one point is there. There we have, yes, relinquishment of title is a transfer. So here also we are relinquishing the title. Means what? I am importer. I imported the goods and so I saw the goods. It is not according to the specifications. What I will do? I will relinquish. Example, one more example. Generally you buy anything in Flipkart or Amazon. When you buy some things in Flipkart and Amazon, as soon as the parcel is delivered to you, so you will open and see. And when you open and see, what you ordered versus what is delivered to you is different. So what you will do? No, immediately on the spot you are opening and seeing. The person is there. The person is there, before him itself there is a open delivery. You know that in Flipkart there is a concept of open delivery. So before the person itself we can open and check, and if there is any defective you don't have to take the parcel, correct? That is called as relinquishment of title. When the goods imported are not according to the specification, you leave away the title, so because of which you don't have to make any payment. Is it clear? That is this. So relinquishment of title to the goods. When applicable, goods are not conforming to the specifications. And benefit, customs duty payable or customs duty not payable? Customs duty not payable. And see the remarks, relinquishment not possible in case of prohibited goods. Okay, with respect to prohibited goods, relinquishment is not possible. For example, you are importing cocaine, weed or some other powders, and because of which you were caught. Once you are caught, you cannot say, okay, relinquishment of title, you only take it. No, you cannot, because you are importing prohibited goods, illegal goods. There you cannot relinquish the title and escape from the punishment. Okay, so relinquishment not possible in case of prohibited goods. Whether applicable in case of warehoused goods? No, not applicable in case of warehoused goods, this section. But we have a separate section for warehoused goods, that is proviso to section 68, but that is not there in your syllabus. Okay, but this section is there in your syllabus. You need to write relinquishment is not possible with respect to warehoused goods. That alone you remember. Next, look into section 23 subsection 1. Can you turn on that AC? Then section 23 subsection 1, remission of duty. Remission of duty means what? Remission of duty means first you pay the duty. First you pay the duty. Prove that the goods are destroyed. Then you will get the refund of that duty. That is known as remission of duty. When it will be applicable? When the goods are lost or destroyed or abandoned. So title, remission of duty. So when applicable, goods lost or destroyed or abandoned at any time before the clearance for home consumption. Even if the destroyed or destruction happens in respect of warehoused goods, then also we will get this section. Yes, the destruction need not be in the port. Even warehoused goods, if it is destroyed also, we will get the benefit here. Okay, so goods lost, destroyed or abandoned at any time before clearance for home consumption. What is the benefit here? First, customs duty payable or customs duty not payable? I told you, first we need to pay the customs duty. Prove to the satisfaction of the officer that the goods are destroyed. Then we will get the refund. Is it clear? Next, in case of destruction of goods, the restoration is to the importer. Then restoration is to the importer means the destroyed goods belongs to the importer. And whether applicable in case of warehoused goods? Yes. So first two sections not applicable for warehoused goods. Next two sections is applicable for warehoused goods. Okay, so that's why I just divided like this. Next, look into section 22. Section 22 talks about abatement. Section 13 is pilferage. Section 23 subsection 2 is relinquishment of title. Section 23 subsection 1 is remission of duty. Section 22 is abatement. Abatement is in case of damage or deterioration of goods. So whenever there is a damage means what? For example, I imported a TV and that TV fell down. So because of it there is a physical damage, but will it fetch some value or it will not fetch any value? If it is not going to fetch any value, like a scrap only, then it will be called as destroyed. It will fetch some value because just there is a dent, because of which definitely it will be sold, but not at the same rate, but it will be sold at a lesser rate. Is it clear? So therefore, depending upon the value of the damaged goods, you need to pay the customs duty. That is this damage, okay, or deterioration. Deterioration means reduction in the quality. Reduction in the quality is known as deterioration, or evaporation etc. will also come under deterioration. Example, you are importing a barrel of whiskey and that barrel of whiskey contains 1000 liters, and that barrel you just kept it in the port. Sunlight will come. Because of the sunlight, what will happen? Liquor will evaporate, correct? So when liquor evaporates, so whether we will have 1000 liters, no, we have only 970 liters, 30 liters got evaporated. Whether anyone put straw and has consumed it, no, normally it got evaporated. Now we need to pay customs duty on 1000 liters or 970 liters, only on 970 liters. Why? That is what this section says. You don't have to pay customs duty on the full value. You need to pay customs duty on the value of damaged goods or value of the deteriorated goods. Okay. So damage or deterioration of goods. At which stage this damage or deterioration should have happened? At any time before or during unloading of the goods in India. So any time before unloading. So the damage can be during the transit also. During transit also the damage could be, okay. Any time before or during the unloading of goods, at any time after unloading of goods, but before examination, and warehoused goods at any time before clearance for home consumption. But a very important point is there, that accident is not due to any willful act or negligence or default of importer or exporter or his agent. So not due to negligence, they have taken proper care and caution, but the damage has happened, okay. Then next, what is the benefit in this case? Customs duty payable or customs duty not payable? Customs duty payable, but that customs duty is payable in proportion to the value of damaged goods, okay. So in proportion to the value of damaged goods, for example, you can see here, that is, we are importing some goods, value of imported goods, value of imported goods, value of imported goods is somewhere like 85 lakhs. Value of imported goods is 85 lakhs. Is it before damage or after damage? Definitely it is before damage. Before damage. And customs duty payable on above goods. Customs duty payable on above goods. The customs duty payable on above goods is 27,50,000. This is a customs duty payable on above goods. Now what is the value of goods? Value of imported goods after damage. So some damage has happened, and after damage, what is the value of imported goods? The value of these imported goods is somewhere like 63 lakhs, okay. 85 lakhs worth of goods, the value has now come down to 63 lakhs. Now you tell me, how much is the customs duty that is payable in this case? How much is the customs duty payable? What is the customs duty payable? What is the customs duty? What is the customs duty payable? We need to do proportionate calculation here. Proportionate calculation is like, say, for 85 lakhs. For 85 lakhs, how much is the customs duty that you paid? 27,50,000. Then for 63 lakhs, what is the proportionate customs duty that we need to do? Okay. For 85 lakhs, 27,50,000 is the customs duty. Then for 63 lakhs, what is the proportionate customs duty? You know now this proportionate calculation. What we need to do? 63 lakhs into 27,50,000 divided by 85 lakhs. So do the computation. 63 lakhs divided by, first you do bigger number division. First you do bigger number division, because in your calculator sometimes the space will not be there. So when you multiply 63 lakhs into 27 lakh 50,000, you will get error. Okay. So first you do the division. 63 lakhs divided by 85 lakhs into 27 lakh 50,000, that will come to how much? 20 lakh 38,235. So this is the customs duty payable. Therefore, customs duty payable on damaged goods, payable on damaged goods is 20 lakh 38,235. And what will be the abatement? Be careful, because in MCQ they will give both. Depending upon the question, you need to select the answer. If the question is about customs duty payable, this is the customs duty payable. But what is abatement? Abatement is original customs duty minus customs duty payable. That reduced amount is there na, that difference is the abatement. Okay. So abatement equals to original customs duty minus customs duty actually payable. So what is the original customs duty? What is the original customs duty? 27 lakh 50,000 minus what is the customs duty that is actually payable? So 20 lakh 38,235. So do this. 27 lakh 50,000 minus 20 lakh 38,235, that will come to 7 lakh 11,765 will be taken as the abatement. Is it clear? So customs duty payable will be 20 lakh 38,235, and the difference from original customs duty it got reduced, that will be called as abatement. Okay. So what is the formula here? What is 63 lakhs? What is 63 lakhs? Value of damaged goods, correct? Into what is 27 lakh 50,000 customs duty payable divided by 85 lakhs. What is 85 lakhs? Value of goods before damage. So you see this wording. So what we need to do? First, the customs duty payable equals to value after damage or deterioration into original customs duty divided by value before damage or deterioration. This is the formula which I have explained here. You understood? Value after damage into customs duty divided by value before damage is the customs duty payable. Please understand this. You got it? Whether it is applicable in case of warehoused goods? Yes. Even for warehoused goods it is applicable. Tell me, what are the two sections which are not applicable for warehoused goods? Section 13 and section 23 subsection 2. Section 13, that is pilferage, and section 23 subsection 2, that is relinquishment of title. Other two sections are applicable even with respect to warehoused goods. Section numbers important. Okay. Section 13 is what? Pilferage. Section 22 is what? Abatement. Okay. Section 23 subsection 1 is what? Not relinquishment, remission of duty. Section 23 subsection 2 is relinquishment of title. Why will exam they will ask in the same order? They can ask in any order, correct or not? So please remember, because in MCQ they will ask, so which of the following section is covered for relinquishment of title? So you need to select accordingly. Got it? So then you can see here as to which stage what benefit we will be getting. So see one chart above this table. Above this table there is one chart which is in page number 41. Have a look into this chart. Suppose if the goods are lost before unloading itself, the goods are lost, whether we need to pay any customs duty or not required to pay any customs duty. Not required to pay customs duty. There is one famous case by Supreme Court, Mangalore Refineries case like that. What happened? This Mangalore Refineries and Petrochemicals Limited company has imported crude oil in a ship. In one ship they are bringing in tankers crude oil, and there was heavy tides, because of which the waves are so heavy that the ship could not withstand the waves, and the tankers, that crude oil tanker, fell down in the water, because of which completely the crude oil is lost in the water itself, that is in the sea. Thereafter, so they have brought the remaining crude oil, and customs department is asking them, you need to pay customs duty on the crude oil which was lost in the sea. So, sir, already I am sitting and crying because my goods are lost. Now, on the top of that, you are coming and asking me to pay customs duty. Okay. So, is it correct? No, no. You brought it. It entered the territorial waters and it fell down. It entered the territorial waters means import is there, na? So, therefore, you pay the customs duty. Sir, but I cannot take the crude oil. No, no. First pay customs duty. First pay customs duty. And thereafter, you prove that the goods are lost. Because crude oil, once it goes into the sea, how can we can take a mug and take it? Not possible. Gone is, that's it. And therefore, you prove that the goods are destroyed. Then we will give you remission of duty. You understood? That's what department is telling. First paper, then prove that it is destroyed. How to prove that it is destroyed? Take photographs or appoint one insurance surveyor. He will check and he will tell. Thereafter, we will give you refund. But this company is asking, why should we first pay? Why should we first pay? There is no levy at all. Then they went up to Supreme Court and Supreme Court is telling the same to the department. Boss, first of all, there is no levy because the levy will come only when it is unloaded. Before unloading itself, when it is lost, why should we pay customs duty? We are not required to pay customs duty. Are you getting this? So, before unloading itself, if the goods are lost, whether we need to pay customs duty or not required to pay customs duty, not required. Read this. There is no levy under section 12 and consequently customs duty not payable as per Supreme Court decision. Suppose if the goods are unloaded, if the goods are unloaded, thereafter before order for clearance, what is order for clearance means? Either for home consumption or for warehousing. At this stage, whether all the 4 sections are applicable? Yes. Section 13, pilferage also applicable and relinquishment also applicable. Even section 23 subsection 1, remission of duty, and 22 abatement is also applicable at this stage. So, after unloading and before order for clearance, all the 4 sections are applicable. But after order for clearance and before actual clearance, means maybe you might be taking it for home consumption, they passed an order. Before taking it for home consumption also the destruction will happen, or you kept the goods in the warehouse, there also the goods might be destroyed. In that case, only 2 sections are applicable. What are the 2 sections? After order for clearance, before actual clearance, what are the 2 sections which are applicable? Only remission of duty under 23 subsection 1 and abatement of duty under section 22. Is it clear? Only these 2 sections are applicable with respect to this. So, now you can see this chart, you will understand. Say this. So, the ship is coming and the goods are lost. The goods are lost. When the goods are lost, whether any benefit we will get? No, we will not get any benefit. Why we will not get any benefit? Sir, first of all, there is no levy, correct? The goods are in the sea, are lost in the sea. So, whether we need to pay any customs duty? No, we are not at all required to pay customs duty. When there is loss of goods, we are not required to pay customs duty. So, put a cross there. Section 23 also will not be applicable. Section 23 will not be applicable. Suppose if there is a damage before unloading, whether section 22 is applicable? Yes, that's the difference between 23 and 22. Yeah, there is a damage for this product, but the product unloaded or not? Yes. There is a damage to this product, but the product is unloaded or not? Yes. But what if the product is destroyed? Can it be unloaded? No. So, when it is unloaded, there is levy. So, therefore, even if the damage happened during the transit, so during the transit also if the damage happens, we will get section 22. And during unloading also if there is any loss or damage, or during transit if there is any loss or damage, or in warehouse if there is any loss or damage, we get all the benefits. So, damage section 22 is applicable, loss or destruction section 23 is applicable. Is it clear? So, that is with respect to this sections. Then there is one more section, section 24, denaturing or mutilation of goods. Denaturing, mutilation of goods means, for example, you take some certain chemicals, for example, sulfuric acid we will see. Sulfuric acid can be used for twin purposes. It can be used in laboratories for testing, or it can be used in, this manufacturing also. Like Jailer movie you would have seen. Jailer movie, that villain will kill all the people by putting them into chemicals. You would have seen that. One barrel, one person will be kept and chemical will be released, because nothing will be there. Bone also will be burnt. That is the power of sulfuric acid. Okay. So no one can trace. Even police also cannot trace, and even police dog also cannot trace. No one will know. Completely it is burnt. Okay. So therefore sulfuric acid has two purposes. Either it can be used in laboratory, the rate will be very less, like some 10% like that. But if it is used in manufacturing, that is a higher rate of duty. But you are importing sulfuric acid for what purpose? Laboratory. Now make it unfit for human, like unfit for production. How you will make it unfit for production? You dilute it. Usually in production they use concentrated H2SO4, but in laboratories they use diluted H2SO4. So you dilute it so that it will be unfit for manufacture. So you pay the reduced duty, that is known as denaturing. Is it clear? You can see the next page, you will understand. That is, first a container full of sulfuric acid is unloaded. What is the rate of customs duty on sulfuric acid? That is concentrated sulfuric acid, 60%. Now you try to denature it. You try to denature it so that it will become diluted H2SO4. When it becomes diluted H2SO4, what is the rate at which you need to pay customs duty? Only 10%. Can you do it in the port itself? Yes, you can do it in the port itself. What is the advantage that you have? Rather than paying 60%, you are paying only 10%. That is the advantage. Is it clear? So you can see here, as per this section, the importer can request the central government to make rules for permitting to denature or mutilate the imported goods. Mutilate the imported goods means breaking it. Breaking it, and only parts will be taken. For example, second hand car, if you are importing, what is the customs duty on second hand car? 200%. On second hand cars imported, the customs duty rate is 200%. If the rate of customs duty is very less on second hand car, half of the cars in Dubai will be coming in India itself, because Dubai people will buy cars so crazily, they will easily upgrade with new cars, and all old cars and all. So if they send it to India, in India 50 to 60% of the cars will be from Dubai only. You understood? And but 200%, if you are importing a second hand car, 200, for that you can buy the new one itself. Okay, 200% sir, customs duty means 30 lakhs car, you need to pay 60 lakhs as customs duty. Who will pay that much? So you have one vintage car. This vintage car needed a part. That part is not available. So you imported a vintage car. But if you need to pay customs duty, 200% you need to pay. You don't want to pay. Now what you need? Parts only. Now that particular vintage car, second hand vintage car which you have imported, just take the parts, remaining body and all you demolish. Is it clear? Just the parts you take and the body of the car you demolish. So that for parts of the car 10% is rate, 10% is what you need to pay. Is it got it? Denaturing or mutilation. Mutilation of the imported goods. If any imported goods can be used for more than one purpose and duty is leviable on the basis of purpose of utilization, the denaturing or mutilation of such goods is useful. By denaturing, goods are made unfit for other purposes. After denaturing process, goods can be used only for one purpose, and accordingly duty can be levied. Okay. Now you can see these two examples. Just go through these two examples. Example number 1, ethyl alcohol which is not denatured attracts a higher rate of customs duty, whereas denatured ethyl alcohol attracts a lower rate of duty. Assuming undenatured ethyl alcohol is imported, certain very bitter chemicals can be added to denature the spirits as per the rules, and once they are denatured, they attract lower rate of duty. That's what I told you. Then mutilation of goods. A scrap dealer has imported second hand machine from USA in assembled condition. If the machine is treated as scrap, it attracts lower rate of customs duty, and therefore the importer can make a request for mutilation of machinery lying at port. If mutilated, the import shall be treated as import of scrap, and accordingly duty shall be payable. Is it clear? So with this we completed exemptions also, and you can see this. we have all these things, whatever I have discussed. I told you now reimportation of goods, that then next we have seen these 4 sections: pilfered goods section 13, abatement section 22, relinquishment of title 23 subsection 2, 23 subsection 1. All these things we have discussed, and you may get a question like this. Okay, this question also, example also we discussed on abatement, how we will do the computation, and you may get a question like this theory question: distinguish between pilferage under section 13, loss or destruction under 23 subsection 1, remission of duty. Tell me what are the differences that you will write, just the points of difference. Pilferage which stage? Before order for clearance, whereas remission of duty at any time before actual clearance. Pilferage is possible for warehoused goods? No. But loss or destruction, is it possible for warehoused goods? Yes. In case of pilferage, we need to pay duty or no need to pay duty? No need to pay duty. But in case of loss or destruction, pay duty, prove that there is a loss, and we will get the refund. Got it? And next, so meaning duty liability, time of occurrence, warehoused goods, burden to prove. No need to prove that there is a pilferage, but here we need to prove that there is a pilferage. So just these points you write, that is sufficient. Okay. So first you write the meaning part, then duty payable or not payable you write, then what is the time of occurrence, which stage it should have occurred, then for warehoused goods it is applicable or not, whether we need to prove pilferage or no need to prove pilferage. Just the side headings you remember, and based on that you know the concepts, you can write the answer. Okay. And always one theory question will be there in customs for 7 marks, and one practical question will be there for 7 marks. And theory question, so like that is what it is very difficult to determine. Practical question easy, yesterday we did na, out of that one practical question guaranteed, that is valuation and computation of customs duty. One question guaranteed 7 marks. And why we discussed everything else is for theory question and MCQs, because in MCQs anywhere they can ask, not necessary that they should ask from this area only. Okay. So fully we completed, even exemption from duty, classification, everything. Got it? Now, so what I have observed is that 50 marks will be your indirect tax paper. In that 50 marks, so you have like literally 7 marks and 7 marks, 14 marks in your pocket from customs. Okay. And what they do is that they will give it as part B. I think question number 8B or 7B, like that they will be giving. Okay. Now we are moving on to GST. In GST, I told you that we will be focusing on time of supply, value of supply, and place of supply. These are the 3 chapters we are going to discuss. Let me start with first one, that is time of supply. Okay. Time of supply is in turn dependent on due date of invoice, by when the invoice needs to be given, etc. and all. So it is there in your syllabus na, time of supply. Yes. So time of supply of goods, forward charge, reverse charge, all these things we have. Basic concepts of time of supply, place of supply, and value of supply. So first look into this. So first we are trying to understand the provisions related to time of supply. So first we need to know what is the due date of invoice. First we need to know what is the due date of invoice. So due date of invoice is in turn dependent on time of supply. So there are 3 aspects we need to know, or 3 objectives of time of supply. What is the purpose of time of supply and what is time of supply? Time of supply means for every transaction on one particular date, the time of supply gets attracted. On that particular date, we need to pay the GST, that is known as time of supply. So yesterday I asked you to buy the book now. If you are having a old book, yes, that you can use, and only the amendments you can make note. If you don't have any book, kindly buy this, definitely it will be useful. Okay. So if you have some old book, etc. and all, that can be sufficient, that can be used. Okay, so say this. First, the objective of time of supply we need to understand. So what is time of supply, sir? For every transaction there will be a time of supply. At that time only we need to pay GST. The liability to pay GST arises at that particular point of time. So there are three objectives of time of supply. Objective number one, to determine the due date of payment of GST. So when I pay GST depends upon the time of supply. For example, if time of supply for a transaction falls in June month, I need to pay it by 20th of July. For a transaction, if August is the time of supply, the due date of payment of GST will be 20th of September. Like that, for every month, if the time of supply falls in a month, the due date will be next month 20th. Okay, so that is the objective of time of supply. So what is the objective of time of supply? To determine the due date of payment of GST. Number two, what is the second objective of time of supply? To determine the rate of GST, because at the time when we enter into contract we will have one rate, at the time when we actually receive the money or raise invoice we will have different rate. So which rate should be taken? That is the second objective. Third objective of time of supply is to determine the exchange rate, like how in import and export we convert the foreign currency into Indian rupees for payment of GST, for payment of customs duty. Even for payment of GST also, when the transaction is denominated in foreign currency, we need to convert into Indian rupees. For that we need an exchange rate. That exchange rate prevailing on time of supply is relevant. So what are the three objectives of time of supply? Number one, to determine the due date of payment of GST. Number two, to determine the rate of GST, and to determine the exchange rate. But the time of supply for a transaction depends upon the due date of invoice. So first we need to know the due date of invoice, that is given in section 31. In this 31, so normal cases, continuous supply of goods, sale on approval or on return basis. For goods we have three different situations. This subsection you don't have to remember, because section 31 is tax invoice due date, that alone you remember. Subsection you don't focus. Okay, so normal cases, continuous supply of goods. So what is continuous supply of goods? Continuous supply of goods means there will be successive supply of goods for which the payments are settled on a periodical basis. Example, so one water can fellow will be coming and putting water cans in your home, and every time when he puts the water can he will make note in one slip, and monthly basis he will tell this many cans I have put, and he will collect. That is an example of continuous supply of goods. Milk vendor will be putting the milk packets and he will collect the money on a monthly basis. That is a continuous supply of goods. And a provision store which will be selling goods to the restaurant as and when restaurant is coming and asking, where the payment will be settled on a periodical basis like fortnightly or monthly, that is also called as continuous supply of goods. Are you understanding? So in case of continuous supply of goods, when the invoice needs to be given, that is this. Next, sale on approval or return basis. What is sale on approval or return basis? First I will hand over the goods to you. And you will use it. If you like it, you buy it. If you don't like it, you will return it. For example, this Wakefit mattress has come out with this offer. Wakefit, you know, mattress company. So bed company. So what they did is that they are telling you buy our bed. That is, you place an order, we will deliver. And if you like it, you sleep. For 30 days you sleep. You like it, you buy. Otherwise you return. Okay, nice offer, no? So 30 days we can buy new beds and we can start sleeping in that. So this is known as sale on approval or return basis. Is it clear? So now even somewhere in your area also, locality also, you might be seeing one person who sells saris and all. He will bring in one motorbike all the saris, and a lot of people over there will take those saris, and they will go. Next week when he is returning, so out of those saris, whichever the people wanted to buy, they will retain, and remaining saris they will return. Correct? Because ladies and all, they will be more specific about how that sari will look on them, because they cannot visualize how it will be. So they need to stand before the mirror and they need to see, etc. and all. On the road they cannot sit and stand and do that. So they take all the saris to their home and they will check it. If they like it, they will buy. Otherwise they will return. That is also a best example of sale on approval or return basis. So in case of sale on approval or return basis, how to determine the due date of invoice? So what are the three situations for goods? Normal cases, continuous supply of goods, sale on approval or return basis. In case of Normal cases. Normal case is balancing figure pa. That is, if it is not continuous supply of goods, if it is not sale on approval or return basis, then normal cases will be applicable. First we need to see supply involves movement of goods or supply does not involve movement of goods. Sir, what is the difference between these two, sir? Supply involves movement of goods means under a contract of supply, goods will start from one place and will go to the other place. That is known as supply involves movement of goods. For example, now in Amazon when you place an order, the seller is handing over the goods to Amazon and they take the goods and deliver it to your location. Under the contract of supply, goods are originating from one place and is traveling to another place. That is known as supply involving movement of goods. Supply does not involve movement of goods means you go to the supermarket and you buy the product and you bring it to your home, but the supply is already over. The supply is over at the seller's place. That is supply not involving movement of goods. Is it clear? So just remember, online transactions or door to door delivery transaction will come under supply involves movement of goods. Suppose if you go there and take the delivery of goods, that is supply does not involve movement of goods. If supply involves movement of goods, what will be taken as the due date of invoice? At the time of removal. For example, today you place the order, tomorrow I am dispatching and you will be receiving it after 5 days. So what will be the due date of invoice? At the time of removal, that is tomorrow. Is it clear? And suppose supply does not involve movement of goods, at the time of delivery, whenever the product is delivered, that date will be taken as the due date of invoice. That's the reason why in supermarkets, whenever they are delivering the packet or they are delivering the bag, they will be giving the invoice to you, correct or not? So say this, supply involves movement of goods at the time of removal, supply does not involve movement of goods at the time of delivery. This is normal cases. Next, in case of continuous supply of goods. So for normal cases, 2 points you need to remember. What are the 2 points pa? Supply involves movement of goods at the time of delivery. Supply does not involve supply involves movement of goods at the time of removal. Supply does not involve movement of goods at the time of delivery. Continuous supply of goods. Continuous supply of goods, we need to see whether the payments are received based on account statement or irrespective of account statement. So the payment received date or the account statement date, as the case may be. So what I will do, say 3 months I will be supplying to you and monthly you will pay some money, and thereafter after 3 months I will raise an account statement to you and will tell throughout 3 months this much you have purchased from me, already you paid me this much, remaining amount you need to pay, like that I will give you an account statement. So whatever payments are received irrespective of account statement, the payment received date. If the payments are received based on account statement, the account statement date will be taken as the due date of invoice. Then 31 subsection 7, sale on approval or return basis. In case of sale on approval or return basis, when the sale really happens, only when the buyer accepts, correct? But what if the buyer is not at all accepting within 6 months? On expiry of 6 months, it is deemed that the buyer will accept. So 6 months from the date of removal or date of acceptance by buyer, whichever is earlier. For example, today I removed the goods from my location pa, and within 6 months you accept, then the date on which you accept is the supply, I will raise invoice to you. Suppose within 6 months you are not accepting, on expiry of 6 months I need to deem that it is supply and I will raise invoice to you, and thereafter if you return it I will raise a credit note to you. For sales returns we will raise a credit note. Okay, so that is this. You understood these 3 points? This is what due date of invoice in case of goods. Then what is the due date of invoice in case of services? In case of services, we have normal cases, continuous supply of services, cessation of services. What is cessation of services? Abruptly stopping the service is known as cessation of services. Example, an actor signs a movie with the producer and for 50 days he need to act. One day 1 crore is the remuneration. So 50 days 50 crores is the remuneration. After 5 days, what happens? He will not like the movie. He will not like the director, or he will not like the heroine, or he will not like the producer, some reason here. So he will say I will quit the movie. But for 5 days he acted na. For 5 days he need to collect money. That is known as cessation of service. So abruptly stopping the service. Continuous supply of service. A service which takes more than 3 months to complete and involves periodic payment obligations is known as continuous supply of service. Example, construction is a continuous supply of service because construction takes more than 3 months to complete, correct or not? And whether it involves periodic payment obligation, yes. So You can see the meaning of continuous supply of service below. Continuous supply of service means a service which takes more than 3 months to complete and involves periodic payment obligations. And even renting is also a continuous supply of service. Usually rental agreement is for how many months? 11 months. In that 11 months, monthly you need to pay. 11 months means more than 3 months na, and involves periodic payment obligation, that is monthly you need to pay. So that is a continuous supply of service. Even your CMA intermediate coaching is also a continuous supply of service. How many of you attended coaching here? Intermediate coaching, how many of you attended? Just raise your hand. You did not attend. None of you attended intermediate coaching. Coaching you have not attended. Classes. You have not at all attended. Only 2, 3, 4. So how many months it took to complete this EMA intermediate coaching by the coaching center? Different academies you would have gone na. So how many months it took? 6 months, 8 months, like that and all. Means more than 3 months. Correct? Are you understanding what I am telling? I am speaking in English only, not German or French or some other Chinese language. I asked you, did you attend the coaching? When you attended the coaching, whether it got complete in 1 month, 2 months? No, it will take, because few days class gets cancelled and few days no one will come, you will just sit and there will be lot of people will come and they will speak something, and in the name of test also you will be writing some test, correct or not? So already all these things you would have experienced, and easily it will take more than 3 months to complete, because I remember few phases which I have seen. Okay, so already I took classes for you also. It takes more than 3 months to complete. Whether it involves installment facility? No. Which coaching center is giving installment facility, you tell me? No one is giving installment facility. Everyone will collect upfront itself, correct? Pay full, then only join, because they also know once you join after 1 month, you will know the reality and you will leave. You understood? No one will give installment facility. So tell me, is it a continuous supply of service? No. Why it is not a continuous supply of service? Even though it takes more than 3 months to complete. But whether it involves periodic payment obligations? No. That's why it is not a continuous supply of service. So both should be there. Both should be there. It should take more than 3 months to complete, and it should involve periodic payment obligation. Then only it is a continuous supply of service. Are you understanding this? Next. Now see, in normal cases what should be taken? In normal cases, banking or insurance, 45 days from the date of completion. Other cases, 30 days from the date of completion. That is the due date of invoice. Banking sector, insurance sector, 45 days from the date of completion. Other cases, 30 days from the date of completion. Then continuous supply of services. Check whether the due date of installment is ascertainable from the contract. If due date of installment is ascertainable from the contract, the due date of installment itself is the due date of invoice. For example, so say I have entered into contract with you to provide the rental, okay, of my property. Usually what I will do, 11 months contract, and every month by 5th you need to pay rent. Whether the due date is mentioned in the contract? Yes. So 5th of every month will be taken as the due date of invoice. Then next, suppose the payment is linked to completion of event. Completion of event means construction sector. In construction sector, I am a builder. I will tell you the contract price is 10 crores, and upon completion of first floor you have to pay this much, second floor you have to pay this much, upon completion of plastering, tiling work you have to pay this much, upon handover of property you have to pay this much, like that I will be telling. So the payment is connected to event. Whenever the event is completed, that date will be taken as the due date of invoice. Okay, next. Suppose if the payment is neither the due date of installment is specified nor the payment is connected to an event, so the due date of installment is not ascertainable from contract. As and when I am receiving, nothing, there is no information in the contract. So whenever I am receiving the installment, that date itself will be taken as the due date of invoice. Is it clear? These 3 points. Then cessation of service. Cessation of service means what? Abruptly stopping the service. Immediately upon cessation, with respect to proportion of amount retained, I need to give invoice. Immediately upon cessation. You understood this page? So we have due date of invoice. And what is the time of supply in case of goods and services. So in case of goods, the time of supply is given under section 12. In case of services, the time of supply is given under section 13. And you don't have to bother about the subsections and all, but just try to know the situations. So we have time of supply in case of FCM. For goods and services, we have separate provisions. So we need to remember first time of supply in case of goods under FCM. What is FCM means? Forward charge mechanism. What is RCM means? Reverse charge mechanism. In reverse charge mechanism, who will have liability to pay GST? To government, recipient. In forward charge mechanism, who will have liability to pay GST to government? Supplier. Okay. So first goods FCM, second point services FCM, third point goods RCM, then fourth point services RCM, then next this is separate provision for goods and services. But fifth one, vouchers. In case of vouchers, the time of supply is given, that is common between both goods and services. Residual cases and interest, late fee or penalty for delay in receipt of consideration. So these 7 points only I have just given here. Time of supply in case of goods under FCM. So what will be taken as time of supply in case of goods under FCM? Suppose if there is a person who is opting for composition scheme and specified actionable claims. What are considered as specified actionable claims? HC block, HC block, H for horse racing, C for casinos, B for betting, L for lottery, O for online money gaming, betting apps, then G for gambling. These are considered as specified actionable claims which are covered under supply. All other actionable claims are excluded from supply. Again I am repeating, what are specified actionable claims? HC block. H for what? H for horse racing, horse racing, horse racing, and then B for, sorry, C for casinos, C for casinos, and next B for betting, B for betting, then L for lottery, then O for online money gaming, online money gaming, and G for gambling. So these are considered as specified actionable claims. And if a person is under composition scheme or making specified actionable claims, the time of supply will be due date of invoice. Due date of invoice means by when they need to give invoice, this due date of invoice, by when they need to give invoice, or actual date of invoice. ADOI means the date on which they need to give invoice, or date of payment, whenever the payment is received, whichever is earlier. In others, for others, it is due date of invoice or actual date of invoice, whichever is earlier. So date of payment is not there here. Okay. Then time of supply in case of services under FCM. This is goods under FCM. 2 points. So composition scheme, specified actionable claim, due date of invoice or actual date of invoice or date of payment, whichever is earlier. For others, it is due date of invoice or actual date of invoice, whichever is earlier. See, basically, lot of amendments are there from last attempt to this attempt. So literally around some 50 amendments are there. So therefore, when you see this, you will feel like everything is new. So that is because of amendments. What can I do? You should ask Nirmala madam. Okay. So you cannot ask me and all. And that's the reason why I said better if you can, if you already have a new book, it is okay. Otherwise, go for the new book. Because see, 300 rupees don't see. End of the day, clearing the exam, you can earn 3 lakh rupees also. You understood? So therefore, I am not telling that you need to buy this book only. Always have the updated book for tax every time. So for other subjects, not a problem, because other subjects there won't be amendments. But in one subject there will be always amendments. Every 6 months amendments will happen. That is tax paper, DT and IDT. So that's the reason why I will tell every time to my students, ensure that you are completing whichever group where there is DT, IDT in the first attempt, so that you don't have to read it again. Because when you read it again, you will feel like you are reading something new, because lot of things will change. Accounts you will not feel like that, costing you will not feel like that, and law also rarely, 3 years, 4 years once only you will feel like that. But all other subjects are static, and DT, IDT, it will keep on changing. So We can't do anything with respect to that. Okay, fine. This is a new amendment, that is person opting for composition scheme and specified actionable claims. Due date of invoice or actual date of invoice, date of payment, whichever is earlier. For others, just due date of invoice, actual date of invoice, means date of payment is not a date. So if the invoice I am giving next month and the due date of invoice also next month, but this month I received the payment, should I pay GST or no need to pay GST? No need to pay GST. Why no need to pay GST? Because date of payment is not given here. Then time of supply in case of service under FCM. Check whether invoice is given within the due date. If invoice is given within the due date, then due date, actual date of invoice or date of payment, whichever is earlier. If invoice is not given within due date, completion date or payment date, whichever is earlier. For example, see this. Date of completion is 13th March and actual date of invoice is 12th April. So whether the invoice is given within 30 days? Yes. Invoice is given within 30 days. How? So 13th March to 12th April. So that time limit is within 30 days. So invoice is given within 30 days. As invoice is given within 30 days, we need to take actual date of invoice or date of payment, whichever is earlier. Which is earlier out of these two? 12/4. So 12/4 will be taken as time of supply and the due date will be next month 20th. Always if the time of supply falls in a particular month, the due date will be next month 20th. Now what happened? We are giving the invoice 1 day delay. So 13th March is the date of completion. Actual date of invoice is 13th April. Whether the invoice is given within 30 days or beyond 30 days, beyond 30 days. And now we need to see whether invoice given within time limit, no. So therefore date of completion or date of payment, whichever is earlier. So which is earlier? 13/3 will be taken as the time of supply. So next month 20th April will be taken as the due date of payment of GST. If you observe here, just there is 1 day delay in giving invoice, but the due date got preponed by 1 month. Okay. So these are the 2 points you need to remember. Invoice given within due date, actual date of invoice or due date of invoice, actual date of invoice or date of payment, whichever is earlier. Otherwise date of completion or date of payment, whichever is earlier. So tell me, repeat these two provisions. Come on. Goods FCM. Open your mouth. Open your mouth. Goods FCM. What will be taken? Come on. Person opting for composition scheme and specified actionable claims. What will be taken? Due date of invoice, actual date of invoice or date of payment, whichever is earlier. Suppose if it is for others, due date of invoice or actual date of invoice, whichever is earlier. Super. Suppose if it is service FCM, if invoice is given within the due date, then invoice date or payment date, whichever is earlier. If invoice not given within due date, completion date or payment date, whichever is earlier. Sir, should we remember like this? No other go. You have to remember. This is like maths formula. The provision you need to remember. And in the question, they will give the situation. You need to just apply it and arrive at the answer. Got it? Next. Look into the third point. Time of supply in case of goods under RCM. In case of RCM, we need to see from whose perspective? Recipient point of view. See the date on which recipient is receiving the goods. See the date on which recipient is receiving the goods. See the date on which recipient is making payment to supplier, or 31st day from the date of invoice by supplier, whichever is earlier will be taken. Okay, what are the 3 dates pa? Date of receipt of goods, or date on which payment is made to supplier, or 31st day from the date of invoice, whichever is earlier. Okay, suppose if it is services under RCM, service under RCM, what we need to do? See the date on which payment is made to supplier. Instead of 31st day, we will take 61st day from the date of invoice, whichever is earlier. So tell me, goods RCM first, goods FCM, goods service FCM. You remember now first 2 points. Tell me what is it? For whom? Composition scheme, specified actionable claims. What should be taken? Due date of invoice, actual date of invoice, date of payment, whichever is earlier. Others? Very good. Actual date of invoice or due date of invoice, whichever is earlier. Either services FCM, invoice given within due date. Actual date of invoice or date of payment, whichever is earlier. Invoice not given within due date. Completion or payment, whichever is okay. Now, services, yeah, goods RCM, goods RCM. Payment to supplier, 31st day from the date of invoice. Service under RCM. Date of payment to supplier, 61st day from the date of invoice, whichever is earlier. Next. Look into next one, vouchers. In case of vouchers, we need to check whether it is identifiable voucher or non-identifiable voucher. If it is identifiable voucher, what does it mean? When you redeem that voucher, you can redeem it against a particular product or a particular service, that is known as identifiable voucher. Can be redeemed against a particular product or service. Example, you will get one Domino's pizza voucher. So if you redeem that voucher, you will get one regular pizza. That is called as an identifiable voucher. Against which product or which service you can redeem will be mentioned in the voucher. That is called as identifiable. Non-identifiable voucher means, so it can be redeemed against any product or service. Example, Zudio rupees 500 voucher. Means when you have Zudio voucher, you can go to Zudio and purchase anything. You can buy garments, you can buy footwear, you can buy perfumes, correct or not? So that is called as an identifiable or non-identifiable. Non-identifiable because you can use it for purchase of any product or service. If it is identifiable voucher, today when I am the shopkeeper, I am giving you the voucher, today itself is the time of supply. So in case of identifiable voucher, date of issuance of voucher will be taken as the time of supply. Non-identifiable voucher, date of redemption of voucher. So whenever you are coming to my shop and redeeming the voucher, at that time is the time of supply. Got it? So for identifiable voucher, what is the time of supply? At the time of issuance of voucher. Non-identifiable voucher at the time of redemption. Then time of supply in residual cases. Residual cases means when you are unable to determine the time of supply as per above provision, then residual cases will be applicable, wherein we need to take whether they are required to file any periodical return or not required to file periodical return. Who is required to file periodical return? A registered person is required to file periodical return. Then the due date of filing such return will be taken as the time of supply. Suppose if periodical return is not required to be filed, means they are unregistered person. Whenever they pay GST, that date itself will be taken as the time of supply. Periodical return required to be filed, due date of return. Periodical return not required to be filed, date of payment of tax. Time of supply in case of interest, late fee or penalty for delay in receipt of consideration. So generally, we will be giving a credit period of 30 days. If you are not making payment within 30 days, what will I do? I will charge you a interest. That is called as interest on account of delay in receipt of consideration. What is the treatment of that interest? That interest will be taxable, but when it is taxable, on accrual basis or receipt basis, receipt basis. Only when you are actually receiving that you need to pay GST. Say this, as and when such amount is actually received. Then, so these are the 7 points you need to remember: goods FCM, goods RCM, a service FCM, service RCM. Then vouchers, residual cases, interest on account of delay in receipt of consideration. Next, look into these additional points. What will be considered as the meaning of date of payment? From supplier point of view, if you see, date of entry in the books or date of credit in the bank account, whichever is earlier. Whereas from recipient point of view, date of entry in the books or date of debit in the bank account, whichever is earlier. Simple. From supplier point of view, bank account gets credited. Recipient point of view, bank accounts get debited. Okay. Then GST on advances. So in where we need to pay GST on advances? Everywhere we need to pay GST on advances except in case of goods under FCM. In case of goods under FCM, only for composition scheme and specified actionable claims we have date of payment. But for others, date of payment is not there, so they will not pay GST on advances. But in all other places, they will pay GST on advances. Then up to 1000 rupees received in excess over invoice. For example, I will raise a telephone bill to you for 2300 rupees. But what you did, you made a payment of 3000 rupees. I raised the invoice for 2300 and you made a payment of 3000. Now, I have received 700 rupees extra. So for this 700 rupees, when will I give invoice? Next month I will give invoice. Again I am repeating, this month I gave you invoice for 2300 pa. You gave me money for 3000. You gave 3000 rupees. What is the excess amount you gave me? 700. For this 700, when will I give you invoice? Next month I will give invoice. But usually the time of supply will be invoice or payment, whichever is earlier. This month itself I need to pay GST on 700, correct? But if the amount, excess amount is up to 1000, is this excess amount up to 1000? Is this excess amount up to 1000? Yes. Now I have an option not to pay GST like this. Whenever I raise invoice itself, I can pay GST. Is it clear? Read it. Up to 1000 rupees received in excess beyond invoice price. Supplier has option to pay GST based on invoice issued for such excess amount. That is, as and when invoice is issued for such excess amount, GST is payable by the supplier to government. Okay. And this is applicable to whom? Service providers. Even it will be applicable for a person opting for composition scheme or HC block. For all these people it is applicable. Then look into fourth point. Suppose if goods is covered under RCM or services under FCM or service under RCM. What is the provision for goods under RCM? What is the provision for goods under RCM? Goods RCM, check and tell. Date of receipt of goods, date on which payment is made to supplier, or 31st day from the date of invoice, whichever is earlier. Any one date you don't know. Okay, any one date out of these three you don't know. Next, service under FCM. What is service under FCM? Date on which payment is made to supplier, or 61st day from the date of invoice, whichever is earlier. Say any one date you don't know. Service under RCM you told me. Service under FCM, actual date of invoice or date of payment, whichever is earlier. If invoice not given within due date, completion date or payment date, whichever is earlier. Any one date you don't know. In these three cases you don't know any one date, means time of supply cannot be determined. So when time of supply cannot be determined as per provisions, then we need to see the date of entry in the books of recipient. So recipient we will make an entry in their books now, that should be taken. Time of supply shall be date of entry in the books of recipient. If not available, then residual cases as per section 12.5 or 13.5. Okay. So first we need to see recipient. This is what in audit we call as third party confirmation. When you don't have any information from supplier records, you see from the recipient records, because for supplier it is income, he will not recognize, but for recipient it is expenditure. Every idiot will recognize their expenditure. So therefore check the recipient record, so you will know as to when they are receiving. That is the date on which supplier has received the money. Got it? Next, look into this. In case of associated enterprises, transaction between associated enterprises, there is a supplier located outside India and there is a recipient located in India. And import of services. Import of service is RCM. Usually what is the provision for import of service? RCM. Service RCM. Date on which payment is made to supplier. Here also date on which payment is made to supplier, or 61st day from the date of invoice. Usually between associated enterprises there won't be any invoice. That's the reason why date of entry in the books of recipient, whichever is earlier. Date on which payment is made to supplier, same point. Instead of 61st day we need to take date of entry in the books of recipient. Then these are the two newly added circulars that we have on time of supply, that is your amendments. So I will just show you that they have given amendments for you, which I was referring yesterday. You can see supplementary for June 25 exam. In this supplementary for June 25 exam, so these are all the various amendments that you have. Okay, so in this they have not given. Okay, so what we will do, I have not given, so can we ignore it? Safer side, I will tell you one point, you remember? Safer side, that is simple part. In case of HIM contracts, that is hybrid annuity model contract. Hybrid annuity model means I am a builder, I will lay down the road, and when I lay down the road, from government I will get money. Got it? in the case of this contract, it's a continuous supply of service. Just remember, it's a continuous supply of service, and accordingly we need to determine the time of supply. Got it? Clear or not? I am a builder by L&T. I lay down the road. I lay down the road for whom? National Highway Authority of India. When I do this, I will be receiving in installments. At a time I will receive installments I will receive. And is it a continuous supply of service? Yes. A service which takes more than 3 months to complete and involves installment means no doubt it is a continuous supply of service. Accordingly, we need to determine the time of supply. Got it? Next one. So, what is the time of supply in case of spectrum allocation? In case of spectrum allocation, that is telecom companies, I will allocate, I am government, I will allocate the telecom spectrum to the telecom companies, for which telecom companies will pay the royalty. That is also continuous supply of service. In that case, whenever the payment is due or whenever the payment is actually received, whichever is earlier should be taken as the time of supply. Okay. And about this amendment, as it is not there, you don't bother about it. Suppose in case if at all it is coming, you should be able to write. That's why I just discussed this. Next, there is one more section which I have given in CMA intermediate extra topics. You can see that section 14. Section 14, time of supply in case of change in rate, page number 1. Page number 1, time of supply in case of change in rate. You can see that. So, when this will be applicable? Whenever there is a change in rate, because at the time when we enter into contract or supply or invoice or payment, between this date there could be some change in rate. Whenever there is a change in rate, what should we do? So, date of completion of supply. So, we have to check whether it is before change in rate or after change in rate. If it is before change in rate, then we need to take invoice date or payment date, whichever is earlier. So, say this. That is, with effect from one particular date, there is a change in rate path. Say 1/10/2025, there is a change in rate. Before this date, okay, so say old rate we have, and the old rate is 12% and the new rate is say 18%, and here you provided the service. Date of completion is before change in rate. Now, number 1, invoice may be before change in rate, invoice may be before change in rate, payment may be after change in rate. Possible? Same way, invoice may be after change in rate and payment may be before change in rate. Third, both invoice and payment before change in rate. 4, both invoice and payment after change in rate. Possible na? These 4 combinations. Completion we fixed, completion is before change in rate. What should be taken as the time of supply? You tell me, based on the provision, you tell me what should be taken as time of supply. Date of invoice. The provision says invoice or payment, whichever is earlier. Which is earlier? Invoice. Here which is earlier? Payment. Here which is earlier? Invoice or payment, whichever is earlier. And in this case, section 14 will not come. Why section 14 will not come? Sorry, one second. In this case, that is, this place is correct only. In this place, section 14 is not applicable. Why section 14 is not applicable in the third situation? Because completion date, invoice date, payment date, all these 3 dates, the rate is same. This is what you need to check. So, in every question, if you are getting, you check between these 3 dates, is the rate same or not? If the rate is same, don't apply this section. This section we need to apply only when there is a change in rate. Change in rate between 3 dates. What are the 3 dates? Invoice date or completion date or payment date. Okay. Suppose if there is no change, don't apply this section. So, regular provision. What is that regular provision? 12 and 13 only will be applicable. Okay. Then, next one. Another case we will see. That is, same scenario. So here date of completion is not before change in rate, the date of completion is after change in rate. Then what will be taken as the time of supply? Here also in one case section 14 will not be applicable. Which place section 14 is not applicable? Fourth case. Why fourth case section 14 not applicable? Because completion date, invoice date, payment date, all these three dates the rate remains the same. So that's why 14 will not be applicable. Remaining three places, read the provision. What does it says? Read the provision part. What does it says? If both invoice and payment before change in rate, then we need to take whichever is earlier. Suppose if one is before, one is after, then whichever is later. Okay. Now see here, one before, one after. Correct? Which is later? Date of payment. Here one before, one after. Which is later? Invoice. Here both are before. So we need to take date of invoice or date of payment, whichever is earlier. Can you remember these 3 points? Suppose if the completion is before change in rate, what we need to do? Invoice date or payment date, whichever is earlier. Suppose if the completion is after change in rate, divide into 2. Both invoice and payment before change in rate, whichever is earlier. One before, one after, whichever is later. Got it? Now, first of all, when we will apply this section 14, I told you already, between 3 dates there is a change in rate. Which 3 dates? Completion date, invoice date or payment date. Okay. Now, so that is this point. Say this, time of supply in case of change in rate applicable only in case of services, also applicable in case of supply of goods by a person opting for composition scheme or specified actionable claims. Now, you can see one important note. What will be considered as the date of payment? Generally, what is the meaning of date of payment? Date of entry in the books of supplier or date of credit in his bank account, whichever is earlier. Correct? Date of entry in the books or date of credit in the bank account, whichever is earlier, will be taken as the date of payment. Okay. But here they have added one new point. If the payment is credited within 4 working days from the change in rate, then date of entry in the books or date of credit in the bank account, whichever is earlier. If the payment is not credited within 4 working days from the change in rate, then date of credit in the bank account. So there are 2 different points. If the payment is credited within 4 working days, not 4 days, 4 working days, from when pa? From the change in rate, then we need to take whichever is earlier. Whichever is earlier? Entry date or credit date, whichever is earlier. If the payment is not credited within 4 working days from change in rate, then in that case, date of credit in the bank account. Okay. So that is this, date of credit in the bank account. Now let's try to understand with the help of an illustration. Focus, concentrate in this illustration. On the basis of following information, determine the time of supply in GST. Commencement of providing service, completion of service, invoice issued, payment received by check and entered in the books of account, amount created in bank account, change in rate of tax. Now, you take your notebook. Take your notebook. So, I will tell you how to arrive at the answer. You write. Okay. First you need to see date of change in rate. What is the date of change in rate? Right. Date of change in rate. Date of change in rate. Check the question and tell me what is the date of change in rate. 22 October, 22nd October. Date of change in rate. Date of change in rate 22nd October. Next, I need 3 dates. Date of completion. First, I need change in rate. Then I need date of completion. Hmm. 10th October. So change in rate is 25th October, so 22nd October. Date of completion is 10th October. Date of invoice, next line. Date of invoice 20th October. Date of invoice 20th October. Date of invoice 20th October. Then date of payment. Now wait. Check whether payment is credited within 4 working days from change in rate. When the payment got credited? 25th October. When the change in rate? 22nd October, within 4 working days only, na? Na pa, 22nd pa, 23rd, 24th, 25th, 3 days only, na? You know, no? How to calculate 22nd change in rate. When the money got credited 25th October, addition you know, na? 22nd, 23rd, 24, 25, 3, 1 plus 1 plus 1, 3, okay? So 3 days. And what is the time limit within which the payment is credited? Within 4 days or beyond 4 days? 3 is less than 4, okay? So within 4 working days. So assume that all days are working days from the change in rate. So payment is credited within 4 working days. When the payment is credited within 4 working days, what we need to do? Date of entry or date of credit, whichever is earlier, right there. Date of payment equals to, date of payment equals to, what is the date of credit? 2510, right there, 2510, or what is the date of entry? Date of entry, check the question, 1510, 1510. Date of credit 2510 or date of entry 1510, whichever is earlier, that is 15th October. So we got all the dates, 4 dates we got: change in rate, completion date, payment date, invoice date. Check whether between these 4 dates is there a change in rate. No. Completion which date pa? 10th, that before change in rate, correct? Then payment which date? Just now you wrote here 15th October, 15th October, that is also before change in rate. Then next invoice, invoice which date? 20th October, that is also before change in rate, correct? All these 3 are before change in rate, means there is no change in rate between these 3 dates, correct? So whether section 14 is applicable or section 14 is not applicable, section 14 is not applicable, write down, section 14 is not applicable, section 14 is not applicable, section 14 is not applicable. Why section 14 is not applicable? As DOC, DOI and DOP before change in rate. DOC is date of completion, DOP is date of payment, DOI is date of invoice before change in rate. Then how will you determine the time of supply? This is service 13. Invoice given within due date or invoice not given within due date. Check. What is the due date of invoice? 30 days from completion. What is the date of completion? 10th October. Whether invoice is given within 30 days? Yes. So therefore we need to take invoice date or payment date whichever is earlier. Write down as per section 13. As per section 13. As per section 13. As invoice is issued within 30 days. As invoice is issued within 30 days. From change, as invoice is issued within 30 days from completion. As invoice is issued within 30 days from completion, comma, time of supply is, time of supply is, date of, time of supply is date of invoice or date of payment whichever is earlier. Date of invoice or date of payment whichever is earlier. What is the date of invoice? 20th October, or what is the payment date? 15th October, whichever is earlier. That is 15th October. You understood, pa? So see here, I gave an answer but I made you write so that you will get connected. Okay, 15th October. Now there is another part in this question. Same question, there is another part. Also, what will be your answer? If the payment is created in bank account on 2810, payment is created in bank account on 2810, assume that all days are working days from the change in rate. Now again start from the beginning. Again start from the beginning. Change in rate, date of change in rate. date of change in rate, that is 22 October. Date of change in rate, 22nd October. Date of change in rate, 22nd October. Next, date of completion, 10th October. Date of invoice, 20th October. Date of payment, check whether the payment is created within 4 working days from the change in rate. When there is a change in rate, 22/10, but the payment is created on 28/10, 23, 24, 25, 26, 27, 28, beyond 4 working days, correct? So when the payment is not credited within 4 working days, what should be taken as the date of payment? Date of credit in the bank account. Write down, date of payment equals to, date of payment equals to, what is the date of payment? Credit, 28/10, 28/10. Date of payment is date of credit in bank account, that is 28/10. Now between 3 dates, completion date, what is the completion date? Before change in rate, correct? Invoice date, before change in rate, but payment date is after change in rate. So definitely section 14 is applicable. Write down, section 14 is applicable. Section 14 is applicable. Section 14 is applicable as there is change in rate. Section 14 is applicable as there is change in rate. Between DOC, DOI and DOP. DOC, DOI and DOP. Okay. So is completion before change in rate or after change in rate? Completion is before change in rate. When completion is before change in rate, what will be taken as the time of supply? Invoice date or payment date, whichever is earlier. Write down. As DOC is before change in rate, as DOC is before change in rate, as DOC is before change in rate, comma, DOI or DOP, whichever is earlier, DOI or DOP, whichever is earlier, is time of supply, that is time of supply, that is, what is the DOI? 2010, 2010 or DOP 2810, whichever is earlier, 2010, okay, 2010. You can see that page number 2, 2010 will be taken as the answer. Is it clear? And sir, this book I have not shared the PDF. So online students, they were asking, this book you share as PDF, not possible. This is a published book. Give me, ask me, no, my wealth also I will write and give. Class I am taking freely. CMA inter extra topics I gave freely PDF. This also I will give. Why? You ask my wealth, my wife, my kids, everything you only take care, na? I will go and beg on roads. Okay. Bro, bro. Okay. Too much it is. Appa, oralavu pandra. Correcta. Idu kudunga sir. Unga wife you kuduthudunga sir. Books you ellame kuduthudunga sir. Enna pa or nyayam vendama kekkuradilla. So that's what I said. What did I tell? This book is 300 rupees. If you want to buy, you buy like that, I said. If you don't want to buy, at least you have some before book, you use it, and extra points you note like that, I said. Did I make you compel you buy? No. Correct? And sir, I am really, did I collect 1 rupee from you, sir? Anyone? No, na. So I am doing this, na. So then beyond this, 300 rupees also I don't want to spend. You give me PDF means too much. No, it is. You only tell. So is it correct or not? No, I don't know. I did not force you also. Some previous book you would have. Without book, what you have done this many days. Correct? Some book you will have. At least study material you have. You read from that. Did I tell this book only you need to buy? I never said that. Some book you buy. Or if you have study material, at least make use of that. And so without book also I need everything for free means no boss, not possible. Then say this. That's why I am even referring from your study material also, because I don't know, maybe some people may not have money also to buy. That's why I said at least study material you can see, and after completion of every chapter I am referring the study material also na. Then say this. Time of supply in case of goods we discussed, section 31. Tax invoice we discussed. Then look into this illustration pa. They have given few illustrations here, and see this illustration number 12. Determine the time of supply in the following cases. Case 1, invoice is issued on 15/4. So link is in the description. So yesterday video description or this video description also it is there. You can buy if you want. Fine. Say this. Invoice is issued on 15/4. Removal of goods for supply on 24. Goods made available on 24. Payment received on 19/4. What is the time of supply? First part. Removal of goods is given. Removal of goods is given means what? First you need to determine the due date of invoice. What is the time of supply in case of goods? Either goods are services are goods. Time of supply in case of goods. What is the provision? Is it composition scheme? No. Is it specified actionable claim? No. So two dates we need to get. What are the two dates? Due date of invoice, actual date of invoice, whichever is earlier. Correct? So what is the actual date of invoice? What is the actual date of invoice? This one already given 15/4. Correct? What is the due date of invoice? By when the invoice should have been issued? Now, supply involves movement of goods or supply does not involve movement of goods? Supply involves movement of goods. So we need to take at the time of removal. What is at the time of removal? 24. So what should be taken as the time of supply? Due date of invoice or actual date of invoice, whichever is earlier. Easy. So then all these goods made available, payment received is irrelevant. Okay. Now again, so 15/5 or 24, whichever is earlier, 24. 15/4 only date, 15/4. 15/5 only date, and here nothing is given. So means, say this. Goods, removal of goods not there. Means what? Supply does not involve movement of goods. When supply does not involve movement of goods, what will be taken as a due date of invoice? What is the date on which goods are made available to recipient? So that is 24. Again I am repeating, please try to understand. Both provisions we need to apply to arrive at the answer. First is due date of invoice, because you need to know the provision first. What is the provision? Goods under FCM. Just now we discussed na, goods under FCM. 1 second. Say this. Goods under FCM. What will be taken as the provision for goods under FCM? For other than opting for composition scheme or specified actionable claim, DDOI, that is due date of invoice, or ADOI, actual date of invoice, whichever is earlier. Actual date means date is given in the question. Only due date you need to find. For the due date of invoice, we have one provision. Normal cases. Supply involves movement of goods at the time of removal. So that's what we did here. Supply involves movement of goods we took at the time of removal as the due date of invoice. Suppose if supply does not involve movement of goods, what we will take? At the time of delivery. So what is at the time of delivery means 24. So that's what this will be taken as the due date of invoice. Understood? Then actual date of invoice already you know 15/4. Whichever is earlier is 15/4. 15/5 or 24, whichever is earlier will be 24. Then 15/4 or 24, whichever is earlier. Supply involves movement of goods, due date of invoice is 24. So whichever is earlier is 15/4. Easy. Next, look into illustration 13. Ramesh issues an invoice of rupees 54,200 for supply of goods as on 10/4/2024 and received 55,000 rupees in his bank account through NEFT on the same date, which was credited into his books of accounts on 11/4. Determine the time of supply of goods and time of supply of excess receipt. How shall your answer differ if he received 75,000 instead of 55,000. Okay. Now, first listen. He issued invoice of how much? 54,200. Okay. Is it goods or services? Goods. Goods, is it covered under composition scheme given in the question? No. Is it specified actionable claim? No. So, due date of invoice or actual date of invoice, whichever is earlier. What is the due date of invoice? Why 10/4? The actual date. Actual date of invoice is 10/4. 10/4/2024. And what is the due date of invoice? Whether supply involves movement of goods? Yes. So, say this, Ramesh issues invoice for supply of goods on 10/4 and received 55,000 in his bank account, and there is no actual date of invoice. There's due date of invoice. We don't have the information. As we don't have information, which will be taken as time of supply, the actual date of invoice itself will be taken as the time of supply. Is it clear? Next, second question. How will your answer differ if he received 75,000 instead of 55,000? First, he received 55,000 in excess. So, for that excess amount, what will be the time of supply? Whenever we raise the invoice, itself will be taken. So, Ramesh has received 800 in excess. He will adjust the excess amount against the next supply. The time of supply for such excess amount shall be the date of issuance of next invoice. Suppose if he receives 55,000, that is 75,000 instead of 55,000, means the excess is beyond 1,000, correct? So, in the alternate situation, he has received 20,800 in excess. Even in this situation, because date of payment is not at all relevant, always it will be due date of invoice or actual date of invoice, whichever is earlier. So, even in this case, the time of supply will be the date of issuance of next invoice. So, whenever the invoice is actually issued, that only will be taken, because it is not services, it is goods. In case of goods, the time of supply will be due date of invoice or actual date of invoice, whichever is earlier. Understood? Next, this is a very good question. They can ask this, question number 13. Then question number 14. Certain goods are sent by Mr. X on sale on approval or return basis to Mr. Y on 22nd April 2024. The supply gets confirmed and the invoice is issued on case 1 20th August, case 2 22nd November. Payment in each of the cases is made on 23rd November 2024. Determine the time of supply in this case. So, sale on approval. For sale on approval, what is the due date of invoice? 6 months from the date of removal or date of acceptance, whenever they accept, whichever is earlier. First case, when are they sending? 22nd April. Count 6 months from 22nd April. May, June, July, August, September, October. Correct? 22nd October. So, 22nd October, or what is the date on which he confirmed? The supply gets confirmed and invoice is issued on 20th August. So, 20th August, whichever is earlier is 20th August is the due date of invoice, correct? And what is the actual date of invoice? Actual date of invoice also 20th of August, whichever is earlier, which is same date, 20th August will be taken. Is it clear? Say this. First, we need to determine the due date of invoice, hence the time of supply will be 20th August. So, in exam when you write, first write the provision. As per section 31, the due date of invoice in case of supply and sale on approval or return basis is 6 months from the date of removal or date of acceptance, whichever is earlier. Okay. In the present case, 6 months from the date of removal is 22nd October and the date of acceptance is 20th August, whichever is earlier is 20th August, and the actual date of invoice is also 20th August. Therefore, the time of supply in case of goods is due date of invoice or actual date of invoice, whichever is earlier, which is 20th August. Is it clear? Second case, 22nd November. Now, 22nd October or 22nd November, whichever is earlier, which will be taken as the due date of invoice? 22nd of October will be taken, correct? Now, 22nd October, what is the actual date of invoice? 22nd of November, is the actual date of invoice. So which will be taken as the time of supply? 22nd of October. In the second case, it is 21st October, like that they gave. Actually, it is 22nd October. It is not 21st because we don't have 21st itself here. You understood? But nowhere we have 21st by, everywhere it is 22nd. So that's an error there. 22nd October will be taken. Understood? While 22nd, simple pa, again I am repeating, 6 months from the date of removal is 22nd October and the date of acceptance is 22nd November. Whichever is earlier will be taken as the due date of invoice, that is 22nd of October. And in case of goods, we will take actual date of invoice or due date of invoice, whichever is earlier. So which is earlier? 22nd of October will be earlier. Understood? Next, time of supply in case of goods under RCM we discussed. Look into one question related to this. Mr. Amar supplies goods liable under reverse charge to Mr. Nath. You are required to determine the time of supply considering the following details. 1/4/2024, Mr. Nath approaches Mr. Amar and places an order, and 10/4 Nath receive the goods. So this is one date. Goods RCM. Tell me what is the provision for goods under RCM? Goods under RCM already we discussed now. Date of receipt of goods, date of payment to supplier, or 31st day from the date of invoice, whichever is earlier. Now, what is the date of receipt of goods? 10/4. Mr. Amar issues an invoice, but we need 31st day from that date. What is 31st day from that date? Count. 15/4. So, April 30 days. 30 minus 15. So, we have 15 days in April, and then we need 16 days in May. So, therefore, 16th May will be taken as 31st day. So, 16th May. So, 10/4 is the date of receipt of goods. 31st day from date of invoice is 16th April, 16th May. And what is the date on which payment is made to supplier? Say this. Nath makes payment by check and accordingly records in books of accounts. Payment get debited from Nath bank account. From recipient point of view, what should be taken as the date of payment? Date of entry or date of debit in bank account, whichever is earlier. So what is the date of entry? 24. Date of debit in bank account 25/4, whichever is earlier will be 24. So like that we got 3 dates. Date on which payment is made to supplier, or date of receipt of goods, or 31st day from the date of invoice. Out of these 3 circled dates, whichever is earlier. Which is earlier? 10/4. So 10/4 will be taken as the time of supply. You understood? If you know the provision, you can apply it and you can arrive at the answer. Simply like formula, maths formula only. You remember the formula, you put it into the question, you will get the answer. If you don't know that provision, you will not be able to arrive, because you will not be able to put it into answer. Okay. Next, alternate case. So what is this? How your answer will differ if the goods were received by Nath on 34. If the goods are received by Nath on 34, then it will be 10/4 will not come. Correct. Date of receipt of goods will be 34. 24 is the date on which payment is made, and 31st day from the date of invoice is 16/5. Which is earlier? 24. So 24 is the answer. Is it clear? Next, vouchers already we discussed, residual cases, etc. Look into this illustration 16. Mr. Viswa enters into contract for supply of goods worth rupees 10 lakhs with Mr. Nath on 10th April 2024. Such goods are removed with an invoice dated 12th April 2024 on 13th April 2024 for delivery to Mr. Nath. Supply involves movement of goods. How you know supply involves movement of goods? For delivery. The terms of the contract demanded the payment against such supply to be made within 60 days, beyond which a late payment charge of 20,000 will have to be paid by Mr. Nath. Mr. Nath makes the payment of 10 lakhs along with the late payment charges on 15 July 2024. What will be the time of supply in respect of the entire amount? What will be taken as the time of supply in this case? First, with respect to 10 lakhs, what is the time of supply? Goods under FCM. Goods under FCM, see there, goods, 10 lakhs they are supplying. Goods under FCM, what is the time of supply? Due date of invoice or actual date of invoice, whichever is earlier. What is the actual date of invoice? So such goods were removed with an invoice dated 12th April. So 12th April 2024 is the actual date of invoice. What is the due date of invoice? 13th April, because supply involves movement of goods at the time of removal. So at the time of removal, that will be 13th April 2024, whichever is earlier, that is 12th April 2024 will be taken as the time of supply in respect of 10 lakhs. Got it? Next, for interest, for that interest what will be taken? 20,000. So that's what we discussed. For interest, late fee or penalty for delay in receipt of consideration, the time of supply will be as and when it is actually received. So when is it actually received? Actually received on 15th July. So 15th July will be taken as the time of supply. You need to write accordingly. In case of interest, late fee or penalty on account of delay in receipt of consideration, the time of supply shall be the date on which such payment is actually received. It is actually received on 15 July. So 15 July will be taken as time of supply. Understood? Then time of supply of services forward charge. Look into illustration 17. Illustration 17. So date of supply of service, date of issuance of invoice, date of entering payment, date of credit in bank account. Now concentrate. Whether invoice is given within 30 days or beyond 30 days. First case. From the completion, whether invoice is given within 30 days or beyond 30 days. Within 30 days. So we need to take invoice date or payment date. What is payment date? What is payment date? From supplier point of view, what should be taken as payment date? Date of entry or date of credit in bank account, whichever is earlier. So what is the date of entry? 22. Date of credit in bank account 24. Whichever is earlier will be 22. Got it? Now out of these two, whichever is earlier, which is earlier? 24. Next, whether invoice is given within 30 days. 15/4, is it within 30 days? No, beyond 30 days. 15/4, 30 days is 15/5, but the invoice is 25, means invoice given beyond 30 days. So we need to take completion date, not invoice date, completion date. And payment date, what will be the payment date? So 24, both are same. So whichever is earlier, which is earlier? 15/4. Are you understanding? Next, third case, whether invoice is given within 30 days. Yes. So invoice date. Then payment date. What is payment out of these two earlier? 17/4. Whichever is earlier? 17/4. Fourth case, 15/4. Invoice is given on 24. So invoice date or payment date. Which is payment date? Out of these two, which is earlier? 2/4. So whichever is earlier? 2/4. Then fifth case, invoice is not issued within 30 days. So therefore we need to take completion date. Completion date or payment date. What is payment date? 2/4 or 1/4? 1/4. So whichever is earlier will be 1/4. Clear? Literally this application of provision. If invoice given within due date, that is actual date of invoice or date of payment, whichever is earlier. Invoice not given within due date, completion date or payment date, whichever is earlier. Okay. Then 18, Mr. Kedar provides consultancy services to Mr. Nath worth rupees 50,000. 8/4/2024, an advance of 10,000 is received from Mr. Nath. 10/4, the consultancy services are provided. 16/5, Mr. Kedar receives balance payment of rupees 40,000 and records it in his books. What will be the time of supply, assuming Mr. Kedar issues the invoice on 15/4 and 15/5/2024. Now, first we will see it is services. In case of services, whenever we have multiple payments, accordingly we need to determine the time of supply for each payment. Okay. So, what is the invoice they have given for 50,000? In this 50,000, 10,000 advance, 40,000 will be balance amount. Okay. Now, first we will see whether the invoice is given within due date or beyond due date. First case, when the service is completed, 10/4. When the invoice is given, 15/4. Whether an invoice given within due date or beyond due date? Within due date. 30 days, 30 days. 30 days from the date of completion. 10/4 is the date of completion. Within 30 days we need to give invoice. So when the invoice is given 15/4. So invoice is given within 30 days. See this, date of invoice within 30 days, 15/4. Okay. Now what will be taken as the time of supply in case invoice is given within the 30 days? Invoice date or payment date? Just now I showed you where invoice given within due date, invoice date or payment date, whichever is earlier. So what is the invoice date here? The invoice date will be 15/4, payment date advance 8/4, whichever is earlier 8/4. Understood? Then balance amount again. So invoice date 15/4, payment date 16/5, whichever is earlier will be 15/4. Okay. $15,400 only, $16,500 they have given, it is $15,400 only. Answer is there below. For the balance amount, the time of supply will be $15,400. Okay, here it is mistake then. Okay, date of payment, correct. So time of supply will be 8/4 and time of supply will be 15/4, correct. Then we determine correct only, but we are referring in a wrong place. That is actually date of payment. Okay. So whenever you get a question like this, my advice is put it like a table. So it will be easy for you. Even presentation wise also it will be very nice. So what you need to do, first you need to take date of completion. Then we need to see due date of invoice, actual date of invoice, date of payment. Then you will know what is the time of supply. What it? First, date of completion, you tell me. What is the date of completion? Date of completion. What is the date on which service is completed? 10th April. So 10th April is the date of completion. What is the due date of invoice? What is the invoice by which it should be given? 10th April, 30 days. 30 days the invoice should be given. What is 30 days? 10th May. What is the actual date of invoice? Actual date of invoice is 15/4. 15/4 will be taken as actual date of invoice. Whether the invoice is within due date? Yes. So actual date of invoice. What is the date of payment? Here advance is there. That is 10,000 rupees advance, correct. So for 10,000 rupees advance, it is 8/4. So what will be taken as time of supply? 8/4 will be taken. Okay. Next, balance amount. What is the balance amount? 40,000. For that 40,000, what is the date on which the payment is received? 16/5. Okay. So 16/5. Now we need to take 16/5 or 15/4, whichever is earlier will be 15/4. Understood? Like this, when you present, it will become easy for you also to write and arrive at the answer. Then situation 2. What if it is 15/5? Invoice is given on 15/5. That is same. 10/4. Due date is 10/5 and actual date of invoice is what? 15/5. Actual date of invoice is 15/5. So invoice is given within 30 days or beyond 30 days? Beyond 30 days. So we need to take date of completion. Again same, 10,000, it is 8th April. 8th April or 10th April, whichever is earlier will be 8th April. For remaining 40,000, the payment is received on 16th May. So 16th May or 10th April, whichever is earlier will be 10th April. Okay. So you can see the answer. So it is time of supply will be 8th April and 10th April. Okay. Next, illustration 19. During investigation, it was found that Mr. X provided catering services of rupees 1 lakh to Mr. Y during his business convention. Okay. And the payment for these services was made in cash. Mr. X has neither issued any invoice nor recognized the payment in his books of accounts. Mr. Y recorded the payment of 1 lakh in cash in his books on 28th April. What will be the time of supply in this case? There is no information. This is residual cases, pa. When this is residual cases, what I told you, see the date of entry in the books of recipient. Who is supplier? X is supplier and Y is recipient. What is the date of entry in the books of recipient? Read the question and tell me. Y recorded the payment of 1 lakh in cash in his books on 28th April. So the 28th April will be taken. I told you one special point now. When you don't have information from supplier books, see this. When you don't have information from supplier books, time of supply cannot be determined. See the date of entry in the books of recipient. So what is the date of entry in the books of recipient? 28th April. Then next. Illustration 20. A contract for supply of professional services was entered for rupees 10 lakhs for a period of 3 months on 20th July 2024. However, on 16th August 2024, the recipient informed the supplier that he is not willing to receive any more services under the contract. Both of them mutually agree that the service provided till date can be valued at 3,50,000. What is it? Cessation of service. So when the invoice should be given? Immediately upon cessation. So the invoice for this was issued on 20th August and the payment was received on 25th August. What is the date on which cessation has happened? 16th August. So 16th August will be taken as the due date of invoice, but actual date of invoice is 20th August. So invoice is given within due date or beyond due date? Beyond due date. Yeah, due date of invoice is immediately after cessation. Immediately after cessation means 16th August will be the due date of invoice. But when the invoice is actually issued 20th August, so invoice is not issued within the due date. So we need to take date of completion or date of payment, whichever is earlier. Again I am repeating. First we need to see when the invoice to be issued. The invoice to be issued in case of cessation is immediately upon cessation. When the cessation happened? 16th August. Immediately 16th August itself invoice given or not given? Not given. 20th August only invoice is given. As invoice is not given within 16th August, which means invoice is not issued within the due date. As invoice issued not issued within the due date, we will take completion date or payment date, whichever is earlier. So what is the completion date? 16th August. That is the date on which service is completed, abruptly stopped. Okay. So 16th August or payment date. What is the payment date? 25th August. Whichever is earlier will be 16th August. Okay. Next. Time of supply in case of services. So already we know what is the time of supply in case of services. RCM. What should be taken? Date on which payment is made to supplier or 61st day from the date of invoice, whichever is earlier. Say this. Mr. Ram provides certain service to Mr. Nath, which will fall under reverse charge basis. The services are provided to Mr. Nath. Mr. Ram issues invoice to Nath. So now from here you take 61st day. What is 61st day from date of invoice? 12th April. So 30 minus 12, that is 18 days in April. And in May it will be 31 days. So 49 days minus 61, that is 12th of June. April, May, June. So 12th of June 2024. Date on which, that is 61st day from the date of invoice. What is the date on which payment is made to supplier? The payment is made by Nath to check and recorded on 10/7, but payment gets debited. I told you. So what will be considered as the date of payment from recipient point of view? Date of entry in the books or date of debit in bank account, whichever is earlier. Which is earlier? 10/7. So 12/6 or 10/7, whichever is earlier, will be 12/6. That will be taken as the time of supply. Next one, 22nd illustration. Mr. Rajendra provides certain service to Mr. Nath, which will fall under reverse charge basis. The services are provided to Mr. Nath. Mr. Rajendra issues invoice to Nath on 12/10. So 12/10 means you add 60 days from 12/10. Come on, 61st day. 61st day. What is 61st day from 12/10? So 31 minus 12, because in October there is 31 days. So 19 days in October and 30 days in November. So 49 days. 49 minus 61, that is 12th. 12th of what? So December. 12th of December 2024. 61st day. What is the date of payment? Date of payment is 10/3 or 15/3, whichever is earlier. 10/3. So 10/3/2025 or 12/12/2024, whichever is earlier is 12/12/2024. Got it? Next. Vouchers, residual cases, change in rate, all these things we discussed. Now look into this illustration for change in rate. First, rate of GST shall be 12% instead of existing rate of 18% with effect from 1/4/2024. In that case, time of supply and applicable rate of GST shall be determined as under. So what is the change in rate with effect from? Change in rate with effect from 1/4. Change in rate with effect from 1/4. Service is provided before change in rate or after change in rate. A situation 1 you see. Service is provided before change in rate or after change in rate? Before change in rate. Invoice after. Payment after. Definitely section 14 will be applicable. As service is before change in rate. What is the provision? We discussed now yaar, as service is provided before change in rate. What will be taken? Invoice date or payment date, whichever is earlier. Okay. Invoice date or payment date, whichever is earlier. So what is the invoice date or payment date, whichever is earlier? Invoice date is 3/4, payment date is 10/4, whichever is earlier is 3/4. As on 3/4, what is the rate? New rate will be applicable. Understood? Next one. So service is before change in rate or after change in rate? Before change in rate. Invoice before, payment after. Definitely 14 will be applicable. As service is before change in rate, again invoice or payment, whichever is earlier, 29/3. As on 29/3 old rate 18% is there. Then again, so service is before change in rate or after change in rate? Before. Invoice after, payment before. So 14 will be applicable. Now service is before change in rate. So we need to take invoice date or payment date, whichever is earlier. Which will be earlier? 31/3. As on 31/3 18% is the rate. Then service is before change in rate or after change in rate? After. Invoice is before, payment is after. Means between these 3 dates there is a change in rate. As service is after change in rate, check whether both invoice and payment before change in rate. No, one before, one after. So we need to take whichever is later. Later. What is later? 7/4. As on 7/4 12% is the rate. Then again 5/4 after change in rate, 29/3 before change in rate, 31/3 before change in rate. So section 14 is applicable. But as both invoice and payment is before change in rate, whichever is earlier. Which is earlier? 29/3. As on 29/3 18% is there. Then sixth one, invoice is raised on 7/4, payment is on 31/3. So 5/4 is after change in rate, 7/4 also after change in rate, payment 31/3 before change in rate. So therefore section 14 will come, and as supplies after change in rate, one before, one after, whichever is later. Which is later? 7/4. As on 7/4 what is the rate? 12%. Understood? Next, see this illustration 24. T Series Music Company, a registered dealer in India, paid an advance of 5 lakh to Mr. Vikash, a music composer, for the copyright covered under section 13(1)(a) of Copyright Act 1956 of his original musical work on 5/9/2024 through RTGS. It made the balance payment of 2,50,000 on 12/2. You are required to determine the time of supply if Mr. Vikash raised the invoice on 6/10 or 17/2. So here you need to see who will pay GST. Remember, in case of copyright services, so temporary transfer of copyright pertaining to original literary, that is novels, author, books, etc. Then musical works, dramatic works, artistic works is covered under RCM. So who will pay GST? Recipient. Recipient will be paying GST. So this is supply under RCM. Supply under RCM means the date on which payment is made to supplier, or 61st day from the date of invoice, whichever is earlier should be taken. Now accordingly, invoice is given on 6/10/17/12. So therefore 61st day you count. 61st day from 6/10. So 6/10, 61st day means October 31 minus 6, 25 days in October, and 30 days in November, 55 days, 55 minus 61. So 6th of December will be 61st day. Then again here 17 December 2024, December 31 minus 17, that is 14 days in December, January 31 days, and minus, so 61 in February 16 days. So 16th February, that is 61st day. Is it clear? What is the date on which payment is made? So if you see here, advance 2,50,000 is paid on 12/12. Okay. So sorry, advance how much? 5 lakhs. Advance 5 lakhs is made on 5/9. So for 5 lakhs advance, date of payment will be 5/9/5/9. So 5/9 or 6/12, whichever is earlier, will be 5/9. That is the time of supply. 16/2 or 5/9, whichever is earlier will be 5/9. Then for balance amount also same. 61st day no change, that is same, copy paste, okay. But the date of payment will change. Date of payment will be 12/12. So 12/12, 12/12 or 6/12, whichever is earlier. 12/12, sorry, 6/12 will be taken as time of supply. Then 12/12 or 16/2/2025, whichever is earlier, will be 12/12/2024. Got it? With this, we completed almost every question that is there in study material related to time of supply. Okay. And got the confidence? Fine. We'll take a break and we'll meet after 15 minutes and relax yourself, drink some coffee, etc., and come back, because we are going to start with place of supply. That is a very important topic, another topic. Thank you. Okay, we'll start. So see this book related to extra topics, CMA inter extra topics, see that. Place of supply we are going to discuss. So far we have completed time of supply, now we are looking into place of supply. Place of supply divided into two, place of supply in case of goods and place of supply in case of services. In case of goods, we have again two provisions. In case of domestic transactions, it is section 10, that is it is in India. If it is place of supply in case of import and export of goods, then it will be section 11. So place of supply, goods and services, it is divided, total we have 4 sections. In case of goods, it is section 10 and 11. In case of service, it is section 12 and 13. When 10 will be applicable, goods domestic transaction will be 10 and goods import or export will be section 11. Same way services, if both supplier of service and recipient of service is located in India, then it will be section 12. If any one in India and the other outside India, then it will be section 13. Okay, and now here goods related provisions and service related provisions, all these sections 10, 11, 12, 13, these 4 sections are not of CGST Act. So far whatever sections that we have read is of CGST Act. So section 7 supply or section 31 tax invoice, section 12 and 13 of goods time of supply, 13 time of supply in case of service, everything is CGST Act. But in this chapter, remember in this chapter alone, any section that we refer will be IGST Act. So don't write CGST Act in this place, write IGST Act. So section 11 of IGST Act, 10 of IGST Act, 12 and 13 of IGST Act. Now we are going to discuss place of supply in case of goods. Just this one chart is sufficient for the goods related provisions. So first you need to see place of supply in case of goods, domestic transactions. No need to remember the subclause, that is 10(1)(a), 10(1)(b), all those things you don't have to remember. Just you need to know the situation. So see the first situation, supply involves movement of goods. Already we studied in time of supply. What is the meaning of supply involves movement of goods? Under the contract of supply, goods start from one place and goes to the other place. That is supply involves movement of goods. Then number 2, bill to ship to transaction. What is bill to ship to transactions means? I will raise invoice to you, but I will deliver the goods to a third person. That is known as bill to ship to transaction. I am raising invoice to you, but I will not deliver the goods to you. I will deliver the goods to a third person. Okay, that is bill to ship to transaction. Then supply does not involve movement of goods. Supply does not involve movement of goods means, so it is like you are coming to my place, taking the goods and going to your place. That is called as supply does not involve movement of goods. Okay, already we know that. So to the 3 situations, supply involves movement of goods, bill to ship to transaction, supply does not involve movement of goods. Then goods are assembled or installed at site. Example, you are buying a generator from me, so I will bring the generator and install it in your place. Or you are buying a AC from me, I am selling the AC and I am coming to your place, my technician will come to your place and do the installation. That is known as assembly or installation at site. Then supply on board a conveyance during the journey. For example, you are going in a train and in train you are buying beverages, water bottle, food items, etc. and all. So then what should be taken as the place of supply in that case? These are the 5 situations. What are the 5 situations? Just remember the situations first. Supply involves movement of goods, bill to ship to transactions, supply does not involve movement of goods, assembly or installation at site, finally supply of goods on board during a conveyance, that is during the journey, on board a conveyance. Now first one, if supply involves movement of goods, you need to check whether we are making sale to a registered person or sale to a unregistered person. Sale to registered person is known as B2B, sale to unregistered person is known as B2C. Sale to registered person is B2B, sale to unregistered person is B2C. If it is B2B, business to business, means recipient is registered. B2C means business to consumer, means recipient is unregistered. If it is B2B, ending point will be taken as place of supply. For example, you are located in Andhra Pradesh, I am in Tamil Nadu. You place an order with me and I will transport the goods from my location in Tamil Nadu to your location in Andhra Pradesh. What will be taken as a place of supply? Ending point. Andhra Pradesh will be taken as the place of supply. Are you understanding this? Suppose if it is sale to an unregistered person, Whenever we are making sale to an unregistered person, for example, you are placing an order in Amazon, you are an unregistered person, then the goods will be delivered to your location. In that case, we need to see location of recipient in the records of the supplier. Okay. So, for example, you are located in Madurai and I am located in Maharashtra, Mumbai, Maharashtra. You are located in Madurai, Tamil Nadu. You place an order in Amazon. I will deliver the product to your place. B2B or B2C or B2C. So you are unregistered person, but your details will be available in my records or not? Yes. So location of recipient in the records of supplier. What if I don't have any information? Rarely it will happen. For example, supply does not involve movement of goods, only it will happen, but supply involves movement of goods. I need to send na. Definitely it will be available. Rare cases. If it is not available, then location of supplier will be taken. See the 3 points. B2B, ending point. B2C, location of recipient in the records of supplier, otherwise location of supplier. Then next one, supply does not involve movement of goods. You see, when supply does not involve movement of goods, you need to check again, is it B2B or B2C transaction? If it is B2B, so we need to see location of goods at the time of delivery. For example, lot of people from Andhra Pradesh will be coming to Chennai, Sarona stores, and will buy the goods and take it to their place, because this border area and all, no, this Chittoor, Tirupati, these places and all. So what they do, like for them, we will not go to Sarana stores, definitely we will not go, but they will go, because for them, this is some place where they will be getting cheaper. We know what is the kind of scam that they will be doing. So whichever MRP goods they will reduce, non-MRP goods they will increase, and that's how they will play the game with us. Okay, so we are smart, we will know. But lot of people from other states, they will not know, they will think everything available there will be cheap, that too. So this ad and all superly they will make best like that and all. So because of it, lot of people will come here and will buy this and take it to that place. Supply involves movement or does not involve movement? Does not involve movement. So they are taking it to their place na, correct. That movement is not under supply, supply is already over. What is the location of goods at the time of delivery? What is the location of goods at the time of delivery? Chennai. So at the time of delivery, what is the location of goods? Chennai. So Chennai will be taken as place of supply. One more example I will give you. Say I am having a ship, I own a ship. Where is that ship located? That ship is located somewhere in Mumbai. I am a seller of that ship. I am in Tamil Nadu. You are buyer of the ship. You are located in Kerala. Seller Tamil Nadu. Buyer Kerala. Where is the ship located? Maharashtra. What will be taken as the place of supply? Supply involves movement of goods or supply does not involve movement of goods? Supply does not involve, because the ship is there only. I just transfer the documents of title to you. Now in that case, location of goods at the time of delivery. What is the location of goods at the time of delivery? Maharashtra will be taken as the place of supply. Okay. So that is this. Supply does not involve movement of goods. B2B, that is to a registered person, location of goods will be taken. To unregistered person, location of recipient in the records of supplier, otherwise location of supplier. Is it clear? Then next one, bill to ship to transaction. In case of bill to ship to transaction, we need to see the billing address as the place of supply. That is, I am raising invoice to you, you instruct me to deliver the goods to some other person, but your address only will be taken as the place of supply. Easily remember, bill to ship to transaction, bill to ship to, B for bill to ship to, B for billing address. Billing address will be taken as the place of supply. Understood? Next, goods are assembled or installed at site. That is, you are asking me to install the refrigerator, install the generator or install the AC in your premises. So wherever I am installing, that place will be taken as my place of supply. So location of assembly or location of installation. Suppose if goods are supplied on board a conveyance, during the journey, if I am selling the goods to you, for example, so water bottles, beverage bottles, chips packets and all you will buy in train. So what will be taken as the place of supply? It is very difficult to determine the place where the supply happens. That's why the starting point of the goods, wherever we are loading the goods. For example, the train is going from Chennai to Hyderabad. Chennai to Hyderabad. What will be the starting point of the goods? In Chennai, the goods will be loaded. So Chennai will be taken as place of supply. Suppose if the train is going from Chennai to Hyderabad, somewhere in the midway. So say in Vijayawada, they have loaded the goods. What will be taken as place of supply? Vijayawada will be taken as place of supply. Are you understanding this? So location where the goods are loaded. So place where goods are taken on board, that is starting point of the goods. Clear here these 5 points? Only in 2 places we need to check B2B, B2C. What are the 2 places where we need to check B2B, B2C? Supply involves movement of goods, supply does not involve movement of goods. Okay, so come on, tell me what is this 5 points. Number 1, supply involves movement of goods. B2B, don't see book. B2B, ending point. B2C, location of recipient in the records of supplier. Otherwise, okay, then bill to ship to transaction, billing address, assembly or installation at site. Logically remember, location of installation. And next, so if it is supply of goods on board a conveyance, starting point of goods. Okay, next one, supply does not involve movement of goods. B2B, location of goods. Suppose if it is B2C, location of recipient in the records of supplier, otherwise location of superpa. Then section 11, import and export. In case of import, what will be taken as place of supply? Location of importer, not location where goods are imported, location of importer. And in case of export of goods, location outside India. Again I am repeating, sir, I am from Tamil Nadu, but I am importing to Kerala. So what will be taken as a place of supply? Location of importer or location where it is imported. Location of importer, Tamil Nadu. Even though I am importing in Kerala, what is the place of supply? Tamil Nadu. Then in case of export of goods, location outside India. Place of supply will be location outside India. So this is about place of supply points. Now whenever there is a conflict between these 2 provisions versus these 3 provisions, what should be taken as the place of supply? I will give you one situation. Say this, that is, there is a seller, okay, there is a seller who is located in Maharashtra, and there is a buyer who is located in Maharashtra, and they have a branch, and that branch is in Tamil Nadu. Okay, they have a branch in Tamil Nadu. Who? This buyer. Now what happens? Seller is selling the generator. Okay, sale of generator, but where is it installed? In the branch, installed at branch. You understood? Again I am repeating, there is a seller. Where is the seller located? Maharashtra. Where is the buyer located? Maharashtra, but branch of the buyer is in Tamil Nadu. So seller is making sale of generator, means invoice is raised to the head office which is in Maharashtra, but they install the generator in the branch office in Tamil Nadu. Understood the question? Now in this case, if you apply section, so that what is that? Installation or assembly, what will be taken as place of supply? Place of supply will be installation place. What is the installation place? That is Tamil Nadu. If you apply this point, that is supply of goods on board a conveyance. Supply of goods on board a conveyance, if you take, what will be taken as the place of, goods assembled or installed at site, what will be taken as the place of supply? Place of such assembly or installation. What is the place of such assembly or installation? Tamil Nadu. If you apply bill to ship to transactions, if you apply bill to ship to transaction, what will be taken as place of supply? Will it come under bill to ship to? Yes, they are raising invoice here, but they are delivering the goods to a different location. If you apply bill to ship to, so then what will be taken as the place of supply? The place of supply will be billing address. The place of supply will be billing address. What is the place of supply billing address? That is Maharashtra. Okay, billing address is not Tamil Nadu, billing address is Maharashtra, because they will be raising invoice to Maharashtra. Now, if you apply 10(1)B, bill to ship to transaction, so billing address will be taken as place of supply. If you apply 10(1)D, assembly or installation at site, location of installation Tamil Nadu, which will be correct? Whenever there is a conflict between 10(1)D and 10(1)E, that is assembly or installation at site and supply of goods on board a conveyance, that will be prevailing over the general provisions 10(1)A, 10(1)B, 10(1)C. That is, first three provisions we discussed na. Supply involves movement of goods, bill to ship to, supply does not involve movement of goods. Those three are general provisions. Supply of goods on board a conveyance and even assembly or installation at site will be specific provisions. So always prefer specific provision over general provision whenever there is a conflict. So this will not be applicable. So only this will be applicable. I gave that as a note below. You can see. In case of conflict between 10(1)A, 10(1)B, 10(1)C over 10(1)D or 10(1)E, then section 10(1)D or 10(1)E shall prevail. So specific provision prevails over general provisions. Now, look into this illustration. Parth of Pune, Maharashtra enters into an agreement to sell goods to Bakul of Bareilly, Uttar Pradesh. While the goods were being packed in Pune Godown of Parth, Bakul got an order from Shreyas of Shimogga, Karnataka for the said goods. Bakul agreed to supply the said goods to Shreyas and asked Parth to deliver the goods to Shreyas at Shimogga. You are required to determine the place of supply in the above situation. Now, read the question and tell me who are the three parties involved there. Parth of Maharashtra, then Bakul of Uttar Pradesh, and Shreyas of Shimogga, Karnataka. Okay. Now, who placed the order with whom? Please read the question and tell me who placed the order with whom. Parth did not place the order. Parth entered into agreement to sell. So Bakul placed the order with Parth. And what Parth did? He delivered the goods to Bakula, or he raised the invoice to Bakul. He raised invoice. Say this is invoice A. He raised the invoice to Bakul, but where the goods are delivered? Shreyas of Karnataka. You see, please check the question. So what happened? When the goods were ready to be packed, so Bakul agreed to supply the said goods to Shreyas and asked Parth to deliver the goods to Shreyas. Okay, due to that reason, goods are delivered to Shreyas of Karnataka. And now, in this case, what will be taken as the place of supply? It is bill to ship to transaction. Agreed? They are raising invoice to Bakul but delivering the goods to Shreyas. Means it's a bill to ship to transaction. In case of bill to ship to transaction, what will be taken as the place of supply? Billing address. What is the billing address? Uttar Pradesh. That will be taken as place of supply. Understood? So in case of sale between Parth Maharashtra and Bakul of Uttar Pradesh, place of supply will be bill to ship to transaction, billing address will be taken, that is Uttar Pradesh. Now, there will be another transaction between whom the other transaction will be. That transaction will be between, come on, Bakul and Shreyas, because Parth raised invoice to Bakul and thereafter goods are delivered to Shreyas, which means Bakul has to recover money now from Shreyas, correct or not? So therefore Bakul will raise invoice to Shreyas. This is invoice B. This is invoice B. For this invoice B, is it bill to ship to transaction? No, because he is not doing the shipping. Got it? He is not doing the shipping. Then what it will be? It will be coming under normal, regular provision. 10(1)A, supply involves movement of goods. When supply involves movement of goods, what will be taken as the place of supply? Ending point. What is the ending point? Ending point is Karnataka. So Karnataka will be taken as place of supply. Understood? So in bill to ship to transaction, there will be two transactions. So here place of supply will be billing address. Place of supply will be billing address, and that billing address, that is Uttar Pradesh, will be taken. Okay. So you kindly make note of this chart. Even in exam also, whenever you find it like, you need to draw the chart, you draw the chart and then do the explanation below that. Okay. So please make note of this and read the answer once again. Please go through the answer at your end, read it once. This is a very good question. There is a chance they can ask this question. Not directly, this they can connect with other points. Okay. Done? Finished? Then look into the next page. Place of supply in case of services. So far what we have discussed is place of supply in case of goods. You please see your study material. In your study material you can see place of supply in case of goods. All these situations we have covered. Okay. And import and export. Now we need to discuss place of supply in case of services, that is given in section 12 and section 13. As per section 12, when both supplier and recipient are located in India, section 12, and when either supplier or recipient in India and the other located outside India, then it will be section 13. First we need to determine the location of supplier and the location of recipient. Okay, we need to check the location of supplier and location of recipient. If both are in India, then section 12. If one in India, other outside India, then it will be section 13. But how to determine the location of supplier and the location of recipient? So if they are registered, their registered place. If they are not registered, check whether they have any business establishment or fixed establishment, that will be taken. You understood? If they are registered, their registered place pa. If they are not registered, so some fixed establishment or business establishment will be there. What if that is also not there? Then usual place of residence, wherever their house is located, that will be taken as their location. Is it clear? Next. So if supplier in India, recipient also India, definitely place of supply will be determined under section 12. Say that place of supply is also India. If everything is in India, it will become either intrastate or interstate. What is intrastate supply means? If location of supplier and place of supply is in the same state or same union territory, then it will be intrastate supply. If location of supplier and place of supply is in two different states or two different union territories or a state and a union territory, then it will be interstate supply. Example, location of supplier Tamil Nadu, place of supply also Tamil Nadu, intrastate supply. Location of supplier Tamil Nadu, place of supply Karnataka, interstate supply. Location of supplier Tamil Nadu, place of supply Pondicherry, state and a union territory, interstate. And suppose if it is location of supplier Chandigarh, union territory, place of supply Ladakh, that is also union territory, then it will be coming under inter. Okay. So between two union territories, between state and union territory, between states. So it will be inter. If it is in the same state or same union territory, supplier also Chandigarh, place of supply also Chandigarh, then it will be coming under intra. Got it? Now, so therefore if everyone is in India, either it will be intra or inter. Got it? Now next one. If supplier outside India, place of supply also outside India, then there is no GST. Supplier outside India, recipient also outside India, there is no GST. Just 3 points you need to remember. So this entire table you don't have to remember, just 3 points you need to remember. That's what I am trying to convey now. If everyone is in India pa, supplier India, recipient India, place of supply also India, either it will be intrastate or interstate. we need to determine accordingly. Suppose if everyone is outside India means supplier and place of supply, supplier and recipient, then there is no GST. In all other places it will be deemed interstate supplies. Got it? Deemed interstate means what? Which GST will be applicable? IGST. Don't check location of supplier, place of supply, always it will be IGST. Can you remember these 3 points? Okay. If supplier, recipient, place of supply in India, either intra or inter. If supplier and recipient or supplier and place of supply outside India, no GST. In all other cases it will be deemed interstate. Then look into the next page. There is some general provisions. See, 90% of the cases when you don't know the answer, you use these general provisions and write the place of supply. Got it? We will be remembering specific provisions. Sometimes if you are unable to remember the specific provision, you write this general provision, 90% probability that your answer will be correct. Okay. So first, B to B, B to C, section 12 you see. So when general provisions we will apply, in the absence of specific provisions, we will apply general provisions. We need to check B to B or B to C. If it is B to B, location of recipient. B to C, location of recipient available in the records of supplier, then also location of recipient, otherwise location of supplier. Is it clear? So what is the general provision pa? B to B means say supply of service to a registered person. Location of recipient will be taken. What if it is B to C, services to an unregistered person? Location of recipient in the records of supplier. If not, location of supplier. Okay. Then in case of 13, we don't have B to B, B to C classification. Ditto, copy paste, this copy paste. Location of recipient available in records, location of recipient. Not available in records, location of supplier. Can you remember pa? This B to C provision, copy paste is only section 13 general provision. You got it? Understood or not, yaar? Clearly it is there na pa, the same provision, copy paste is this. Okay. So what you need to remember? So one point if you remember itself, it is applicable there. So section 12 general provision is what? B to B, location of recipient. B to C, location of recipient in the records of supplier, otherwise location of supplier. In case of 13, always location of recipient in the records of supplier, otherwise location of supplier. Now we are looking into some specific provisions. Specific provision means depending upon the situation, the provision will change. Suppose service in relation to immobile property, including accommodation and accommodation in a houseboat or accommodation in a vessel, etc. Can you give me examples of service in relation to immobile property? Services in relation to immobile property. Examples. What services will come? Renting of immobile property, hotel accommodation, super, construction, works contract, correct? Real estate services, repair and maintenance to immobile property, all these are service in relation to immobile property. Now, whenever you see the question that is service in relation to immobile property, check whether it is, section 12 or section 13. Logically remember, in case of service in relation to immobile property, what will be the place of supply? Location of that property. Property related services, what is the place of supply? Location of property. However, in case of 12, we have one special point. What is that? If property is located outside India, then location of recipient will be taken as place of supply. Can you see that? So location of immobile property, boat or vessel, if it is in India, location of that property. If it is outside India, location of recipient. Okay. Suppose if it is 13, so location of such immobile property. Got it? Now, in case of 12, you go through the entire table. So we have B to B and B to C classification. What are the three places where you can find B to B, B to C classification? Where? Performance based service. In that also which service? Training and illapa. What I've asked you, where you can see B to B, B to C classification, I am asking where you can see B to B, B to C, training and performance appraisal. Thereafter, service in relation to organizing an event. Next, transportation of goods, transportation of passengers, or transportation of passenger where the point of embarkation is not known. Next, any other place. That's it. Correct? So, you easily remember this with a keyword TOT, TOT. TOT. Training and performance appraisal, it's already there. Next page. In the following services, in case of following services under section 12, B2B versus B2C classification is required. What are the three services? TOT, training and performance appraisal, and organizing an event, transportation of goods or passengers. In these three places, we need to check B2B, B2C. In all other places, we don't have to check B2B, B2C. Correct? What are the places, pa? T, training and performance appraisal. O, organizing an event. T, transportation of goods or passengers. There only we need to check B2B, B2C. In other places, not required. Understood? So, coming back to this. So, first we discussed property related services. To the extent possible, try to simplify this. Okay. Property related services. What will be taken as a place of supply? Location of property. But in case of section 12, if the property is located outside India, then location of recipient. Go to organizing an event. Go to organizing an event. Fifth point. Go to organizing an event. Logically, you tell me what will be taken as a place of supply? Where the event is? Very good. Where the event is organized. Okay. So 12 also, 13 also same point. But if it is event outside India, for 12, location of recipient. In two places we have like this. Okay. See, you cannot by heart this and go for exam. So because definitely in exam you will get confused. So that's the reason why I am telling you, through logic you try to remember property related services. Location of property will be the place of supply, both 12 and 13. But suppose if the property is located outside India, for section 12, it is location of recipient. Then next point, organizing an event, both 12 and 13, location of event, where the event is held. For 12, again this special point is there. If the event is outside India, then location of recipient. Okay, va? Then next, look into admission to an event. Look into admission to an event. Fourth point, in case of admission to an event, what will be taken as a place of supply? Logically, you tell me. Admission means what? Entry ticket, where the event is held or where the place is located. So admission to event means what? Entry to cinema hall or entry to award function, entry to theme park. All entry tickets will come under admission to an event or place. Location of the event or location of that place. Any difference between 12 and 13? No, it is same. Can you remember this easily? First, property related, then organizing an event, then we have admission to an event. Now, go to transportation. Go to transportation. In case of transportation, we need to see B2B, B2C. But already we know B2B always location of recipient. B2C only you need to remember. Correct? So, see there, three points you see in 12. 3 points you see in 12. First one, transportation of passenger. What is the place of supply? Ayya, B2B, B2C, don't bother ayya. Only B2C you see. B2C, starting point of passengers. Correct? Easy. So, transportation of passengers, starting point of passengers. Like that. Transportation of goods. Awesome. And service on board a conveyance, starting point of conveyance. Can you remember these three easily? Transportation of goods, starting point of goods. Transportation of passengers, starting point of passenger. Service on board a conveyance, starting point of conveyance. What if I don't know starting point of passenger? When I will not know starting point of passenger, if it is a season ticket, season pass is there. So when you take a season pass, anywhere to anywhere you can travel, correct? When you do that, starting point will not be known. So we need to go for general provisions. That is this. So when the starting point is not known, general provisions, correct? So when it is general provisions, we don't have to remember now because balancing figure is always general provisions. Clear pa? So remember these three. What are these three? Come on. Transportation of goods, starting point of goods. And we should know that before itself that B2B, B2C classification is applicable here. Okay. Only for transportation of goods, transportation of passengers. The three already we know. TOT, training and performance appraisal, organizing an event, transportation of goods or passengers. B2B, B2C will be applicable. B2B will be always location of recipient. Now, transportation of goods, starting point of goods, transportation of passenger, starting point of passenger, services on board a conveyance, means during journey you may receive services, then starting point of conveyance. 13 also copy paste same pa. Starting point of passenger, starting point of conveyance, starting point of goods. But that starting point of goods alone they have omitted. Now that's an amendment. It will be general provisions. Is it clear? So same thing, you see, transportation of goods are starting point of goods, transportation of passengers, starting point of passenger, service on board a conveyance, starting point of conveyance. Here also starting point of passenger, starting point of conveyance. This place alone we will be taking general provisions. Clear? Starting point of goods, general provisions. Starting point of passenger, starting point of passenger, starting point of conveyance, starting point of conveyance. So we completed all these points. Okay, next. So therefore, first you remember immovable property. Second, you remember organizing an event. Organizing an event, immediately you remember admission to an event. Thereafter, 3 points in transportation. Got it? Now we are going to discuss. So performance based service in relation to individual. Come back to the previous page. Performance based service in relation to individual. What is that? Restaurant, catering, grooming, beauty treatment, healthcare. Remember 3. Food, beauty, food and beauty. Okay. What is food? Restaurant, outdoor catering, eating joint, mess, everything. Beauty, beauty parlor, saloon, then cosmetic surgery, plastic surgery, hair transplantation, all those will come. Okay. Food, beauty, food and beauty. What will be taken as place of supply? Location where services are actually performed. Then training and performance appraisal. B2B we know already. So location where service is actually performed. So what are the services you need to remember? 3 services. 1. Food. 2. Beauty. 3. Training and performance appraisal. Got it? In these 3 cases, location of performance, wherever it is performed. Apart from that, any other service, it will be general provisions. So what are the 3 services? Come on. Food, beauty, training and performance appraisal. What will be taken as place of supply? Location of performance, wherever it is performed. But remember first point itself that B2B, B2C classification is applicable in case of training and performance appraisal, that already we know. Got it? Then section 13 you see. Section 13 also location of performance only. Correct? Here also location of performance. Here also location of performance. But suppose if physical presence of the recipient is not there, then only general provisions. Got it? Example, online transactions. So I am a fitness trainer. I am training my customers or my clients in online. Then in that case, physical presence of the recipient not required na? Correct. Online training, I am taking classes online. In that case, physical presence of the recipient not required. So therefore, I will go for general provisions in the context of 13. So when 13 will be applicable? Either one in India and the other outside India. Got it? Next, you understood now performance based service in relation to individual. Next, performance based service in relation to goods. For section 12 we don't have any provision, means general provision. For section 13, physical presence of the goods required, location where service is actually performed. Physical presence of the goods not required, location of goods. What is physical presence of the goods not required? Means online. Through online we are doing the inspection to the goods. Got it? So for example, there is a machinery outside India here. From here itself remote we will take the connection to that machine, for example computer etc., and we will check whether it is working properly or not. That is performance based service in relation to goods. But physical presence of the goods required or not required? Not required. So location of goods. If it is required, location where services are actually performed. But related to this, we have 4 exceptions. In those 4 exceptional cases, we will take location of recipient as the place of supply. You please see this chart in page number 11. Page number 11, performance based service in relation to goods. So location, both are in India, general provisions, one in India, other outside India, section 13. Physical presence of goods require location where service actually performed, physical presence not required, location of goods. And wherever this location where service is actually performed, we have 4 exceptions. In these 4 exceptional cases, place of supply will be location of recipient. What are the 4 exceptional cases? Exception number 1, carefully listen. We are importing the goods temporarily imported for carrying out repairs or any other process. And once the repairs or any other process is over, it is exported without being put to use. Okay. First we are importing a machinery to do the repairs or process. Once the repairs or process is over and it is exported without put to use, then location of recipient is place of supply. Then notified service in relation to pharmaceutical sector. I am importing some medicines, on that I am doing the research or testing, and then also location of recipient will be taken. Then repair and maintenance service in relation to aircraft which is used for business purpose. For example, Singapore Airlines which is coming to India, for which I am doing the repair services. Then repair and maintenance service in relation to ship. This is for aircraft, this is for ship, used for the business purpose. In all these 4 places, what if it is used for personal purpose? This exception will not come. So what are the 4 exceptions? Come on, tell me. Goods temporarily imported for what? Carrying out repairs or any other process and exported without put to use. Number 2, on medicines we are doing some testing. Number 3, repair and maintenance in relation to aircraft for business purpose. Repair and maintenance in relation to vessel for business purpose. We will not take location where the service is actually performed. We will take location of recipient. Okay. Then, so that is about this. So we completed immobile property, performance based service in relation to individual, performance based service in relation to goods, event related, transportation related. Now look into point number 10. Telecommunication service, internet, broadcasting, DTH. So in case of telecommunication services, easily remember, for 13 we don't have any provision. So general provision. Section 12, we need to see whether it is fixed line or mobile. If it is fixed line, location where it is installed. Example, landline, location where the landline is installed. DTH, location where the setup box is installed. And suppose if it is internet, location where the modem is installed. Suppose if it is mobile, whether it is postpaid or prepaid, we need to check. If it is postpaid, always it will be billing address. If it is prepaid, how will you do recharge? How will you do recharge? You have mobile na? How will you do recharge? Online recharge, general provision, that is location of recipient in the records of supplier. You understood? Or suppose the online recharge balance also not there, internet balance itself is not there, then you go to the shop, dealer, and you do the recharge. So location of the dealer will be taken as the place of supply. Dealer also not there. Then some people in the roadside will put one umbrella and do the recharge. Have you seen that? That location will be taken as the place of supply. Is it clear? So fixed line, location where it is installed. Postpaid mobile, billing address. Prepaid, online recharge, location of recipient and records of supplier. Through dealer, location of the dealer. Any other case, location where the payment is received. Then next one, banking services. Remember, RBI. R for renting of motor vehicles other than aircraft or vessel up to 1 month. Location of supplier will be taken as place of supply. B, banking services to account holders, then also location of supplier. I, intermediary services, then also location of supplier. What are the 3 services where location of supplier is place of supply? R, B, I. See the next page notes. I have given. In case of following service under section 13, location of supplier is treated as place of supply, RBI. R for renting of means of transport other than aircraft or vessel up to what time? Up to a period of 1 month. B for banking and other financial services to account holders. I for intermediary services. Okay. What will be taken as place of supplier? Location of supplier will be taken as place of supply. Is it clear? Next. And in these three places, section 12 general provisions. So see here, banking services general provisions, and intermediary service also general provisions, then hiring of means of transport also general provisions, and insurance you don't have to remember, both places it is location of recipient general provision. Anyhow general provision is location of recipient only, so no need to remember this. Then just remember advertisement services to government. In case of advertisement services to government, each state where the advertisement is provided will be taken as place of supply. For example, I am a newspaper, I am providing government ad in the newspaper. So each state where the newspaper is circulated will be taken as the place of supply. For section 13 we don't have any provision. For OIDR services, what is OIDR services? Online services, online information database action retrieval, example your OTT platforms, etc. So again general provisions, location of recipient, which is general provisions only. So now put a tick, what and all you need to remember. First you need to remember general provisions part. You take this page number 6 and you write down as to how you need to remember this. First you need to remember general provisions. After remembering this general provisions, okay, after remembering this general provisions, then you need to remember the second point. What is that? B2B versus B2C in section 12. What are the three places where we will do B2B, B2C? TOT. What is a TOT? Training and performance appraisal, organizing an event, transportation of goods or passengers. Always what will be taken as the place of supply? Location of recipient in case B2B. Clear? That you need to remember. So you should know what is TOT, which already we have. Then third point you need to remember. What is the third point? That is, so location of supplier. Location of supplier is place of supply under section 13. What is that? RBI. What is RBI? R for renting a motor vehicle. Which motor vehicle? Other than aircraft or vessel up to a period of 1 month. B for banking services to account holders. I for intermediary services. What will be taken as place of supply? Location of supplier is the place of supply under section 13. Is it clear? For section 12 we have any provisions in this case? No. For section 12 it is general provisions. For section 12 it is general provisions in this place. Then you need to remember number 4. So number 4, immobile property services. Immobile property and organizing an event. Immobile property and organizing an event. Okay. So what will be taken as place of supply? What will be taken as place of supply? Immobile property, location of property, correct? Whether it is under section 12 or section 13. Organizing an event, what will be taken as place of supply? Location of event, let it be under section 12 or section 13. Okay. And then in these two places under section 12, if under section 12, if property or event outside India, then what should be taken? Then location of recipient. Okay, here. Next one, you need to remember number 5, that is transportation of goods, transportation of passengers, services on board. Okay, if it is section 12, what should be taken? section 12, section 13. Here, starting point of what? Goods. Passengers, starting point of passenger. Here, starting point of conveyance. Correct? For section 13 also same, but only in the first place it will be general provisions. Okay. So after this, you need to remember provision related to telecommunication and advertisement services to government. Advertisement services to government. Apart from this, all other places, concentrate. Apart from this, all other places, you remember general provisions. Got it? Just this one page you need to remember. So first you need to remember general provisions. Then you need to remember this. Apart from this, telecommunication already we know. What is that? Fixed line, mobile, etc. and all. Got it? These are the areas you need to remember like this. So remaining and all whatever you get. Insurance, general provision. OIDR services, general provisions. Like that you write. Okay. Done? So with this we completed place of supply in case of 12 and 13 in a short form to the extent. Already I gave you summary. In that I gave you super summary also. Okay. Finished? So that is with respect to this, and look into this illustration which is in page number 12. There is a mechanical engineer who is located in Maharashtra and Speedo Motors in Australia. Mechanical engineer is importing a motor vehicle for repairs, and mechanical engineer did the repair to motor vehicle and it is exported after repairs. We discussed one point. Goods temporarily imported for carrying out repairs and exported after repairs. What will be taken as the place of supply? Exception number 1, location of recipient. What is the location of recipient? Australia. And will it become export of services? Yes. In order to become export of service, 5 conditions should be satisfied. You tell me logically where the supplier should be. For export of service, where the supplier should be? India. Where the recipient should be? Outside India. What should be the place of supply? Outside India. How the consideration should be? Convertible foreign exchange. Supplier India, recipient Australia, place of supply also Australia, consideration in foreign exchange. Definitely it will become export of services. Is it clear? Next one. Look into this illustration. Another one. RST Incorporation, a corn chips manufacturing company based in USA, intends to launch its products in India. However, the company wishes to know the tastes and sensibilities of Indians before launching its products in India. For this purpose, RST Incorporation has approached ABC Consultants, Mumbai, Maharashtra to carry out a survey in India to enable it to make changes, if any, in its products to suit Indian taste. The survey is to be solely based on the oral replies of the surveys. They will not be provided any sample by RST Incorporation to taste. ABC Consultants will be paid in convertible foreign exchange for the assignment. With reference to the provisions of GST law, determine the place of supply of the service. Also explain whether the said supply will amount to export of services. Will it become export of services? First, this is what survey. Survey means, will it come anywhere in services which we discuss specific provisions? No. So it will be general provision. As per general provision, what will be taken as a place of supply? Location of recipient. Where is recipient located? USA. So supplier in India, recipient outside India, place of supply also USA outside India. Therefore, it will become export of services, and they are receiving consideration in convertible foreign exchange. Okay. So these are the things that we have. You can see your book. Section 10, 11. Then 12, all these provisions are under 12. Lot of things they gave, I simplified. Then 13 also they gave the provisions. Okay. Then we have value of supply. Over, we completed. Whatever they have given, everything we discussed. And the next area what we have is value of supply. Got the confidence here? Place of supply, mostly the type of questions we get will be MCQs, or somewhere they may ask the questions in the descriptive etc. and all. So, but this is an untapped area. Place of supply based questions they can ask. Okay, so you should not just leave it and go. That's why. Now we are moving on to value of supply. So say this. Value of supply, you can see when it comes to value of supply, we have section 15 read with rule 27 to rule 35. So basically you have rules also related to value of supply. Okay, so you can see this section 15 meaning. So what will be taken as the value of supply? Assessable value equals to transaction value determined in terms of section 15 if the following conditions are satisfied. What are the two conditions? Price must be the sole consideration, supplier and recipient are not related. In customs also we have these two na. What if any one condition is not satisfied? If conditions are not satisfied, then the value will be as per rules. What is that rules? We will discuss. We have that. But remember that there are two conditions. Both the conditions should be satisfied. What are both the conditions? Price must be the sole consideration, supplier and recipient are not related. Now, assessable value equals to transaction value. What is transaction value? The price involved in the transaction. For example, I am taking a class for 5,000 rupees, then 5,000 rupees will be the transaction value. I am selling you this remote for 500, that 500 rupees will be the transaction value. The price involved in the transaction is known as transaction value. But what are the two conditions to be satisfied here? Supplier and recipient are not related. When they will become related? Already yesterday we discussed family scope. Family, S for sole selling agent, C for control. Two companies having common shareholder holding how much? 25% or more. One company controlling the another. How much should be the investment? Greater than 50%. They both are under the common control of a third person. Together they control a third person. That is C. Then O, officers or directors of one another's business. P, partners of a firm. E, employer and employee. So if they become related, this transaction value not applicable. We need to determine the value as per rules. Same way, price must be the sole consideration. Say I am having a TV showroom and you are bringing your old TV and you are giving it in exchange and getting the new TV, and you pay 25,000 plus your old TV in exchange. Now what should be taken as the transaction value? Can we take 25,000 as transaction value? No, because price is not the sole consideration. Apart from 25,000 you are also giving me your old TV, means price is not the sole consideration. Is it clear? Then so when price is not sole consideration, value as per rules. These are the two conditions. Look into the next one. What are the inclusions in the value of supply? So there is a supplier who is making supply of goods or service or both to the recipient, and the recipient will make the payment. That payment will be taken as the transaction value. Total 5 inclusions are there. First inclusion 15(2)(a), all taxes, duties and cess by whatever name called other than GST shall be included in the value. Got it? Means while computing GST, we need to add all taxes, duties and cess by whatever name. That's the reason why while computing IGST in customs, we added customs duty, and IGST we computed at the end, correct? So all taxes, duties, everything you add before adding GST. So GST will always be at the end. So any tax other than GST shall be included in the value. That is the first inclusion. Second inclusion, recipient is incurring the expenditure on behalf of the supplier. This I told you in customs also. So recipient is incurring the expenses. For example, I have purchased the raw material. I should make the payment, but you made the payment, which means it's indirectly consideration to me, correct? So recipient is incurring the expenditure on behalf of supplier. Such expenditure should be included in the value. You got it? What if recipient is incurring the expenditure on his own account? Will it be included in the value? No. For example, if you take, this transportation. So I need to deliver the goods in my location. Now you only should take care of transportation. So you spend the transportation cost. Will it be included in the value of the goods? No, because you are incurring the expenses on your own account. That will not be included. So recipient incurs expenditure on behalf of supplier. Such expenditure should be included in value. If recipient incurs expenditure on his own account, such expenditure shall be excluded from value. Then next one, supplier incurs the expenditure and recovers from the recipient. Then supplier is incurring expenditure, carefully listen, who is incurring expenditure? Supplier, and in turn recovers from the recipient. If the supplier is recovering money from recipient as a pure agent, then it will not be included in the value. Got it? If it is as a pure agent, what is the meaning of pure agent? On behalf of recipient, then that expenditure shall be excluded from the value. Understood or not? So what is the meaning of expenditure recovered on behalf of recipient? Means that is, see this, generally this I am a customs house agent. You are appointing me to do the clearance. I need to file bill of entry, get the goods released and hand it over to you. Customs duty who should pay? Agent should pay or importer should pay? Importer should pay, but you are asking me to pay the customs duty and recover from you. Means that expenditure of customs duty which I incur is on your behalf, correct? So will it be included in my value or not included in my value? Not included in my value. Then you are a cost accountant. You are filing a income tax return. When you are filing a income tax return, or you are doing cost audit. For doing the cost audit, you incurred some expenses and that you recover from the client. What expenses? Travel expenses, etc. So it's like a reimbursement. Will it be included in the value? Yes, because for doing the service you are spending. Understood or not? Anyhow, you only should spend for travel, you only should spend for your food, etc. When you recover that from the recipient, that is in the course of supply, it should be included. Suppose you have filed the cost audit report late because the client is not giving the information for which a late fee is payable. Who should pay late fee? Cost accountant or client? Client. But you paid the late fee and recovered from the client. Actually, it is whose liability? Client liability. Who is incurring? Supplier is incurring. So it will come under pure agent. It will not be included in the value. Are you getting this part? So whenever the expenditure is incurred by supplier as a pure agent of the recipient, that will not be included in the value. That is, such expenditure shall be excluded from value as per rule 33. Suppose if it is in the course of supply, then it will be included in the value. Such expenditure to be included in the value as per 15(2)(c). So first inclusion is what? All taxes other than GST. Second one, recipient incurring expenditure on behalf of supplier. And third one, supplier incurring the expenditure and recovered from recipient. And in this some special points. If recipient is incurring expenditure on his own account, it will not be included. If supplier is incurring expenditure on behalf of recipient, that will also not to be included. Then 15(2)(d), that is interest, late fee or penalty for delay in receipt of consideration. That is, you have to give me money on time. You did not give. So what will I do? I will charge you interest. What is the treatment of that interest? Will it be included in the value? Of course, yes. It will be included in the value because that is an additional consideration which I am getting from you. Are you getting this? Interest, late fee or penalty for delay in receipt of consideration will be included in the value. Then next one, subsidy. Subsidy divided into two. Directly linked to price, not directly linked to the price. What is the meaning of directly linked or not directly linked? When the subsidy is related to outward supply, it is directly linked to the price. Example, whenever you are buying a electric vehicle, whenever you are buying a electric vehicle and I am a dealer selling the electric vehicle, for every vehicle sold, central government will give me a subsidy of 10,000 rupees. That is directly linked to the price or not directly linked to the price? Directly linked to the price, because it is related to my outward supply. If I am selling a solar panel, when I am selling a solar panel, government will give me subsidy. So it is related to price, directly linked to the price. Suppose if I am setting up a factory in backward region, I get a subsidy. Is it related to directly related to price or not directly linked to price? Not directly linked to price, because irrespective of my outward supply I will receive for setting up a factory in backward region or for giving employment for women. So these are all general subsidies, no way connected to the outward supply. Say this: subsidy received by supplier not directly linked to the price, that is subsidy is received irrespective of outward supply, ignored, and it is not considered in value. So how it will be treated? It will be treated as donations. Is it clear? Whereas if the subsidy is directly linked to the price, means what? Subsidy is based on outward supply. Okay, now we need to check whether we are receiving it from CGRSG or from others. If it is from CGRSG, to be included or to be excluded? To be excluded. If it is from others, then it should be included in the value. Is it clear? Now let's try to understand this with the help of a question. So you need to arrive at the answer for this. You need to try the answer for this. Say this: so measures, you can write down measures ABC, measures ABC Academy, measures ABC Academy is providing CMA intermediate coaching, to BPL, below poverty line students, at rupees 12,000 per student. Okay, 12,000 per student, less only, no? Intermediate, 12,000 per student, very less, correct? Because people are looting, no, here. Then how much fees for your, just I wanted to understand, so I am asking. 40 to 60, 60 to 70, nice. Then fine. So ABC Academy is providing CMA intermediate coaching to below poverty line students at 12,000 rupees per student, as they are giving at a concessional rate. So subsidy they received subsidy from an NGO. They received subsidy from an NGO of rupees 4,000 per student, and subsidy from state government of Tamil Nadu, subsidy from a NGO of rupees 4,000 per student, and subsidy from state government of Tamil Nadu of rupees 5,000 per student. Compute value of supply. Try this. 16,000. Okay, so 12,000 plus 4,000 you have taken, means you took the assumption that the 12,000 is after excluding the subsidy, correct? Am I right? So, but there is another assumption also possible, without excluding the subsidy, means that 12,000 is inclusive of subsidy. You understood? So, there are two assumptions possible. One is, let X be the price. School fees or fees, CMA coaching fees is X, minus 5,000 minus 4,000 equals to 12,000. You understood? Some price is there. From that price, so subsidy from state government we are considering, subsidy from NGO also we are considering, means minus 5,000 minus 4,000. So the resultant fees only we are collecting from the student. You understood? So then if you take that assumption, 16,000 is correct. But if you take another assumption, that is, I am already getting 5,000 from state government, I am already getting 4,000 rupees from a NGO, means from student how much I will receive? So minus 5,000 minus 4,000 I will receive 3,000 from the student. Then in that case the answer will change. You understood or not? So which assumption to be taken depends upon the question. So now say this, there are two views which are possible. View 1 is price after considering subsidy. This is view 1. And view 2, this is price without considering subsidy. Price without considering subsidy. There are two views which are possible. View 1, price after considering subsidy. View 2, price without considering subsidy. Now, what is the meaning of price after considering subsidy? Let X be the original price. From that price we reduced the subsidy, so we got the given price. Okay. Whereas in view 2, that X itself is the given price. That X itself is the given price, means we have not reduced the subsidy. Now see the transaction value, that is price involved. What is the price involved? Here also 12,000, here also 12,000. Now what is the first one? Subsidy from NGO. As per provision, what is the treatment of subsidy from NGO? Say this. As per provision, what is the treatment of subsidy from NGO? Is it directly into the price? Yes. Is it from CG or SG or others? Others. What is the treatment? To be included in the value. To be included in the value. So as per provision, to be included. As per provision, to be included. But in the given price, what we have done? We have excluded. Correct? We have deducted. So we need to, as per provision, it is to be included. As per provision, it is to be. To be means what we should do. What we should do is to be included. What happened in the given price? We have reduced. Correct? The price is after considering subsidy, means we have reduced. So therefore, we need to add. We need to add. How much is the subsidy from NGO? 4,000. Then next, subsidy from state government. Subsidy from state government. As per provision, what is the treatment? Subsidy from state government. To be included or to be excluded? To be excluded. To be excluded. As per provision, it is to be excluded. But what happened in the given price? Already excluded. So therefore, you need to ignore. Don't do anything. Why you don't have to do anything? Yeah, it is to be excluded, but it is already excluded. So therefore, what should be taken as the value? Value of supply will be 12,000 plus 4,000 will be 16,000. Then suppose if you take price without considering subsidy, means that itself is given price, we have not yet deducted the subsidy. Subsidy from NGO, as per provision, it is to be included, and here in the given price it is already included, so you don't have to do anything. Then subsidy from state government, to be included or to be excluded? To be excluded, but in the given price we have not yet excluded, so we need to deduct. How much we need to deduct? 5,000. So therefore 7,000 will be taken. Understood, sir? Any other way, sir? I'll tell you, serious. Easily you can do. First case, how much we got from student? Student, NGO, state government. From student, how much we are collecting? From NGO, how much we are collecting? From state government, how much we are collecting? So take this and this, don't take this. So therefore the answer is 16,000. Correct? Easy. From student we got 12,000 pa. From NGO we got 4,000. From state government we got 5,000. Whatever we receive from state government should not be treated, not included. But whatever we receive from NGO should be included in the value. Student normal transaction value. So 16,000. Suppose if you take this assumption, how much we receive from student? 3,000. 12,000 is total fees. 12,000 is total fees. So anyhow from NGO we are going to receive 4,000. From state government we are going to receive 5,000. Means balance amount we will receive from the student. So student fees you take, NGO you take, state government you don't take. What is the total? 7,000. Easy. This is alternative way. Whichever you feel, okay, alternative way. So either you can follow the above model or you can follow this model, but you will get the same answer. Okay. Sir, in this view 1, view 2, which view I need to follow for exam? Don't worry, it will be given in the question. If they are not giving, you follow this view only, view 1 only. View 1 only you need to follow by writing the assumption. Okay. Clear? So these are the 5 inclusions. What are the 5 inclusions? Come on, tell me. 15 to A. First one, taxes other than GST should be included in the value. 2B, recipient incurring expenditure on behalf of supplier, that should be included in value. Then supplier incurring expenditure and recovered from the recipient. Next one, interest, late fee or penalty for delay in receipt of consideration. Then subsidy, subsidy from whom? Other than central government or state government. Direct link to the price or not direct link to the price? Directly linked to the price. Okay. So that is about these inclusions. So that's what I gave in the next page. If the question is silent, consider the given price as after reducing the subsidy amount given in the question. That is original price minus subsidy equals to given price. Then next one, whether incentive paid by Ministry of Electronics and Information Technology to acquiring bank under incentive scheme of RuPay debit card and low value beam UPI transactions will be included. Basically this is one amendment. So generally incentive will be received for acquiring banks which is facilitating UPI transactions. Example, when you go to a vendor and when you ask the vendor, sir, I will make payment through card, he will not encourage you to make the payment by card. He will say you do GPay or you pay by cash, but no card payment. Why no card payment? Whenever you make card payment, there is a processing fees and therefore 1%, 2% they will not receive. But in case of UPI transaction, they will receive full amount. That's why they encourage UPI transaction. But what happens here is that, so there is a acquiring bank, UPI also there is a bank which is doing this. So that bank will not charge any money to the vendor because they will be getting incentive from government. That incentive what they receive will be treated as subsidy from central government and state government. So it will not be treated as consideration and not included in the value, consequently GST not payable. Say this, usually such incentive is provided if the amount in a transaction is up to 2,000. It is considered in the nature of subsidy by central government and not included in the value, consequently GST payable or not payable? Not payable. Now this acquiring bank in turn shares it with other people in the ecosystem like Paytm, Pine Labs, etc. So Paytm voice box is there na, once you scan the message will come. So these people are also involved in the UPI system. So they receive money is also covered under subsidy. not treated as consideration and it will be exempted. So sharing of incentive by acquiring bank with various stakeholders in digital payment ecosystem like Paytm, Pine Labs, merchant onboarding agencies as approved by NPCI is also considered as subsidy and not included in the value. Got it? Next, look into this point. So I told you supplier incurs the expenses and recover from the recipient, correct? Now for that I have given little bit detail. Expenses incurred by supplier and recovered from recipient. We need to check whether it is as a pure agent or in the course of supply. If it is as a pure agent, that will be excluded. If it is in the course of supply, check whether it is incidental expenses or other expenses. What is the meaning of incidental expenses? Without incurring that expenses, the supply cannot be made. That is called as incidental expenses. Other expenses means even without incurring that expenses, the supply can be made, but this will just add value to the product or service. Example, you go to a restaurant and you will be asking for dosa. They will give only dosa or they will give chutney and sambar also. They give chutney and sambar. The chutney and sambar expenditure is incidental expenditure. Without chutney and sambar, dosa is not complete. Okay. Suppose if you ask for medu vada or vadakari etc., will it be coming under incidental or other expenses? Other expenses. Even without that, the product is complete or the service is complete, but that will just add value to the product. Is it clear or not? Next, when you are buying a two-wheeler, so there will be this horn you need to pay. So two-wheeler will not come with the, not horn here, this buzzer, side left indicator, right indicator, sound will be there na, that will not come, you need to pay for it. And mat, you need to pay for it. And seat cover, you need to pay for it. You understood? These are all incidental others. Others, will it be including like others, but it will just add value to the product. Am I right? What about tire? Incidental, sir. Tire is incidental. How it will be other? Without tire, how the product will come? So tire is incidental expenses. These are all coming under other expenses. So incidental expenses essential to make supply of goods or services. Other expenses not essential but adds value to supply of goods or services. If it is essential, will it be included in the value? Yes. When it should be incurred? Any time, before or at the time of delivery or after delivery. Whatever the case may be, it is to be included. Example, packing charges. Is packing charges incidental? Yes. Yes. Suppose for example, you are going and asking for coffee or tea parcel. What they will do? Show me your hand. I will pour the coffee in your hand and take. Will they say like that, or they will pack and give? That is incidental. So which is before or at the time of delivery or after delivery? Before at the time of delivery, therefore it will be included in the value. And installation expenses, you buy an AC, they will come and do the installation at your place. Is it before at the time of delivery or after delivery? After delivery, but it is incidental. Why? Without installation AC will not work, so it will be included in the value. Understood pa? And if it is other expenses before at the time of delivery, definitely to be included. Example, you are placing an order in Zepto or this Blinkit or Swiggy, Zomato etc. There is a delivery charge. Is the delivery charge incidental or other? Other. Why other? Even without delivery charge, the product is ready, correct or not? And if you suppose, if you are a customer who purchase more than 500 and all, usually delivery charge will be waived, correct? So which means delivery charge is not incidental, it is others. And is it before at the time of delivery or after delivery? Before at the time of delivery. For delivery only they are collecting it, so it should be included in the value. Transportation charges. Then customization charges. For example, you purchased a two-wheeler, and two-wheeler, say some Royal Enfield or some big two-wheeler you wanted to buy. You went to the showroom and you saw the two-wheeler, it was so nice and you wanted to buy it, and you did not like the color. You asked them, is there any color options available? They gave a brochure, full colors are there. Whichever color you want, you can choose like that. So they said copper color you wanted to buy. So you placed an order for copper color, and copper color means you are under the impression that it will be dark brown like that, okay? And On the day when you take the delivery, you came to know it is not dark brown, it is light brown, which is like orange color. So wherein BJP party color it was, and your father is a DMK supporter, you understood. And if you take that vehicle to your home, what will happen? I don't know. What is your situation? Got it? So that's why you will ask that person, Ayya, please change the color. This color I don't want. So now they will collect some 10,000 rupees to modify the color. So this will be coming under after delivery or before delivery or after delivery. Incidental or other? Other. So it will not be included in the value. That's an independent transaction. Is it clear? That is this customization charges. After delivery of goods or supply of services, that is to be excluded. Then look into the next one, exclusion from the value of supply. What is excluded from the value of supply? Discount is excluded from the value of supply. Discount is divided into three. Pre-supply discount. Pre-supply discount means what? Discount given before supply. Example, trade discount, then quantity discount, volume discount, etc. and all. Like when you go and buy anything, you will do bargain, na? So it is like, so suppose if it is like 500 rupees and you will tell, I will pay 200 rupees, I will pay 250 rupees, etc. and all. What pa? Correct, huh? So this way, what will happen? There will be a reduction. So reduction, that is called as discount. You understood? Which is that trade discount before supply. Before supply, it's a trade discount. And trade discount is allowed as deduction or not allowed as deduction? Allowed as deduction. So because it is before supply. Whereas cash discount, before supply, after supply? After supply. But whether the terms are agreed before at the time of supply, terms are agreed or not agreed, before or at the time of supply, agreed. So usually in case of cash discount, they will tell, today I will raise invoice to you. If you pay within 10 days, I will give you discount, like that they will say. Means terms are already agreed, but the discount will be given later, after supplying. So is it allowed as deduction? Yes, it is allowed as deduction. But the problem is, already we prepared the invoice. Is it clear? Already we prepared the invoice. Then what we need to do in that case? In that case, we need to give a credit note. Why credit note? Whenever we raise a invoice, the recipient will be showing a debit balance in the supplier books. Now for discount, what is the entry? So we will credit the recipient, because discount is an expenditure to us. So discount account debit to recipient account. For that reason, we will be giving a credit note. Simple pa. Invoice value reduced. What is the name of the document? Credit note. Invoice value increases. What is the name of the document? Debit note. Now when you give discount, invoice value decreases or invoice value increases? Decreases. So what is the name of the document that you will be giving to the recipient? Credit note. See there. So after supply, but the terms are agreed before supply, cash discount allowed as deduction if credit note is issued, and recipient should reverse the proportionate ITC. Why should recipient reverse the proportionate ITC? So this we need to understand. Have a look into this. So first, invoice for rupees 1 lakh excluding GST at 12%. Invoice for rupees 1 lakh excluding GST at 12%. Now in the books of supplier and in the books of recipient, in the books of supplier and in the books of recipient. In the books of supplier, what is the entry for this? Sales entry pa, sales entry. Recipient account debit. How much recipient account debit? 1 lakh 12,000. To sales account. How much? 1 lakh. To GST payable account. How much is GST payable account? 12,000. So GST payable is a liability which we have recognized. Then in the books of recipient, what is the entry for this? Purchasers account debit. How much? 1 lakh or 1 lakh 12,000? 1 lakh, 1 lakh. Why? Because this 12,000 can be taken as ITC. ITC is a asset that shows a debit balance. Input tax credit account debit. How much? 12,000. To supplier account, creditor, supplier account. How much? 1 lakh 12,000. You got it up to this? Now, there is a discount, cash discount at 5%. That is 1 lakh 12,000 into 5%, that comes to 560, correct, or 5,600? 5,600. In this 5,600, what is the value component? What is the value? Value will be 5,000. 1 lakh is value, GST is 12,000. 1 lakh 5%, 5,000. 12,000 5% will be 600. So value component will be 5,000 and GST component will be 600. What is the entry in the books of supplier? In the books of supplier and in the books of recipient. In the books of supplier, in the books of recipient. What is the entry? Come on. In the books of supplier, sales. This is discount. Discount is cost income, expenditure income. Expenditure means what we need to do? Debit. So discount account debit. How much discount? 5,000. Only 5,000, not 5,600. Why not 5,600? Because already I paid GST considering 1 lakh. Now if 5,000 is reducing, my liability also should come down to the extent of 600. So liability shows what balance? Credit balance. To reduce it, what we need to do? We need to make a debit. So GST payable account debit. So GST payable is showing what balance? Credit balance. Now we make a debit. GST payable account debit. How much? 600 to recipient account. So recipient account gets reduced by 5,600. Due to that reason only credit note is issued. Who will be giving credit note to whom? Supplier will be giving credit note to recipient. Now parallelly, what is the entry for this? Discount in the books of recipient. Supplier account debit. Because creditor account will get reduced. That is in debtor books. That is in supplier books. In supplier books, recipient account is getting credited. Then in recipient book, supplier account gets debited. Supplier account debit 5,600. To what is the income they got? Discount. To discount account. How much? 5,000. To ITC. ITC balance will come down because here liability comes down. Means their ITC also should come down. ITC shows what balance? Debit balance. Now that should be reduced. So therefore we will make a credit to ITC account, that will be 600. Is it clear? That's the reason why whenever supplier issues a credit note, recipient will reverse the ITC. Is it clear or not? That is mandatory condition. So that's what I have given here. Whenever supplier issues a credit note, the recipient should reverse the proportionate ITC, then only liability of the supplier gets reduced. But now they have added one amendment. How will supplier know that the recipient will reverse the ITC? Supplier will not know. Supplier will just give a credit note and he will be under the impression that recipient will reverse the ITC. What if recipient is not reversing the ITC? That's why they have brought in one point that supplier should ensure that recipient is reversing ITC. For that, supplier should expect from recipient a declaration that the recipient will reverse the ITC. Recipient has reversed the ITC, means this declaration should be obtained for the completed year. This financial year, for example, financial year 24-25. For the completed financial year, they need to get a declaration from the recipient that the recipient has reversed the ITC, so that the supplier liability, whatever they have reduced, it's okay. If they are not getting declaration, unnecessarily their liability got reduced. Now they need to pay. Got it? But when declaration, if the ITC component. Here what is the ITC component that we reversed? What is the ITC component? 600. Like this 600, multiple transactions will be there throughout the year for the supplier. I am supplier, you are my recipient. I will be giving you multiple credit notes na. So cumulative of all these credit notes, the ITC component you need to reverse. If that does not exceed 5 lakhs in a financial year, supplier shall obtain a certificate or undertaking from the recipient. Suppose if the ITC component exceeds 5 lakhs in a financial year, supplier shall obtain certificate from recipient CAR-CMA. Got it? Recipient's CAR-CMA should give the certificate to the supplier. Understood? How to ensure recipient has reverse proportionate ITC? If the ITC does not exceed 5 lakhs in a financial year, supplier should obtain certificate or undertaking from recipient. If the ITC exceeds 5 lakhs in a financial year, supplier shall obtain certificate from recipient CAR-CMA. Okay, that is with respect to this. And some more points you see. Certificate or undertaking includes details of invoices along with supporting documents. Certificate of CA-CMA should contain UDIN. What is UDIN? Unique Document Identification Number. And ITC reversed in a financial year. This 5 lakhs is sum of all CGST, SGST, IGST compensations. The certificate or undertaking not required to be uploaded in the portal. So they don't have to upload it in the portal, but whenever officer is asking, they should be producing it. So but made available to officer during any proceedings. Whether it is applicable only for current financial year? No, all the past financial years also it is required. So it is applicable for all past periods, because it's a retrospective amendment. So even for old periods also it is to be done. Okay. So chance of asking a question is there. That to this limit you remember, ITC component in a financial year does not exceed 5 lakhs, declaration exceed 5 lakhs, certificate from CA-CMA. So that is about the first discount and second discount. What is the first discount? Discount given before supply. Second discount, discount given after supply, but the terms are agreed before or at the time of supply. Next one, discount given after supply. When the discount is given after supply, but whether the terms are agreed before or at the time of supply? No. Example, end of season sale discount. Example, listen, you are having a shop. I am a wholesaler. I sent the stock to you and 1 lakh is the value of the stock. Now what happened? The stock is not moving. When the stock is not moving, I will tell, okay, I will give you 50% discount. You try to push the stock, and which means you will not give me 1 lakh. You will pay only 50,000. But I need to pay GST on 1 lakh because this post supply discount is not allowed as deduction. Why it is not allowed as deduction? Because it is not agreed before at the time of supply. See this. So discount given after supply and terms are not agreed before supply. Example, end of season sale discount. Is it allowed as deduction or not allowed as deduction? Not allowed as deduction. And GST will be payable on value before discount. Okay. So that is with respect to this exclusion from value of supply. So what we have discussed is section 15.1 meaning of value, section 15.2 inclusions in value, section 15.3 exclusions from value. Okay. And that is given here. First they have given valuation, value of supply, section 15.1. Then they gave what are the inclusions and exclusions. Okay. And then we have rules related information only. So we will discuss these illustrations in the afternoon after lunch break. Then we will move on to the rules, because they started asking rules related questions in your exam, because December 24 also they have asked on value of supply one rule 32 related computation. So due to that reason you can expect good questions on rules, valuation rules. Rule 27, 28, 29, 30, 31, like that, lot of rules are there that we will be discussing in the afternoon session. Okay. Thank you. We'll meet at 2:15. Yes. If you eat and come early, take some rest so that afternoon you will be active. You got it? Don't sleep in the afternoon. Very, very important area we will be discussing, please. Okay. Okay, we'll start. So far we completed section 15.1 and 15.2 and 15.3. These three subsections talks about the value of supply, and you can see here they have given few illustrations, examples to understand. If the value is inclusive of tax 100 and applicable GST rate is 18, how will you calculate the tax amount whenever the value is inclusive of GST? Simple, value inclusive of GST into GST rate divided by 100 plus GST rate. For example, they have given 100, inclusive of GST 18, means this 100 rupees is inclusive of 18%. So how will you calculate the tax? 100 into 18 divided by 118. What if it is 12%? 100 into 12 by 112. What if it is 5%? 100 into 5 by 105. So that will be taken as the GST rate, GST amount. So 100 into 18 divided by 118, that comes to 15.25. But usually the tax should be rounded off to nearest 1 rupee. So it should be taken to 15 rupees. Then Mr. X is selling a product for rupees 1000 to Mr. B. In this example, the value of supply will be consideration charge, that is 1000, provided X and B are not related and price is the sole consideration. Then the supplier supplies goods worth rupees 5 lakh to the recipient. Against this supply, 3 lakhs is paid by recipient directly and balance 2 lakhs is paid by recipient's debtor. Both the payments will be included, correct? So whether the recipient is making the payment to supplier or some other person is making payment to supplier, everything will be consideration to the supplier. Next, Mr. A sold goods to Mr. B for rupees 20,000. Mr. A is charging packing charges of 1000. Mr. A is also paying freight of 3000 from Mr. A's premises to B's premises. Packing charges, I told you, packing will be incidental, so therefore it will be included in the value. So 24,000, and also paying freight 3000. Freight is what? Other expenses. Is it before at the time of delivery or after delivery? Before at the time of delivery. Therefore that should also be included. So 24,000. Then 5, a cafeteria in X Limited, a corporate office, provides lunch at 120 per plate to the employees of the company. However, the vendor in the cafeteria receives an amount of 70 per plate in the form of subsidy from X Limited for providing food at a lower rate. Will that 70 be included in the value? Yes. So first we need to take 120 plus 70. Then here the value 70 will be added to the taxable value 120 for the purpose of charging GST. Suppose if the same amount of subsidy is given by government, then it will not be includable in the value. Mr. X enters into a contract for supply of goods worth 2 lakhs on 15th March. As per the said contract, the payment for the said amount was required to be made within 2 months of sale. If the complete payment is not made within the time period, a late penalty of 10,000 will be chargeable. Whether this 10,000 will be included in the value? This is what? Interest, late fee or penalty for delay in receipt of consideration. Yes, it should be included in the value because we saw one of the inclusion. What is that one of the inclusion? Interest, late fee for delayed payment shall be included in the value. So accordingly, this will be included in the value. So 10,000 will be includable in the value. Suppose if we are not charging GST separately, then this 10,000 is assumed to be inclusive of GST. Then 7. Messrs. Nanda Bakery sells a special type of fruit cake for New Year with MRP 200 per pound. The customer being offered a discount at 10% per cake. In the month of December, Nanda Bakery sold 600 numbers of cakes to that customer. So then what will be taken as a value of supply? Simple. So 200 rupees. It's a pre-supply discount or post-supply discount? Pre-supply. Discount at the time of sale means pre-supply discount. So price how much pa? 200. 200 minus 10%, that will be 180. Correct? On that 180, into how many number of pieces? 600. So into 600. So 180 into 600, that will be 1,08,000. Understood? Then 8th one, Mr. Ram sold goods to Mr. Lakshman for rupees 2,50,000. As per the contract of sale, Ram is required to deliver the goods in the premises of Lakshman. As per contract, they need to deliver. Mr. Ram hires transporter for transportation for delivery of goods. However, the freight is paid by Lakshman to transporter. Actually, who should pay the freight? Ram should pay. But who paid? Lakshman paid. means I told you any liability of supplier incurred by the recipient. Here who is incurring the expenses? Recipient is incurring the expenses. What I told you, if recipient is incurring expense on behalf of supplier, such expenditure to be included in the value. So accordingly this 2,50,000 plus 2,500, 2,52,500 will be taken as the value. Then look into this question. Example 21. RG Private Limited provides the following particulars relating to goods sold by it to GK Private Limited. List price of the goods exclusive of tax and discounts 10 lakhs. 10 lakhs is the list price of the goods. Tax levied by municipal authority on sale of such goods 1 lakh. What about this? Tax by municipal authority. Which provision? Taxes, duties and cess by whatever name called other than GST should be included in the value. So therefore this is municipal tax should be included in the value. But in the given price, is it included or not included? Not included. How you know? Exclusive of taxes, not included. So what we need to do? We need to add. We need to add. Then CGST, SGST chargeable on the goods. What about the GST? To be included or to be excluded? To be excluded. I told you all taxes other than GST to be included, but GST will not be included. Therefore, as per provision, it is to be excluded. In the given price, it is already excluded. So you ignore it. Is it clear? Then, so this will be ignored. Packing charges as per provision 15(2)(c), that is any expenditure incurred by the supplier. I told you now packing charges, incidental expenses. So packing charges to be included. In the given price it is not included. So we need to add. So 10 lakhs plus 1 lakh plus 20,000. Okay. Then RG Private Limited received 40,000 as subsidy from a NGO. 40,000 rupees subsidy from whom? NGO on sale of such goods. Is it directly linked to the price? Yes, directly linked to the price. From whom it is received? From CG or SG or others? Others. So as per provision, it is to be included. So subsidy directly into the price from others to be included in the value. In the given price, it is included or not included? Wait. The price of 10 lakhs is after considering such subsidy. After considering such subsidy means what? They have reduced. They have reduced. So first, the given price they have reduced. Carefully listen. As per provision, it is to be included. But in the given price, it is excluded. So what we need to do? We need to add. You understood? As per provision, it is to be included. Wording is important. Already included. Don't use just like that. Okay, this is English. You cannot use just like that to your whims and fancies. Carefully use the wording, because otherwise the meaning will change. When the meaning changes, even though answer is correct, unnecessarily you will be losing the marks. Okay, as per provision, it is to be included. To be means what? Means not yet done. So you have to do, correct? To be included. What happened in the given price? It is excluded. Got it? To be included in the given price, it is excluded. Therefore, we need to add. Got it? So, first, this 40,000 rupees, why we need to take like that? I told you, two views. View 1, the given price is after considering subsidy. The given price is without considering subsidy. Clearly, they gave in the question. The price of 10 lakhs of the goods is after considering such subsidy. So therefore, we need to add. We need to add this 40,000. As per provision, it is to be included. In the given price, it is not included. So we need to add. So we need to add this 40,000. Then next, RG Limited offers 2% discount on the list price of the goods which is recorded in the invoice. What type of discount? Pre-supply discount or post-supply discount? Pre-supply. Pre-supply means before supply itself the discount is given. Is it allowed as deduction? Yes. How much? 10 lakhs into 2%, that will be 20,000. Correct? 20,000. But in the given price it is exclusive of discount. Exclusive of discount means what? Before discount. Exclusive means before. Exclusive means before. Before tax and before discount. Means I have not yet reduced the discount. So you need to reduce 20,000. That's where you will get 10 lakh plus 1 11 lakh plus 60 minus 20, 11,40,000 will be taken as the value. This is a standard type of question. Okay. Next, we are moving on to the rules related information. What we discussed so far is this exclusions in the value, etc. and all. And now look into this CMA, inter, extra topics, one PDF I have given, one book. You see that book. Summary on CGST rules related to valuation. Summary on CGST rules related to valuation. This already I told you. Assessable value equals to transaction value if the following conditions are satisfied. Price must be the sole consideration. Supplier and recipient are not related. If any or both the conditions are not satisfied, then the assessable value shall be determined in terms of CGST rules. What is the first condition, pa? Supply price must be the sole consideration. What if price is not the sole consideration? Then we need to determine the value as per rule 27. And second condition is what? Supplier and recipient are not related. What if they are related? Then we need to determine the value as per rule 28. Okay. And next one, transaction between distinct persons including related persons, rule 28. Rule 29 is principal agent transactions. So you need to remember what are these three rules. Rule 27 is price is not sole consideration, means what? How the consideration will be either monetary plus non-monetary or fully non-monetary form, then rule 27 will be applicable. Rule 28 is applicable in case of transaction between related parties including distinct persons. 29 is applicable in case of principal and agent transactions. Okay. Now, first look into rule 27. So, when rule 27 is applicable, price is not the sole consideration. I will give you one example. Say there is one actor and that person is a producer's son, and that person wanted to become a hero. Now he signed a movie, and this particular movie is his first movie for which he is getting a remuneration of 25 crores plus distribution rights in Andhra Pradesh. You got it? Clear? So how the remuneration will be? 25 crores for the movie plus distribution rights in Andhra Pradesh. Now in this background, so whether the 25 crores is the sole consideration or is there any other consideration? There is another consideration. What is that another consideration? Distribution rights in a market. So which means that is also his consideration. So price is not the sole consideration. Now what should be taken as the value? See this, open market value. What is open market value means? On that particular date, you can see below what is the meaning of open market value. You can see that open market value means what? Open market value means transaction value on the same date. Open market value is what? Transaction value. Comparable value is transaction value on the same date, same goods or services, same supplier or any other supplier, means that particular day if that actor has signed any other movie for which he got some remuneration, that will be taken as the open market value. So he did not sign, means there is no open market value. Is it clear? Or like him, any other actor signed the movie on that day, that will also be taken as open market value, but there is no such value on that day. Is it clear? So open market value cannot be determined. When open market value cannot be determined, then what we need to do? We need to take money value plus money value of non-monetary consideration. Monetary consideration plus monetary value of non-monetary consideration. What is the monetary consideration in this example? 25 crores plus distribution rights. So the distribution rights related monetary value we need to find. It is not available. Why it is not available? This is his first movie. Had he already acted, that would have been distributed. So means some money they would have fetched. That can be taken as a value here. There is no money value of non-monetary consideration. Means second option also will fail. Correct? Open market value fails and money value of non-monetary consideration also fails. Then like, kind and quality. What is like, kind and quality means? That is also transaction value not necessary same date, any nearest date, minor modifications permissible, same supplier. Now concentrate, the same person, that is that actor, this is the first movie. As this is the first movie, there is no like, kind and quality. Had he already acted, some money he would have got, past movie and all, that can be taken as like, kind and quality. But this is the first movie, so there is no like, kind and quality. So that also fails. Is it clear? Then what's next? Cost plus 10%. Cost plus 10% means for him there will be some cost of providing the services. That cost of providing the service plus 10% will be taken as value. But in India, there is no standardized rates for the purpose of providing the services. Correct? You understood or not? See, one person is doing a service. Example, one carpenter. What is the hourly rate of a carpenter? Any standard rate is there? No. 200 rupees also people will do. 500 rupees also people will do. 1000 rupees also people will do. Correct or not? Yeah. So therefore, there is no standardized rate. So cost of providing the service will be very difficult to determine, and therefore this also will fail. When this also fails, what is left? You see note 1. If the above is not possible, then value shall be determined as per rule 31, which is subject to approval by GST officer. So tell me, under rule 27, what are the 5 options? Option 1, open market value. If that fails, money received plus money value of non-monetary consideration. If that also fails, like, kind and quality. If that also fails, cost plus 10%. If that also fails, residual value. Value shall be determined as per rule 31, means using some principles of valuation we need to determine. Okay, that's why in your CMA final there is a paper called as Strategic Performance Management and Business Valuation. Like that one paper is there. In that business valuation, you will be learning how to do the valuation, the principles of valuation and all you will be learning at CMA final level. Is it clear? So therefore we need to approach a professional and they will be determining the valuation. Okay, so I am advising you, complete CMA intermediate, then CMA final, and so there is a very good scope for valuation. So lot of people were asking me, sir, for CAs there are lot of avenues, for CMA what avenue is there? Actually there are some avenues which are there for CMAs which is not there for CAs, called as management consulting. Management consulting is there. So wherein this avenue is not there for others, CAs is very, very difficult. Whereas CMAs can go into management consulting. Valuations you can participate. Valuation means there are many valuations, everything is valuation only. And share valuations, at the time of mergers and takeovers they will do share valuation, and even business valuations. So that area is also there. So you have to become a registered valuation officer, RVO. So ICMA Institute is only providing that. So once you become a registered valuer, so you have to certify the valuation reports. Is it clear? And then beyond that, there is a scope in commercial department. Commercial department means procurements. Every organization will have a procurement department. That's not finance department. They call it as commercial department. In that commercial department, so purchase decision will be taken. Purchase decision is not that easy. We need to evaluate different suppliers, and we need to analyze the quality and this EOQ etc. and all you would have studied now, material management, that will be useful there. You got it? That is procurement division. There you can go. Then yet another area, internal audit. Internal audit is also there in many organizations. For that internal audit also you can go. You understood what I am telling? These many areas are there for you. So don't worry. Clear. If you clear na, so the potential is so big, but you cleared is not important. How much you learn is important. You got it? Clearing is one side of the coin, that everyone will clear. But getting placed in the organization, you should have other skills and all. Good communication skills, and thereafter analytical skills. One case study when they give, you should be able to decode that case study, and in a proper structure you need to present it. So then in that case you will definitely be selected. You should be participating in very good group discussion. You got it? So those skills and all you need to improve. So after exam till result, you should focus on that skills. Anyhow, after exam till result, you will be idle only, correct? What plucking work you will be doing? Nothing. Nothing. So at that time, so focus on developing your skills, all communication skills, etc. and all. So then what happened? Result will come. Suppose success, good, final coaching, not successful, okay, prepare hardly, and again this 2 months of skills that you develop now, it will definitely be useful for you, like presentation skills, writing skills, all those things. You got it? Therefore, that's what many times I will be telling for the students, CMA students, that basically you need to spend more time on developing yourself. That's where definitely job you will get. Otherwise, you will be competing with BCom students. BCom completed and they will come, you will also go and start competing with them. That is not, you are here. So then you need to enrich yourself, okay? And see this. So this valuation will be done by CMS. Valuation will be done by CMS, but that is subject to approval by GST officer. So tell me rule 27, what are the 5 points? Open market value, like kind, money received plus money value of non-monetary consideration, like kind and quality, cost plus 10%, residual value. Got it? Now, second rule you see. What is second rule? Related party transaction including transaction between distinct persons. Listen, in second rule, second point is missing. Total 5 points, total 5 points. In the second rule, second point is missing. So what is first? OMV, open market value. If fails, second point is missing, like kind and quality. If that fails, cost plus 10%. If that fails, you got it? Then in third rule, what is third rule? Principal agent transaction, third point is missing. You understood? Open market value, if not, cost plus 10%, if not, residual value. Can you remember, pa? So 27, rule 27, 5 points. In the second rule, related party transaction including transaction between distinct person, second point is missing. And principal agent transaction, third point is missing. Got it? Now say this. And this rule 27 is applicable for both goods and services, and this transaction between related parties including distinct persons also applicable for both goods and services, OMV, LKQ, cost plus 10%. Now there is one proviso which says that if the recipient is eligible for full ITC, when recipient is eligible for full ITC, so I am supplier, you are my recipient. When you will be eligible for full input tax credit, whenever your outward supply is exempted, can you take ITC? Your sales is exempted, pa. Can you take ITC on your inward supplies? No. First of all, you know what is input tax credit? What is input tax credit? Tax paid on inward supplies. Tax paid on inward supplies. What you can do with the tax paid on inward supplies? You can adjust against tax payable on outward supplies. Are you getting this? So this tax paid on inward supplies can be adjusted against the tax payable on outward supplies. Now listen, whenever your outward supplies is exempted, you cannot take ITC on your inward supplies. Whenever your outward supplies is partly taxable, partly exempted, you cannot avail ITC on your inward supplies. Got it? Means full ITC you cannot take, proportionate ITC only you can take. So tell me, when are you eligible for full ITC? Whenever your outward supply is fully taxable, you are eligible for full ITC. At that time, whatever value for which I raise you invoice, that value will be taken as the open market value. Means if I mention 1 rupee in invoice, 1 rupee will be the open market value. If I mention 10 rupees in invoice, 10 rupees will be the open market value. Are you getting this, pa? So see there, if recipient is eligible for 100% ITC, open market value equals to transaction value deemed. You look into the note 3. In such case, invoice can be generated for any value. Even rupee 1 can be considered as value. Got it? Next. Suppose if this fails, like kind and quality, if not, cost plus 10%. What should be taken as cost? Look into the second point. Cost means, in case of manufacturer, cost of production. Cost of production plus 10%. How to calculate cost of production? Already you know. Cost sheet. What will you do? Direct material, direct labor, direct expenses, prime cost. And to that prime cost, we need to add factory overheads. Open, and we will get gross factory cost. Gross factory cost, add opening WIP minus closing WIP, net factory cost. Net factory cost, add admin overheads related to production. Correct? Sales should not be added. Admin overheads related to production. Now you will get cost of production. Got it? That cost of production plus 10%. Correct only I said? Okay, still I remember here. And so cost plus 10%, cost shall be cost of production in case of manufacturer. In case of trader, what should be taken? Cost of acquisition. And in case of service provider, what should be taken? Cost of providing service should be taken. Is it clear? Next. So see this, one more point. Alternatively, at the option of the supplier for each supply, they can take 90% of the price at which recipient supplies like kind and quality to an unrelated buyer. Carefully listen. This is known as resale price method. What they are telling, if the transaction is between related parties or the transaction is between distinct persons. Sir, who are related parties? Already we know. Related parties, that family scope. Who are treated as distinct person, multiple registrations of a person is known as distinct person. For example, I have business in Tamil Nadu and Kerala, means I will have two registrations. Tamil Nadu registration to Kerala registration, if there is any transaction, that's a transaction between distinct persons. Okay. In that case, say I am a related person to you, you are my recipient. You subsequently sell to an unrelated buyer. You subsequently sell to an unrelated buyer. In that, 90% will be taken as my value. You understood or not? This is known as resale price method. The price at which my related person subsequently sells to an unrelated buyer into 90%, means what is the assumption? You will make a profit margin of 10%. I am selling to you at one price, that is influenced price. This is not the correct value, because as you are related, I will be selling to you at a lesser rate, but you in turn sell to an unrelated person at a higher rate. That into 90% will be taken as the value of the supplier, that is 90% of the resale price. Okay, see there. Alternatively, at the option of the supplier for each supply, 90% of the price at which recipient supplies like kind and quality to an unrelated buyer on the same day. But remember, this provision is applicable only for goods, not for services. This rule is applicable for both goods and services, but this alternative is applicable only in case of goods. Then, recipient should not process, you should be selling it as such. Yeah, you should not be processing. For example, I am giving you work in progress. You are converting into FG and you are selling. I will not take resale price into 90 because you are doing some process. Means processing cost will be added. Correct or not? So therefore, when we will take resale price method, whenever I am selling to a related person who in turn sells to an unrelated person as such. As such means what? Without any processing. So recipient should not process those goods but should have been sold as such. Then next one, this is a latest amendment. So in case of corporate guarantee, so corporate guarantee means what? What is corporate guarantee means? One company giving guarantee with respect to loan taken by another company. Got it? I am holding company. Your subsidiary company. You take a loan. What loan? Secured loan or unsecured loan? Unsecured loan. That loan will be guaranteed by holding company. That is known as corporate guarantee. Is it clear? For doing this guarantee, it's a transaction between related persons. Correct? Holding company and subsidiary company are related. So therefore, on that GST will be payable. How much should be taken as the value? 1% of the guaranteed amount. 1% of the guaranteed amount or actual consideration, whichever is higher. So 1% of the amount of such guarantee offered or the actual consideration, whichever is higher. Now add here 1% of the amount of such guarantee offered per annum or actual consideration, whichever is higher. For example, if the loan is for 4 years and the guarantee amount is 100 crores, 100 crores into 1% into 4 years. 4 years, loan is for 4 years now, into 4 years. How much? 100 crores into 1%, 1 crore. 1 crore into 4 years, 4 crores. Or actual consideration, whatever is the consideration that you give to me for giving the guarantee. Usually when I give the guarantee, you will pay me guarantee commission. So that or the 1%, whichever is lower or higher, higher. Okay. For example, you gave me 3 crores. So 4 crores or 3 crores, whichever is higher, 4 crores should be taken as the value. Is it clear? So see this, value equals to 1% of the amount of such guarantee or the actual consideration, whichever is higher. What if there is a personal guarantee? Personal guarantee means what? Director of a company giving guarantee to the company. One company giving guarantee to another company is known as corporate guarantee. Director of a company giving guarantee to company is known as personal guarantee. In case of personal guarantee, so the value shall be deemed to be nil. Okay. 1 second here. Okay, listen. So one company giving guarantee to the other company is known as corporate guarantee, and director of a company giving guarantee to company is known as personal guarantee. In case of personal guarantee, what should be taken as value? Value shall be deemed to be nil. Please read this. Supplier of service providing corporate guarantee to any banking company or financial institution on behalf of recipient being a related party. What should be taken as the value of supply? 1% of the amount of such guarantee offered per annum or the actual consideration, whichever is higher. In case of personal guarantee by director to a company without consideration, value shall be considered as yes. Say this. So generally there is an RBI circular which says that consideration should not be paid in case of personal guarantee by a director to company. Because of that reason only, CBIC circular says the value shall be deemed to be nil. Okay. So these 2 points may be tested because this is an amendment, but also remember, what if the recipient is eligible for full ITC, then whatever value declared can be taken as open market value? Yes, that point is applicable even in case of corporate guarantee. Then look into principal agent transactions. In case of principal agent transaction, I told you first open market value, but that open market value can be compared with 90% of the resale price. I am a principal I am making supply to an agent. That agent will in turn sell to an unrelated person. That price into 90% or the open market value. At the option of the supplier, they can decide. If that is not available, then cost plus 10%. So in case of distinct persons and principal agent transaction, you need to determine the value only as per rule 28 and 29, but rule 29 is applicable only in case of goods. Okay, next. So this already we have seen. If the above is not possible, then we need to determine value as per rule 31, and for rule 30 cost will be what, and when open market value is deemed to be transaction value or transaction value deemed to be open market value, whatever value we declare will be taken. In case of services, rule 30 can be skipped, because I told you cost of providing the service is very difficult to determine. So we can skip that rule 30 and proceed to rule 31. Now see this. First, section 7(1)(c), there are 4 activities which are treated as supply even though without consideration. What are those 4 activities which are treated as supply even though without consideration? DRIP. D for disposal of business asset on which ITC is availed. R for related party transaction including transaction. Can you manage with the book? A projector, I think, inverter issue. So related party transaction, first one, disposal of business asset on which ITC availed. R for related party transaction including transaction between distinct persons, and I for import of services from a related person or another establishment located outside India. P for principal agent transactions. These are the 4 activities which are treated as supply even though without consideration. You can see here that is given in section 7(1)(c). Section 7 talks about meaning of supply. Section 7 talks about meaning of supply. In that section 7, so you can see 7(1)(c). These are the 4 activities which are treated as supply even though without consideration. You can see that in page 7. So revised book, correct, that book only, that color book. So page 7 it is there. If you have book, you see. So what are those 4 activities? Activities in schedule 1 even though not for consideration. D for disposal of business asset on which ITC is availed. What is the disposal of business asset on which ITC is availed? Means I am purchasing a business asset. I am purchasing a business asset. On that business asset, so I have availed ITC. Now that business asset is disposed of for consideration or without consideration? Without consideration. So activities in schedule 1 even though not for consideration. Carefully listen. I purchase a AC, and at the time of purchase of AC I have availed the ITC, and I use the AC for 5 years and 4 years. Thereafter I have given that AC to an orphanage. Now is it disposal of business asset? Yes. On which ITC availed? Yes. For consideration or without consideration? Without consideration. That will become supply under 7(1)(c). R for related party transaction including transaction between distinct persons. Okay. So between related persons and between distinct persons, if there is any transaction, that will become supply under 7(1)(c). I for import of services. Import of services from whom? Import of services by a person from a related person or another establishment located outside India. Okay. Then P for principal agent transactions. These are the 4 activities which are treated as supply under 7(1)(c) even though there is no consideration. If it is a principal agent transaction, which rule will be applicable? Rule 29. Just now we discussed principal agent transaction, rule 29. If it is related party transaction or import of service from a related person, it will be rule 28. And then what if it is disposal of business asset? What if there is disposal of business asset on which ITC is availed? Then which rule will be applicable? That's what you can see there. So we have capital goods or other goods. Okay. So first one I told you there are 4 activities, which is 71C. It's 5 minutes pa. You, if you want, you take a small break. So let it Okay, listen. So this is the discussion we were into, section 7.1c. There are 4 activities which are treated as supply even though there is no consideration. For these 4 activities, transaction value under section 15 cannot be applied. So we need to determine the value as per rules. In that related party transaction, import of service from a related person, rule 28. If rule 28 fails, then rule 30. If rule 30 fails, then it will be rule 31. Same way, principal agent transaction, rule 29. If that fails, rule 30. If that also fails, then it will be rule 31. For disposal of business asset on which IT is availed, for capital goods, we have a separate section called as 18 subsection 6. That is in input tax credit chapter. If it is other goods, then rule 30 or rule 31. So this discussion we will see in ITC whenever we are discussing input tax credit. Now look into this GST implications on personal guarantee and corporate guarantee. Carefully listen. A director giving personal guarantee without any consideration. Is it supply or not a supply? Supply under 7.1c. Why 7.1c? Because it will be director and the company are treated as related. We discussed now one point. Such persons are officers or directors of one another's business. So there it will become supply. But the value shall be deemed to be nil as per CBIC circular. GST payable by not applicable. Director giving personal guarantee for consideration. Actually there should not be any consideration. If there is consideration means it is overriding RBI circular. The director is not acting in the capacity of a director. Okay. Then is it supply? Yes, it is supply under 7.1a. What should be taken as value for payment of GST? The actual consideration involved should be taken. GST payable by, who will pay GST? The director, provided they are registered. Okay. Then next, ex-director giving personal guarantee is not a supply without consideration, because ex-director is not a related person, only director is a related person. As it is not a supply, so therefore GST payable shall not arise. Okay. So all this is our revised book only. That is extra topics. CMA enter extra topics only, it is there. Then ex-director giving personal guarantee for consideration, then it is supply under 7.1a. And when it is 7.1a, actual consideration only should be taken and ex-director will pay GST. Suppose if it is corporate guarantee, for corporate guarantee only we discuss the valuation. Corporate guarantee by a related company without consideration or corporate guarantee by a related company for a consideration, it will become supply and the value will be as per rule 28. So 1% of the guaranteed amount or actual consideration, whichever is higher. And who will pay GST? FCM, company giving guarantee will pay. Suppose if corporate guarantee is by an unrelated company without consideration, then in that case, first of all, it is not a supply and payment of GST shall not arise. Corporate guarantee by an unrelated company for a consideration, then whatever is the actual consideration, that will be taken as value for payment of GST. Understood? So these are multiple combinations which are possible. What we discussed is this. What we discussed is this. But in other cases, what will happen, you should be knowing. That's why I gave you these combinations. Now look into this illustration. ABC Limited is a reseller of sunglasses, frames, lenses, contact lenses, etc. having head office in West Bengal. Goods, namely optical lenses and frames for spectacles and accessories, are transferred from head office in West Bengal to its branches in another states. Means it's a transaction between distinct persons. There is no open market value of such goods. Further, there is no supply of goods of like kind and quality. Accordingly, it has valued its goods on 110% of cost. However, department is insisting on valuation of goods at 90% of the price at which supply is subsequently sold by branches. Discuss whether department is correct in its approach. That 90% point is a optional, correct? That 90% is not mandatory. Either they can go for 110% of cost, or they can alternatively go for 90% of the price at which related person subsequently sells to an unrelated buyer. So therefore, if the head office has declared some value, then value will be taken here. So can the government, can the department tell that they should follow for 90%? No. So this gives an option that 90% is an option, Thus department contention is incorrect. Then look into next one. Rule 31A, Rule 31B and Rule 31C, that is valuation in case of specified actionable claims. So today only I told you what are considered as specified actionable claims. H, C, block. H for horse racing, C for casinos, B for betting, L for lottery, O for online gaming and G for gambling. So these are considered as specified actionable claims. And for horse racing, what should be taken as a value? Value as per Rule 31A, 100% of the face value of bet or amount paid into totalizer. So what is that? Generally there are 10 horses. In horse racing you would have seen 10 horses will be there. People will randomly place bet on different horses. Now the one who is conducting this betting transaction, so will be called as totalizer. So for every horse they will receive some bet amount now. On the total amount they will pay GST. Is it clear? Not on the winning amount, on the total amount. For example, so when horse is winning or losing, always they need to pay GST on the amount placed as bet on the horse. Got it? That's what. Whether people are winning or losing, government will always be winning. You understood? Because they get 28%. You lose also 28% you need to pay. You got it? Income tax is better. At least income tax will say only on winnings you have to pay income tax. But GST is stupid. On entire amount of the bet value we need to pay GST. Okay, that too, what is the rate of GST? 28%. 28% we will pay GST. 30% we will pay income tax. So then what is left? Balance. You got it? That's the reason why people, no one is interested to do legalized betting. Everyone wanted to do illegal betting only. Got it? Next, casinos. In casinos what will happen, pa? When you go to casino, initially you have to deposit some money and they will be giving you coins, chips or coins. Using that you can play lot of games in the casinos. Sometimes you lose, sometimes you win, and whatever money that you are winning, if you redeem in the casino, you will get your money back. Now, in this case, what should be taken as value? Read there. Total amount paid or deposited for purchase of coins, tokens, or for participation in any game. Means at the time of deposit, you will get some coins now. How much ever money that you have deposited, that will be taken as the value. For example, I have been to one casino, and in that casino, so 25,000 rupees is the minimum deposit amount. So I deposited 25,000 just for experience. No, I don't like betting, etc. and all. So because that is addictive, but I need to learn how that works. For that purpose, I spent 25,000. Now 25,000 when I spend, they will be giving me lot of coins with which I can play the game. And this 25,000 initially when I deposited, that will be taken as a value on which GST is payable. And what happened? I played one game. First game I played, okay, one poker game I played, and in that I won 10,000 rupees, okay. Whether any GST payable on that 10,000 rupees? No, I don't have to pay GST on the 10,000 rupees. Now, I have lost 15,000 rupees in another game. 10,000 rupees I won, 15,000 I lost in another game. So then I thought this will not work out. So therefore I came out and I have asked for withdrawal. So how much spent? 25,000 deposited, and in that 25,000 for every game, so we need to play. I got a winning of 10,000. So 25,000 plus 10,000 minus 15,000. So that is 20,000 left. The 20,000 I have withdrawn. Will they give me refund of GST? No. No, there is no refund of GST. See there. Amount withdrawn shall not be deducted, and on winning amount, GST is not payable and it is not included in the value if used without withdrawing. What if I have withdrawn and again I deposit? Then again I need to pay. You understood? Without withdrawing if I play, you understood the intention of the government. So without withdrawing if you play, no GST. If you withdraw and again deposit, there is GST. Means what government is telling? Without withdrawing itself you play, lose the money, you die. You understood or not? So therefore they are encouraging betting transactions here, and on winning amount greater than deposit amount, GST not payable and it is not included in the value if used without withdrawing. Whatever provision that we saw for casinos, the same provision is applicable for online gaming also. You see there, total amount paid or deposited. Amount withdrawn shall not be deducted. On winning amount which is greater than deposited amount, GST not payable. Even in case of, see this, for betting, for horse racing, for betting and for gambling, for these three the provision is same, 100% of face value of bet. And for casinos and for online gaming the provision is same. Only for lottery we have a different provision. What will be taken as a value in case of lottery? Price printed on the ticket or notified by organizing state, whichever is higher. Okay, price printed on the ticket or price notified by organizing state, whichever is higher will be taken as a value. Now look into one illustration related to this. During Jan 2018, Punjab government run the following two lottery schemes. Maha Lottery, face value 500, price as notified by official gazette 490. You tell me which should be taken, 500 or 490, whichever is higher. Which is higher? 500. Then jackpot, face value 1000, price as notified in the official gazette 940, which should be taken 1000. Maha Lottery can be sold only in Punjab, means first one intra-state, and jackpot can be sold in other states, means it is interstate. So first case 500 into how many tickets of Maha Lottery got sold? 2000. So 2000 into 500, so that will be taken as a value, but usually that is inclusive of GST, because ticket price, that is the overall price. So into 100 by 128 will be value, 28 by 128 will be GST. Understood? Then see this question. Dream 11 is conducting a betting transaction for IPL match between CSK and MI. Okay, this time this will only happen where 1000 people participated in the bet and paid 1000 rupees each. 1000 people. Number of people placed bet in favor of CSK is 400, because people won't believe CSK and all. So only 400 people placed bet on CSK that CSK will win. Number of people placed bet in favor of MI is 600. Okay, because they have lot of hopes on MI and they placed. Compute the GST payable by Dream 11, assuming that bet value is inclusive of GST and amount paid to each person if the commission of Dream 11 is 5%. Now tell me what is a GST liability. How many people place a bet? Total 1000. What is the bet value? 1000. So into 28%, how much? 280, but they have not given that it is exclusive of GST. So therefore it will be inclusive of GST. So 1000 into 28 divided by 128. How much? 2,18,750 will be the GST liability. Is it clear? Now, what is the money that will be paid if CSK won the match? If CSK won the match, how much will be paid to each and every person? Simple pa. First, what is the total amount collected? Total bet value 10 lakhs. From the 10 lakhs already 2,18,750 gone. Okay. Then what is left? 7,81,250. Then 5% will be commission. So 10 lakhs 5% is what? 50,000. Correct. 5%. The one who is conducting should get money na? 5%. So that is 50,000. Also you take out. So what is left? 7,31,250. So that will be divided between how many people? 400 people. Divided by 400. Each person gets 1,828. So they paid 1000. They get 1,828. But again in this 1,828, 30% they will pay income tax. Is it clear? Again in this 1,828, they will pay 30% as income tax. On the top of that, health and education cess will be 4%. Okay. Next, look into this rule 32. Rule 32 of CGST rules, valuation of supply, value of supply in special situations. There are total 5 situations in which rule 32 will be applicable. Rule 32 provides valuation methods for 5 specific supplies. First one, purchase or sale of foreign currency including money changing, air travel tickets, that is air travel agent, supply of second hand goods, life insurance and value of redeemable vouchers. These are the 5 cases. Anyhow, we are going to discuss in detail each and every point, but for 5 transactions they are telling either we can follow transaction value or we can follow value as per rule 32. Rule 32 is mandatory or rule 32 is optional? Rule 32 is optional. and the supplier with respect to each invoice can decide between transaction value and rule 32. But remember, when rule 32 is opted, rule 27 to rule 31 will not be applicable. You understood about rule 32? So what are the 5 cases we are trying to understand now? First one, foreign exchange transactions. What is foreign exchange transactions? Including money changing means we go to bank and we give foreign currency and get Indian rupees, or we give Indian rupees and get foreign exchange, or we give one foreign exchange and get another foreign exchange. That is known as money changing transaction. One foreign exchange is converted into Indian rupees, or Indian rupees to foreign exchange, or foreign exchange to foreign exchange. In that case, what should be taken as the transaction value? See here, the transaction value will be currency conversion fee or currency markup fee. Currency conversion or markup fee means every time when you go to bank and convert foreign currency into Indian rupees, they will be collecting a commission called as currency conversion fee. On that, GST will be payable. That is the transaction value. Is it clear? Whereas rule 32 gives another valuation. What does rule 32 sub rule 2a says? Option 1, where one of the currency exchange involves Indian rupee and RBI reference rate is available for that currency on that day, then buying rate or selling rate and RBI reference rate into units of currency. What if RBI reference rate is not available? Then gross amount in Indian rupees into 1%. When both the currencies exchange involves foreign currency, convert both the currencies into Indian rupees using RBI reference rate into 1%, whichever is lower will be taken as the value. Let's try to understand this with the help of some illustrations. Kindly make note of these illustrations in your notebook. Lot of illustrations will be there in this regard, because normally you cannot understand this, only through illustrations you can understand. So this is valuation in case of forex transactions. Valuation in case of forex transactions. What should be taken as valuation in case of forex transactions? So first question number 1. Mr. A exchanged $10,000 for Indian rupees, for rupees, where the exchange rate is rupees 86 per dollar and RBI reference rate is rupees 84.50 per dollar. Mr. A exchanged $10,000 for rupees, where the exchange rate is 86 rupees per dollar and RBI reference rate is 84.5 rupees per dollar. We have transaction value. Under section 15. So that transaction value under section 15 will be nothing but the currency conversion fee or currency markup fee. Whatever is the currency conversion fee, that will be taken. Okay. So currency conversion fee, that is not there in the question, but if it is there, that currency conversion fee will be taken as the value. Whereas another value is there. What is that? Value under rule 32 sub rule 2a. Value under rule 32 sub rule 2a. So which says, first you need to see one of the currency exchange involves Indian rupee and RBI reference rate is available or not. Then another rule is there. Value under rule 32 sub rule 2b. There is another value also. Okay. First we are focusing on value under rule 32 2a. In this 32 2a, concentrate. First look into the screen. Value under 32 2a. So in that is option 1, where one of the currency exchange involves Indian rupee. Correct? One of the currency exchange involves Indian rupee and whether RBI reference rate is available. Yes, RBI reference rate is available. What should be taken as the value? Buying rate or selling rate, depending upon the exchange rate, minus RBI reference rate into units of currency. You tell me, what is the rate? Buying rate or selling rate? Exchange rate 86 rupees per dollar minus what is the RBI reference rate? 84.50 per dollar, okay, into what is the units of currency? How many dollars? $10,000. You see the value 86 minus 84.5, how much that will come to? 1.5. 1.5 into 10,000, that will be rupees 15,000 will be taken as the value. Understood? And this is in case of rule 32.2a. Let's complete 32.2a first and then we will see 32.2b. This you keep as pending. This column you keep as pending. You have finished making note of this? Make it fast. Okay, next. Second question. Same as above, except that RBI reference rate is not available. So what if RBI reference rate is not available? Because RBI first of all is not giving the reference rate, they delegated it to FBIL, Financial Benchmarks India Limited, you see here. So this is the company to which RBI has delegated, fbil.org.in, Financial Benchmarks India Limited. These people will be giving the foreign exchange from time to time. So 21st March, 20th March, like that, different dates. You can see from 1st March to 28th March. So not every day they are giving. So 21, 20, 19, 18, 17, thereafter 16, there is no rate. 15, there is no rate. 14, there is no rate. But on that 3 days also transaction can happen. Correct? So means RBI reference rate is not available. Okay. So when RBI reference rate is not available, what we need to do? Again, so what will be the transaction value under section 15? What will be taken as value under rule 32.2a and 32.2b? Okay. So again write the same. Transaction value under section 15, value under rule 32.2a, value under rule 32.2b. Transaction value same, currency conversion fee. But what should be taken as value under rule 32.2a? Say this. So when RBI reference rate is not available, what we need to do? Gross amount of Indian rupees involved into 1%. Are you able to see this? So when RBI reference rate is not available, gross amount of Indian rupees into 1%. Now say this. What is the gross amount in Indian rupees? How many dollars they are exchanging? How many dollars they are exchanging? $10,000. What is the exchange rate per dollar? What is the exchange rate per dollar? 86 rupees per dollar. Multiply with 1%. So 10,000 into 86 into 1%, that is rupees 8,600 rupees will be taken as the value. Understood, pa? Now tell me, one of the currency exchange involves Indian rupee and RBI reference rate is available. What we need to do as value? Either buying rate or selling rate and the RBI reference rate, that difference we need to take, multiply with units of currency. Suppose if RBI reference rate is not available, gross amount exchange in Indian rupees into 1%. Okay. Then next, third question, that is Mr. B exchanged so $10,000 towards 6,000 pounds. $10,000 towards 6,000 pounds. You understood what he did? He gave $10,000 and he got 6,000 pounds. Mr. B exchanged $10,000 towards 6,000 pounds. On that date, RBI reference rate is is rupees 105 per pound and rupees 84 per dollar. Rupees 105 per pound and rupees 84 per dollar. Compute value of supply. Compute value of supply. Now again, transaction value under section 15. What will be taken as transaction value under section 15? Transaction value under section 15 is simple, that is currency conversion fee. Currency conversion fee will be taken as transaction value. Then what will be taken as value under rule 32.2a? Value under rule 32.2a. First one, what is that they are telling? Read the point carefully. So when both the currencies exchanged are foreign currencies, correct? We are exchanging dollar for pound. Both the currencies are foreign currencies. Now take purchased currency converted into Indian rupees using which rate? RBI reference rate into 1%. Then again take sold currency converted into Indian rupees using RBI reference rate into 1%. Whichever is lower should be taken. So first A, what we are taking? A, purchased currency, that is say 6,000 pounds. 6,000 pounds converted into Indian rupees using RBI reference rate 105 per pound into 1%. How much? 6,000 into 105 into 1%, that is rupees 6,300, correct? Then next B will be, so dollars, how many dollars? $10,000. $10,000 converted into Indian rupees using 84 rupees per dollar into 1%. Okay, so 10,000 into 84, 8,40,000 into 1%, that is 8,400. Whichever is lower. What is whichever is lower? Whichever is lower, that is rupees 6,300 will be taken as the value. Understood? 6,300 will be taken as the value. This is value under rule 32.2a. Now we are moving on to another one, 32.2b, but that we have not yet discussed. But that value under rule 32.2b. See, this 32.2b alone we have not discussed in all the places. We were discussing into 32.2a. So now tell me, what are the 3 points that we need to remember? First one of the currency exchange involves Indian rupee and RBI reference rate is available. So exchange rate minus RBI reference rate into units of currency. What if RBI reference rate is not available? Total amount into in Indian rupees into 1%. What if both the currencies exchanged are foreign currencies? Convert both the currencies into Indian rupees using RBI reference rate, multiply with 1%, whichever is lower will be taken. Now fourth one, same as above. Fourth question, same as above 3, except that RBI reference rate not available. RBI reference rate not available on that day. Not available on that day. Then what we will do in that case? Say this. Transaction value under section 15. Transaction value under section 15. Then value under rule 32.2a. Then value under rule 32.2b. So what will be taken as transaction value 32.2a and 32.2b? Say this. The transaction value will be nothing but what? Currency conversion fee. Currency conversion fee. But rule 32.2a not applicable. Why rule 32.2a not applicable? We have to convert both the currencies into Indian rupees using RBI reference rate. But what if RBI reference rate is not available? We cannot determine the value. Got it? Look into this page only, note 1. Value cannot be determined as per 32.2a, that is option 1, in case of cross currency transaction. What is a cross currency transaction? both are foreign currencies where RBI reference rate is not available. In such case, value shall be determined under section 15, that is transaction value equals to markup fee or currency conversion fee. Is that clear? Now we are moving on to option 2, that is rule 32(2)(b). What will be taken as a value as per rule 32(2)(b)? Say this. First we need to check this slab rate model. Here we need to see the gross amount in Indian rupees. The first slab will be up to 1 lakh, second slab will be more than 1 lakh and up to 10 lakhs, and the third slab will be more than 10 lakhs. For the first slab up to 1 lakh, what should be taken as the value? 1% of gross amount or 250, whichever is higher. Now listen, 80,000 is the gross amount. 80,000 means first slab. Yes. So 80,000 into 1% is how much? 800. 800 or 250, whichever is higher. 800. Suppose if it is 20,000, is it first slab? Yes. 20,000 into 1% is what? 200. 200 or 250, whichever is higher. 250. Exactly 1 lakh. How much? 1% of 1 lakh. 1000 or 250, whichever is higher. 1000. Which means when you go into second slab, what is the fixed amount? 1000. Are you getting? By income tax slab rates and all, you know na? Same logic. So when you go into the next slab, what is the fixed amount? 1000 plus 0.5% of the gross amount exceeding 1 lakh. So what is that gross amount? Say for example 1,60,000. 1,60,000. For 1 lakh it will be 1000. For remaining 60,000. 60,000 into 0.5%, that is 300. So 1,300. Suppose if it is like 8 lakhs. For 8 lakhs how much? For 1 lakh it will be 1000. Remaining 7 lakhs. 7 lakhs into 0.5%. 3,500 plus this fixed amount 1000. 4,500. Exactly 10 lakhs. For first 1 lakh 1000. Remaining 9 lakhs. 9 lakhs into 0.5%. That will be 4,500 plus 1000. 5,500. So when you go to third slab, what is the fixed amount? 5,500. 5,500 plus 0.1% of the gross amount exceeding 10 lakhs, but subject to maximum 60,000. For example, you take 15 lakhs. For first 10 lakhs it will be 5,500. What is the remaining amount? 5 lakhs. For 5 lakhs it will be 0.1%. What is 5 lakhs into 0.1%? 500. Okay. So therefore 5,500 plus 500, that is 6,000. What if it is 300 lakhs? What if it is 300 lakhs? First 10 lakhs it will be 5,500. Remaining 290 lakhs into 0.1%, 29,000. 29,000 plus 5,500, 34,500. Is it clear? Like that. What is the maximum amount? Only 60,000. Now coming back to this, you tell me what is the gross amount? First question. You take your notebook. First question. What is the gross amount? What is the gross amount? First question. How many dollars? $10,000 into what is the exchange rate? 86 rupees per dollar. So what is the gross amount? 8 lakh. 8,60,000 means it is in which slab? Second slab. So therefore what will be the value? For first 1 lakh it will be 1000 plus what is the extra amount? 7,60,000 into what is the second slab percentage? 0.5%. So please see how much? 7,60,000 into 0.5% plus 1000, that will be 2,000. 7,60,000 into 0.5% is 3,800 plus 1000, that will be 4,800. Understood? Next question, same. Next question also same because just RBI reference rate is not there, but the value will be same na. So therefore copy paste, same as above. So gross amount 10,000 into rupees 86 per dollar, that is 8,60,000. The value will be same. Third case, can we determine the value under rule 32 sub rule 2b? Not possible. Why not possible? Because both the currencies are foreign currencies. Next also it is not applicable. Why not applicable? Because both the currencies are foreign currencies. So this slab rate model is not possible. That's what I have given as second note. See this. Value cannot be determined as per rule 32(2)(b), that is option 2. In case of cross currency transaction, even if RBI reference rate is available, as valuation is based on gross amount in Indian rupees, in such case transaction value should be considered. Are you understanding this? Now sir, this option when I should go for with respect to each financial year. So 32(2)(a) or 32(2)(b), can I decide now itself? No. This has to be decided with respect to each financial year. So whether it is 32(2)(a) or 32(2)(b) with respect to each financial year. Not that every invoice I can determine. No. But this transaction value under section 15 and this rule 32(2)(a) or 32(2)(b), that will be with respect to each invoice. Each invoice, not each financial year. 32(2)(a) versus 32(2)(b) is with respect to each financial year. But transaction value versus rule 32(2)(a) or 32(2)(b) is with respect to each invoice. Understood the difference? So either I can follow transaction value or rule 32 value. In that rule 32, if I decide, in that again I have two options that I need to decide in the beginning of the financial year. Okay. So that's what I have given here. You can see the previous page. Option to be decided in the beginning of the financial year, which shall be applicable throughout the financial year. Okay. Now look into this question. This is how you may get a question in exam. Rolex Forex Private Limited, registered in Delhi, is a money changer. It has undertaken the following purchase and sale of foreign currency. A, $1,000 are purchased from Rajesh Enterprises at the rate of rupees 68 per dollar. RBI reference rate for US dollar on that day is 68.60. Now tell me how to determine the value as per 32(2)(a). Come on. What is the exchange rate? 68. What is the RBI reference rate? 68.6. What is the difference? 0.6. 0.6 into how many dollars? $1,000. That will be. So check the answer. 600. You understood? Then what if RBI reference rate is not available? B transaction you see. $2,000 are sold to Srinidhi at the rate of 67.50 per dollar. RBI reference rate for US dollar for the day is not available. So what we will do? 1% of gross amount. What is the gross amount? 2000 into 67.5 into 1%. That is 1350. Understood? This is rule 32(2)(a). Rule 32(2)(b) is what? Slab rate model. So first question. What is the gross amount? What is the gross amount? How many dollars? $1,000. What is the exchange rate? 68. How much it will come to? 68,000. 68,000 means which slab? First slab. So 68,000 into 1%, that is 680 or 250, whichever is higher, that is 680. What if? Second question. Second question, what is the gross amount? 2000 into, what is the exchange rate? 67.5, that is 1,35,000. 1,35,000 means it comes in second slab. For first 1 lakh it will be 1000. For the remaining 35,000 it will be 35,000 into 1%. 0.5%. That is 175. 175 plus 1000, 1175. Understood here? So that is about foreign exchange transactions. So last time I think they have not asked foreign exchange transactions. They gave a question. Insurance related question they have given. So there is a possibility of asking question on foreign exchange transactions. Okay. You were sleeping now while discussing. If you have slept, exam also you will sleep. Okay. So because this chance are high, because already they started asking rules, and in this there are multiple valuation methodologies. They tested life insurance in last attempt. So after life insurance, the next big one is foreign exchange transaction only. Okay. Next, look into 32 sub rule 3. This is air travel agent. In case of air travel agent, what will be taken as the value? Listen, transaction value is nothing but the commission earned. Whatever is the commission that is earned will be taken as transaction value. Whereas value as per rule 32 will be, listen carefully, air travel agent will do the ticket booking na, air ticket. In every air ticket, there will be a base fare. On that base fare, into 5% will be taken as a value for domestic bookings, into 10% will be taken as value in case of international bookings. Okay. Suppose if they are booking international ticket, base fare into 10%. If they are booking domestic ticket, base fare into 5%. Easily remember, just 2 points only. 5% of base fare for domestic bookings, 10% of base fare for international bookings. This is in which case pa? Air travel agent. Then next one, life insurance business. For life insurance business, what will be taken as a transaction value? The premium collected will be taken as transaction value. But rule 32, the total life insurance policies are divided into 4 types of policies. Number 1, risk cover policies. Risk cover policies means you take the insurance, and when you take the insurance for a term, this is called as term insurance. If anything happens in that term, so insurance company will pay you. If nothing happens, then the premium that you pay will be lost to you, means gain to the insurance company. For example, I took an insurance on my life. So that is for 2 crores I took an insurance, including my throat, permanent disability. Okay. So because this throat is my profession, and if this is gone, my income is gone. So due to that reason, I took the insurance on my throat and on my life for 2 crore rupees. And how much I will pay premium? Yearly I am paying 1 lakh as premium. So 1 lakh I need to pay for 10 years. So 10 years into 1 lakh, 10 years I will pay. And the term will be 25 years, means till my 55th year. Till my 55th year I am covered. If anything happens in this 55 years, suppose because of some reason my throat is gone, I will receive 2 crores. You understood? Or some health gone, I am not able to take classes, I will receive 2 crores. If I myself go, my family will receive 2 crores. This I did not tell to my wife and all, because night time while sleeping, if she puts something on my head, then she will get 2 crore rupees. So I did not tell, I am telling to you, okay. And therefore this is called as term insurance. What if nothing happens? So touch wood, so maybe God will be great and he will take care of me. So up to 55 years, nothing happens. Then what about the 10 lakhs? Gone. The 10 lakhs is gone. The entire 10 lakhs will be income to the insurance company. But sir, what is the benefit you get because of it? Peace. I am buying peace by paying 10 lakhs. Because see, there are dependents. I have 2 kids, and suppose if anything happens to me, who will look after them? Who will look after my family? Correct or not? So that peace I am buying, for that I am spending 10 lakh rupees. Okay. But this is income to the insurance company. So entire premium collected is the value on which they need to pay GST. You understood? So in case of risk cover policies, what will be taken as a value? Entire premium. If it is a single premium annuity policy, single premium annuity policy means what will happen? I will pay only 1 premium, and that premium they will invest in a market and they will generate a return. That return will be taken towards the annual premium. For example, yearly I need to pay 1 lakh. I will not give 1 lakh. I will give 8 lakhs to them. That 8 lakhs they will invest somewhere and generate a return of 1 lakh. That 1 lakh they will take towards the premium. Means out of my pocket what went? Only 8 lakhs. Correct? Single premium. 8 lakhs into 10% will be taken as the value. So in case of single premium annuity policy, how much will be taken as value? 10% of single premium. Then reinvestment policy. Reinvestment policy means, that is, so full premium whatever I give to insurance company, they will not invest in the market. Out of that, this is called as ULIP, unit linked insurance plan. I will pay premium to the insurance company. Insurance company will be investing in the equity market, like mutual fund units they will be giving to me. So when the equity market increases, this NAV of the units also will increase, so that I will get more money. And this reinvestment policy, how much money that they retain will be the value. For example, they are collecting a premium of 10,000, 7,000 rupees they invested. What is the money that they are retaining? 3,000. Say this. where the amount allocated for investment is intimated to the policyholder, value equals to gross premium minus amount allocated for investment. Then suppose if amount allocated for investment is not intimated to policyholder, it will be treated as other policies. In case of other policies, what should be taken as a value? 25% of premium with respect to first year and 12.5% of premium with respect to subsequent year. Insurance company every year will have first year policies and subsequent policies, correct? How, sir? This year, those who took new policy, the premium will be first year premium. Those who took the policy already will pay premium this year, that is subsequent year premium. You understood? By insurance company, this year they will give policies, that persons will pay premium, that is first year premium. And some people who already took the policy will continue to pay the premium, that is called as subsequent year premium. For first year premium into 25%, subsequent year premium into 12.5%. So that is this 25% of premium for first year, 12.5% premium with respect to subsequent years. Understood? Now look into one question related to this. Jindagi Life Insurance Company Limited has collected premium from subscribers and it does not intimate the amount allocated for investment to subscribers at the time of collection of premium. During the month of September, it has collected the following receipts. Premium only for risk cover. So what will be taken? This entire 25 lakhs will be taken as the value. Premium from new subscribers. So 40 lakhs into, very good, 25%. Renewal premium 12.5%. Single premium annuity 10%. So 40 lakhs into 25%, 10 lakhs, 80 lakhs into 12.5%, 10 lakhs, 1 crore into 10%, 10 lakhs. So 25 lakhs plus 10 plus 10 plus 10, 55 lakhs will be taken as the value. Is it clear? Now see this question. This is one question which they have given. Okay. Self and Family Life Insurance Company has collected premium from policy subscribers. It does not intimate the amount allocated for investment to subscribers of the policy at the time of supply of insurance service. The company has provided the following details in relation to its receipts. New policy subscribers, premium collected 50 lakhs. How much will be taken? 25%. Renewal premium, premium collected 75 lakhs, 12.5%. Only risk cover policies, full, correct? Then single premium annuity policy. So this particular question only, literally, am I right? So therefore, micro life insurance policies as approved by Insurance Regulatory and Development Authority, where the insured amount does not exceed 2 lakhs, it is exempted. So micro life insurance where the sum assured does not exceed 2 lakhs is exempted. So on this there is no GST, that you will learn in exemptions chapter. Okay. Now this alone you take, what will be taken as a value under rule 32 sub rule 4? Do the computation. 50 lakhs into 25%. 50 lakhs into 25%, that is 12 lakh 50,000. Then renewal premium 75 lakhs into 12.5%, that is 9 lakh 37,500. Then this 30 lakhs and 9 lakh 50,000. What is taken as value? 12 lakh 50, 9 lakh 37,500, 30 lakhs plus 9 lakh 50,000, 61 lakh 37,500 will be taken as value in this case. Is it clear? So what is the answer they have given? I don't know. Correct. 61 lakh 37,500. This is the suggested answer. Clear? Okay. So we completed up to insurance. There are two more transactions, that is purchase and sale of second hand goods, vouchers. So this alone we will see after break and the remaining questions from your study material. Okay. Take a break for 15 minutes, then we will continue with the remaining portion. Okay, we'll start. See this, the next rule is rule 32 sub rule 5, purchase and sale of second hand goods. So what happens is that usually when we buy the used cars, used car dealers are there, a lot of people are there, OLX autos like that, lot of used car dealers are there. What they will do, they will buy the used car and they will sell the used car. Now say they purchase used car for 1,50,000 and they sell for 2,50,000. So if this particular rule is not there, they end up paying GST on sale value, correct? So 2,50,000. For example, I am a car dealer pa. I purchase a used car for 1,50,000. I will sell the used car for 2,50,000. Now I will pay GST on 2,50,000 if this rule is not there. But this rule is telling we will pay GST only on the margin. What is margin? Sale price minus purchase price. What is my sale price in the example? 2,50,000. What is my purchase price? 1,50,000. So what is the margin? 1 lakh. On that 1 lakh only I will be paying GST. Is that clear? So see there, value equals to selling price minus purchase price, that is margin scheme. Can I take ITC on my purchases? No, I should not take ITC on my purchase. Very, very important. ITC should not be availed on purchase, which means either I should buy from an unregistered person or I can buy from a registered person but should not avail ITC. Then in case of repossession, usually what these people will do, financiers, they will give the financing for the asset. For example, car they will give finance, and if the due is not paid, EMIs are not paid, what they will do, they will repossess the vehicle and they will sell. Can they also go for margin scheme? Yes, because whatever vehicle they are selling is used vehicle only. So sale price is the price at which they are selling, but what will be taken as the purchase price? Again I am repeating, I am a financier, I seized one vehicle and that vehicle I am selling because the person has not paid the EMI, so I seize the vehicle and I am selling it. So sale price minus purchase price. What is taken as purchase price? Depreciable value. What is the depreciable value? We are reducing 5%. Straight line method we are following. We are reducing 5% for every quarter or part thereof, which means in a year it will be 20%. See there. In case of repossession, purchase price equals to original purchase price minus 5% for every quarter or part thereof. From which date to which date? From the date of purchase till the date of disposal of repossessed asset. Okay. For example, it is used for 3 years. 3 years means how many quarters? 3 into 4, that is 12 quarters. 12 quarters into 5%, that is 60% I will reduce. So remaining will be taken as the depreciable value. So look into this illustration. A taxable person engaged in sale of old air conditioners in Gujarat has following transactions. Purchased old air conditioner in Gujarat for 20,000 and sold for 25,000. What is the margin? 5,000. So on that GST will be payable. Purchased old air conditioner for 25,000 and sold for 23,000. What is the margin? 0. Why margin is 0? Negative. Sir, they are selling at a price less than the purchase price. Means margin is 0. Whether GST payable or not payable? Not payable. Value should be positive. How value will be negative? If value is negative means they will give refund. Why they will give refund? You understood. So value should be positive for tax payment. You understood. It is like in income tax, if there is a loss, we will pay income tax. Profit means we will pay income tax. What if it is loss? We will pay income tax. No, we will not pay income tax. Same logic. When it is negative, we will not pay GST. Only when it is positive, we will pay GST. Then purchased old air conditioner for 30,000 but could not sell it in that month. Okay, whenever they are selling, at the time they will pay GST. Purchased old air conditioner in Gujarat for 15 and sold in Maharashtra for 21. So what is 21 minus 15 difference? 6,000. On that they will pay GST, but this is interstate transaction. You can see first case 25 minus 25,000. CGST 14%, SGST 14%. Second case, no GST payable as negative margin. Next, no tax on sale because there is no sale. Then D, IGST on 6,000, that is 21,000 minus 15,000. In case of coupons, vouchers, etc., we discussed one example, that is Domino's voucher. So that Domino's voucher, so we'll be mentioning regular pizza. What will be taken as the value of this voucher? Because the time of supply is at the time of issuance of voucher. What should be taken as value? If you redeem that voucher, what you will get? one Domino's pizza. What is the value of that Domino's pizza? Regular pizza, say 299. The 299 will be taken as a value of voucher. The redeemable value of the goods against that voucher will be taken as a value of voucher. So money value of supplies redeemable against such voucher. Whatever is the money value of supplies redeemable against such voucher, that will be taken as the value of the voucher. Then notified services between distinct persons, these are yet to be notified, so we don't have. So this is what we have discussed. Rule 27 to rule 29 and rule 30-31 valuation. 31A and 32 specified supplies. 33 is pure agent. 34 is other rules relevant for valuation. So with this we completed value of supply fully. Now almost everything we have completed. You can see here. So valuation under rule 27. First we have rule 27 that we discussed. Then 28, that also we completed discussion. Then 29 also we discussed. And you can see rule 31A, 30, 31, 31A. So look into one example related to this rule 29. Page number 129, there is one example. See that. A principal supplies groundnut to his agent, and the agent is supplying groundnuts of like kind and quality in subsequent supplies at a price of 5,000 per quintal. I am principal, you are my agent. I am selling to you at some rate. What is the price at which you are subsequently selling to unrelated buyer? 5,000. Now what will be taken as my value? I told you, for principal agent transaction, OMV or 90% of resale price at the option of the supplier. What is resale price? 5,000. 5,000 into 90% is how much? 4,500. So the value of supply, another independent supplier is supplying groundnuts of like kind and quality to the said agent at a price of 4,550. So either we can take 4,550 as the open market value, or 5,000 into 90%, 4,500 at the option of the supplier. So the supplier can choose 4,500. Whichever is lower only the supplier will choose, because we need to reduce our tax. Then example 24, next page. State government authorize a lottery whose particulars are as under. Face value of the ticket 1000, price notified by official gazette 600. How much should be taken as value? 1000. 1000 should be taken as a value, and that is inclusive of GST. So 1000 into 28 by 128. 1000 into 28 by 128, that will be 218. 1000 into 28 by 128. How much? 218.75. That you divide by 2. Why you divide by 2? Because you know CGST and SGST are there telling no. Correct only. What we did is correct. 781.5. 781.5 is value. Then what will be the GST? The remaining component will be GST. Okay. So they are asking value of supply. So 218. Suppose if you need value into 100 by 128 you do. If you need GST into 28 by 128. If you need value into 100 by 128. So therefore 1000 into 100 by 128, that will be 781.25. Then next one. How will your answer differ if the price mentioned in B is 1050 instead of 600? Then 1000 or 1050, whichever is higher. Which is higher? 1050. Now 1050 into 100 by 128, that will be 820.31 will be taken as the value of supply. Is it clear? Next. Value of supply in case of specified actionable claims, all those things we discussed. Even foreign exchange transactions. Okay. So they have given some example here. Example 25. Look into page 131. US dollar 100 are sold by a customer at the rate of 78 per dollar. RBI reference rate is 77. Already we discussed 78 minus 77 into units of currency 100. So that will be taken as the value 100 rupees. Then 90,000 rupees is changed into Great Britain pound, and the exchange rate offered is 90, thereby giving Great Britain pound 1000. RBI reference rate is 89, and what we will do in that case, the taxable value will be 89 minus 90, difference is 1. 1 into, so 1000 Great Britain pounds, correct? That will be 1000. However, RBI reference rate not available. What we will do? Gross amount in Indian rupees into 1%, that is 900 will be taken. Then next one, see this example 26, page number 132. US dollar 100 is sold to customer at the rate of 65 per dollar. The gross amount of currency exchanged is 6,500. Now slab rate model, 6,500 means it comes in which slab? First slab. 6,500 into 1%, 65 or 250, whichever is higher, 250 will be taken as the value. Then $1,000 is sold to a customer at 65. The gross amount is 65,000. Still 65,000 in the first slab. 65,000 into 1%, 650 or 250, whichever is higher will be 650. US dollar 3,000 is sold to a customer at the rate of 65 per dollar. The gross amount of currency exchange is 1,95,000, means second slab. For 1 lakh it will be 1,000. For 95,000 it will be 0.5%, so 1,475. Are you understanding this? Next, US dollar 20,000 is sold to a customer at the rate of 65 per dollar. The gross amount of currency exchanged is 13 lakhs. Taxable value of supply will be 13 lakhs, means it comes in the last slab. First 10 lakhs it will be 5,500. Thereafter what is the excess amount? 3 lakhs. 3 lakhs minus, so 3 lakhs into 0.1%. How much? 3 lakhs into 0.1%, that is 300. So 5,800. Clear here? Next, look into example 27, next page. Mr. Ram is a travel agent. The following particulars are furnished by him. Domestic booking, international booking. So what we need to do? Domestic booking 1 lakh. 1 lakh into 5%. Very good. 5,000. International bookings 3 lakhs. 3 lakhs into 10%, 30,000. That is the value. Don't take total ticket value, taxes, other charges. Only we need to take base fare. Then next one. Look into example 28, next page. Messrs. Hariharan is a dealer of old car and engaged in the purchase and sale of old cars in Bihar. Furnishes the following details. Purchased old car for 80 and sold for 1,20,000. Is there a margin? Yes. 1,20,000 minus 80, 40,000. So GST payable. Purchased old car for 75, sold for 65. No margin, negative. So no GST. Purchased old car for 90 but unable to sell. So whenever they are selling, they will pay GST. Purchased old car for 1 lakh and sold for 1,30,000. Difference 30,000. Already I gave you the similar example. Okay. Next. Example 29. Mr. X has purchased a voucher for 200 which was redeemable against purchase of wallet worth rupees 500 from shopping stop. And here the valuation should be redemption value. What is the redemption value? 500. But the voucher should not be taken at 200 rupees. Even though I am paying 200 rupees to buy the voucher, but what will be taken as the value of the voucher? Redeemable value. If you redeem the voucher, how much you will be getting? Worth of goods, 500. So 500 rupees should be taken as the value of voucher. Then value of services, pure agent. So already we discussed all these things. And look into illustration number 25. Following are the particulars relating to one of the machine sold by S Limited to A Limited in the month of February at a list price of 8,50,000. 8,50,000 exclusive of taxes and discount, means 8,50,000 will be taken as the value, transaction value. Further, the following additional amounts have been charged from ACD Limited. Municipal taxes chargeable on the machine 55,000. What is the treatment of municipal taxes? Respond. To be included or to be excluded? To be included. But in the given price it is not included because exclusive of taxes. So we need to add. Outward freight charges. Contract was to deliver the machine at A Limited's factory. FOR contract 75,000. What is the treatment? Contract was to deliver, means I need to deliver. So it is other expenses. With this, whether it is before delivery or after delivery, before delivery. Therefore, as per 15(2)(c), it is to be included. But in the given price, it is not included. How you know that it is not included? Exclusive of taxes and discount only. But this outward freight charges, where is it given? So because it is in addition. It is in addition. So following additional amounts. Is it clear? following additional amounts have charged, means this is additional in addition to 8,50,000. So therefore it is to be included in the given price, it is not included, so therefore we need to add. So 8,50,000 plus 55 plus 75. Then look into the additional information. Yes Limited normally gives interest-free credit period of 30 days for payment. After that, it charges interest at 1% per month or part thereof on the list price. A Limited paid for the supply 45 days, but Yes Limited waived off the interest. So interest is waived means collected or not collected or not collected. So what is the tax treatment of interest? When it will be taxable, on what basis it will be taxable? On receipt basis. Are they receiving it or not receiving it? Not receiving it. So due to that reason, interest will not be included in the value. Yes Limited received 50,000 as subsidy from a NGO on sale of such machine. This subsidy was not linked to the price. Subsidy not linked to the price. Whether we do any inclusion, exclusion, no. We ignore it for valuation. Ignore it. A Limited deducted discount of 15,000 at the time of final payment, which was not as per agreement. It is not allowed as deduction, because any discount, post supply discount is allowed as deduction provided the terms are agreed before or at the time of supply. Then Yes Limited collected 8,500 as TCS under the provisions of Income Tax Act. Remember, TCS under Income Tax Act is first of all not a tax. It's an interim levy. TCS is collected by the supplier from the recipient. For example, I am a car dealer. I am selling a car to you. Whenever I am selling a car to you, so I will be collecting 1% from you towards the TCS. This 1% whatever I am collecting from you is tax on your income or tax on your expenditure? Tax on your expenditure. But income tax is a tax on income. So due to that reason, this TCS is an interim levy, should not be treated as tax. So therefore, whether it should be included or not to be included? Not to be included. Generally, taxes, duties and cess by whatever name called other than GST will be included. But TCS is not considered as tax. Due to that reason, it should not be included. So this point I have given. So in this book, in this color book, I have given this. You can see this point. TCS not to be included in the value. Okay. So it is there in page number 90. I have given under section 15 subsection 2 of CGST Act, any taxes, cess and duties shall be included in the value of supply, but TCS is not includable in the value. Why TCS is not includable in the value? As it is an interim levy but not having character of tax. Due to that reason, it will not be included in the value. Is it clear? So that is the treatment of that. Then next, compute the value of taxable supply. So what and all we need to add? 8,50,000 plus 55 plus 75. That much only. All these things will not be included in value. So the value will be 9,80,000. It's a very good question and there is a chance of asking this question. Okay. Next, you can make note of this. Mark this as important. Question number 25, page 135. Then look into next question, illustration 26. Miss Sonam, a registered supplier in Mumbai, has provided the following details in respect of her supplies made intrastate for the month of March 2025. List price of the goods supplied intrastate without considering the following items. 3,30,000. So 3,30,000 will be taken as the value. Without considering the following items means what? These are additional. Packing expenses. Whether packing expenses to be included in the value? Yes. And in the given price it is not included, so therefore we need to add. Discount of 1% on list price was provided. Pre-supply discount or post-supply discount? Pre-supply discount. Then only it can be recorded in invoice. So 1% of 3,33,300. So 3,37,500 will be the value of taxable supply. Illustration 27. Y Limited, Mumbai, a registered supplier, is manufacturing chocolates and biscuits. It provides the following details of taxable interstate supply made by it for the month of October 2024. List price of the goods supplied interstate 12,40,000. So 12,40,000 will be taken as the value. Then items already adjusted. Items already adjusted means what? So subsidy, they have given subsidy. Subsidy already adjusted means what? Please tell me. Subsidy already adjusted means while arriving at this price, they have reduced the subsidy. Is it clear? So means the given price is after considering subsidy. So see the first subsidy. Subsidy from central government for supply of biscuits to government school. Is it to be included or to be excluded? To be excluded. Why it is to be excluded? Because it is subsidy from central government or state government directly linked to the price. It is to be excluded. In the given price, it is already excluded. So therefore, you need to ignore. Subsidy from trade association for supply of quality biscuits, to be included or to be excluded? To be included. But in the given price, it is excluded. So we need to add 50,000. So see the answer, 12 lakh 40 plus 50. Next. Items not adjusted means these are in additional. So what is that? Tax levied by municipal authority. What is your answer? As per provision, it is to be included. But in the given price, it is not included. How you know it is not included? Not adjusted. So therefore, we need to add 25,000. Packing charges, incidental, it is to be included as per provision. In the given price, it is not included. So therefore, we need to add 20,000. Late fee paid by recipient for delayed payment of invoice. I told you, interest, late fee for delay in receipt of consideration to be included. In the given price, it is not included. So therefore, we need to add. That's where the value will be 13 lakh 40,000. You mark this question also very, very important. 27. Illustration 27, page 136. These two questions are standard. They can ask these questions. Now, MCQs, time of supply of goods under GST Act. What will be taken as time of supply? Come on. Date of invoice, due date of invoice, whichever is. So option D. What is considered as date of receipt of payment? Date of entry in books or date of credit in bank account, whichever is earlier. So like this and all MCQs comes now, super, no? Understood? I don't think so they will ask this much easy questions. Then the date of receipt of consideration by the supplier determined based on date of receipt of consideration, the date on which it is entered in books or date on which it is credited in bank account, whichever is earlier. Same repetition. Then the time of supply of service in case of RCM. So services RCM, what should be taken? Date on which payment is made to supplier or 61st day from the date of invoice, whichever is earlier. Then the value of supply of goods and services shall be, what should be taken? Transaction value. Place of supply in case of installation of elevator. Location where the installation of elevator is made. Real estate agent in Delhi charges brokerage fee to company A located in Chandigarh for assistance in getting a commercial property in Kolkata. What is the place of supply? It is service in relation to immovable property. Property related services. What will be taken as a place of supply? Location of property. Where the property is located? Kolkata. So Kolkata will be taken as place of supply. Which of the following transaction is interstate supply of goods involving movement of goods? Location of supplier Bengaluru, location of recipient is Mumbai. Location of supplier Bengaluru and place of supply is Mumbai. That is interstate, correct? Interstate means what? Supplier and place of supply. Two different states, two different union territories and state and union territory. Why first one cannot be called as interstate? We don't know place of supply. Why third one cannot be called as interstate? Because both location of supplier and place of supply in same state. Supply of goods in the course of import. So import will always be deemed interstate. That's the reason why on import, what is the type of GST that we will pay? IGST. We discussed. So customs we discussed, on import we will pay IGST. So interstate supply. Supply of goods in the import will be interstate. 1 second. 1 second, let it turn on. Yes. So see this, zero rated supply. What are considered as zero rated supply? Two things are considered as zero rated supply: export of goods or services, supply of goods or services to SEZ. These two are considered as zero rated supplies. Why is it treated as zero rated supplies? Because the burden of GST will become zero. That's why it is considered as zero rated supply. Export of goods or services, supply of goods or service to SEZ, both A and B. But by SEZ is not zero rated supply. Okay, then. So these are the MCQs and questions that they have given. So we completed. So the target, yesterday I told you that we need to complete exemptions in customs. We have seen time of supply, value of supply and place of supply. All these things we have completed. Now these area, that is meaning of intrastate supply, meaning of interstate supply, zero rated supply, supply in territorial waters, all these concepts are there for you, and this is in basic concepts of GST. It can be tested in exam. So for that reason we will complete that discussion. So kindly take this book. If you don't have this book, look into the screen. Look into the screen. We need to understand here. If you have the book, look into page number 71. If you don't have the book, look into the screen. What is the meaning of India for the purpose of levy of GST? India is up to 200 nautical miles from the baseline. But in customs, what is the meaning of India? In customs, the meaning of India is up to 12 nautical miles. But in GST, the meaning of India is up to 200 nautical miles from the baseline. Okay, say this. So India, for the purpose of customs, is up to 12 nautical miles, but for the purpose of GST, India extends up to 200 nautical miles. So from the land up to 200 nautical miles is known as taxable territory, that is India. Beyond this 200 nautical miles, the rest of the country is known as high seas. The remaining beyond 200 nautical miles, that is known as high seas. So if the supplier is also in India and place of supply is also in India, either it will become intrastate or interstate. We need to determine that as per section 7 or section 8 of IGST Act. If supplier is in India but the place of supply is in the territorial waters. Again, it will become either intra or inter, that is determined as per section 9. But supplier in India, place of supply is beyond 12 nautical miles and up to 200 nautical miles, that is deemed interstate. Location of supplier in India, place of supply outside India is also deemed interstate and chargeable to IGST. Remember that there are 10 transactions which are regarded as deemed interstate supplies. In case of the deemed interstate supplies, always IGST will be applicable. So, right now we learn 2 deemed interstate supplies. What are they? Number 1, supplier in India, place of supply outside India, that is a deemed interstate. Then one more, supplier in India, place of supply is after 12 nautical miles and up to 200 nautical miles, that is also deemed interstate. Next, say this, section 8, meaning of intrastate supply. So, intrastate supply is defined under section 8. So, which says if location of supplier LOS, place of supply POS is in the same state or same union territory, so too much of power fluctuation is there. Can we continue from this tomorrow? Is it okay? Fine. But today's portion we completed. I thought of completing this also. So, kadavulke purukalapola. And fine, no issue. So, the agenda for tomorrow is that tomorrow we will be discussing this portion we will complete, and input tax credit, that is one important area. Okay. So, my request to you is that please go through ITZ chapter today. Okay. So, today I am leaving you early. So, go home, sit for 1 hour or 2 hours, just turn the pages, whatever you have. So, because tomorrow we are going to discuss input tax credit, because you cannot imagine the question paper without input tax credit. So, I will tell you what is that we are going to discuss in the next 2 classes. Tomorrow we will focus on input tax credit and some illustrations related to that. And day after tomorrow we will be focusing on exemptions and RCM. Okay. So, with that I am completing the batch. Got it? Done? Now, all the areas we cover here, customs we covered. Today we covered time of supply, place of supply, value of supply. Thereafter, 2 important areas that we have for intermediate is input tax credit and so exemptions and RCM. Thereafter, some small topics are there, returns, etc. and all. So, in the available time we will try to complete that also. Okay? Done. But mostly from that the questions will be very less. From these areas only more questions will come. Okay? And remaining topics, what I will do, I will create a playlist. In that already I took it for inter, those topics I will put. Okay? Done? I mean that small topics like payment process, then e-way bill, then even this returns, so then supply under GST, these topics and all already I took for inter, that I will put it for you. So, separate playlist I will create. So, these 4 days plus that extra topics, with that this portion of CMA intermediate will be sufficient. Okay? Thank you.